Hello CA Foundation students. In the 1 week before exams, most of us need only revision of the entire syllabus as much as possible. I have always been busy in CA inter and final accounts and law classes, but I thought okay, this time for the upcoming May, September and 2025 exams, I'm going to be very active when it comes to CA Foundation also. Now I'm presenting you guys with accounts marathon for these attempts, guys. This accounts marathon is for 20 hours, guys, only 20 hours, covering 60 plus marks of your syllabus. I'm not joking, guys. 60 plus marks of your syllabus, and this marathon is designed only from our ICA study material. Sir, what are the topics you are covering in the accounts marathon? Company accounts fully, bonus issue fully, redemption of preference shares, issue and redemption of preference shares, rights issue, dissolution of partnership, all the basic sum and even one advanced sum, GVM rule, Garner versus Murray rule also we are doing the study math sum, and piecemeal distribution that we have, that maximum loss method, that also we are covering. Dissolution of LLP, one sum is there. So basically in partnership, dissolution part we are fully covering. NPO we are covering in 4 hours, guys. NPO one question we are covering in 4 hours. So this video what you are watching, all these topics are there in this particular video. Our marathon also includes 2 more topics, 2 more scoring areas, inventory for about 3 hours and bills of exchange with proper logic in accommodation bill. Sir, where are these 2 videos? This last 2 alone, inventory and bills of exchange, it's a separate video. The link is there in description of this video. You can go watch that. Why I'm not putting everything in one video? One YouTube video is only 12 hours. So first 12 hours, I've put the first 9 topics that you can see over here. These 9 topics. And then the remaining 8 hours, this inventory and bills of exchange including accommodation bill, the link is in the description of this video. You can go check that out, guys. That's it. Go enjoy the accounts marathon. All the very best for your exams, guys. Okay, hi guys. We are going to discuss company accounts. Let me first write down the 6 units that you have in company accounts. Okay, the 6 units are: one is issue of, what is the first one, guys? Issue of shares forfeiture, reissue. Then you have issue of debentures, and we have the theory, introduction to company accounts. These 3 were already there in foundation. Okay. The next 3 additions, if you see, what are the 3 new additions? They have given bonus and rights issue, redemption of preference shares, redemption of debentures. These were 3 chapters, separate chapters in CA Inter, removed from Inter and added to foundation. We are going to discuss all of this. For those who are watching recording, these 3 topics, I am going to do this now. We will go one by one. You will see the flow. These 3 foundation topics, recording is already available. You can just check out for the description of this video or find it somewhere. The source is there for you. You can see this. So these 3 is foundation. Already it's covered. Recording is there. You can see that. I am only mainly focusing on the new additions over here. Is that fine, guys? Hello. This recording is there. You can go watch the recording. Sweta also confirmed that I have taken. Okay, I will somehow find the recording. I will ask the team. Somehow I will search and find it. Okay. Now I am going to take these 3. Now, sir, can I learn these 3 topics without learning these 3? Yes. Okay. To an extent you can learn. So we will first now target on bonus and rights issue. I will focus on that small easy area, 4 marks if it comes in exam. Okay. So these sessions will be for these 3 topics, and these 3 you get the recording. Giving context for those who are watching recording in whichever attempt you are watching, June, September, Jan, whatever, everything will be available for you. This is for you guys. Recording, I am talking to future people. Okay, again that time I can't take. Okay, Fine. Now, bonus and rights issue. We are going to target bonus and rights issue. These two are also separate concepts, no relationship with each other. Separate concepts in the same chapter, that's it. Okay. Section 63 of the Companies Act, Section 62 of the Companies Act. Fairly easy, pretty easy in terms of application and doing sums. We need to first understand why company is doing a bonus issue. Let me do bonus first and then I will go to rights. Okay. What is bonus issue? Okay. Let's take a small balance sheet of Infosys. They have share capital 100, reserves and surplus 200, creditors 100, balance sheet total is 400, fixed assets 300, current assets 100. Are you following, guys? Now this company wants to make a bonus issue. Sorry, they are making a new issue. They are making new issue of 50 rupees shares. What is the entry for new issue? Bank account debit to equity share capital 50. No application, everything fully in capital, guys. Direct entry. Okay, that's what happens in real life. So I will add here 50, add here 50. My balance sheet total now becomes 450 on both sides. Correct? So whenever I make a new issue, asset side cash will go up, liability side share capital will go up. What is bonus issue? Bonus issue is basically, first I will tell you what it is, then I will tell you why we are doing it. Bonus issue is basically shares given for free to the existing shareholders. So you will again get shares to equity share capital. How much? 50. But what I will debit? I will not debit bank. I will debit reserves and surplus account, debit 50. So how my accounting will now look? How accounting will now look? Follow carefully. Same balance sheet. Balance sheet total was 400. Now reserves is reducing by how much? 50. So it becomes 150. Capital is increasing by 50. It becomes 150. Balance sheet total remains at 400. So in this, asset side will remain the same. Liability side also total will remain the same. It is only a reclassification within the shareholders' funds. Reserves are converted to share capital. Why, sir, I will do that? Why am I giving that? This is the accounting. So everybody understood the journal. My entry will be reserves and surplus account debit to equity share capital. I will come to the detailed entries in 5 minutes. Okay. This is the effective entry. Yes. Correct. I'm coming to the detailed entries in some time. Sir, which reserve can I debit? There is some guidance. I will give you proper notes for that. I will give you notes. Understood what is bonus issue? Why? Why will I do a bonus issue? What's the point of doing bonus issue? To increase share capital, I can do fresh issue, no. To give incentive to the shareholders. Let me give an example. Reserves belongs to whom? Company. Okay. I'll give you a better example. I'll give you a non-related example and then come to related example. Okay. Let's say father is there who has 10,000 crores of property. Son has 0 crores. 0 he has property. Nothing. He didn't study anything. He is just roaming on the road. So he has 0 with him. Okay. But eventually, how much will son get? 10,000 crores. Someday, either upon the death of the father he will get, or whenever the father is willing, he will transfer the asset to the son. But even if the asset is not transferred, this money belongs to whom? Son. Son will enjoy it. How he will enjoy it? Okay, he will go out for trips. Father will give credit card, take and go. Now imagine father is having 10,000 crores. He puts son in government school, not 1 rupee for you. Okay, I will put you, you have earned by yourself. What will happen to son? He'll get angry. He'll get angry or no? What he'll do after that? What he'll do? He'll keep waiting. How I will get the money? He will keep waiting for the thing. He will get angry against the father. Correct? He might not show it openly, but he will have it inside him. But he will show in other places. Are you following, guys? Now, get back to this logic in the company. Okay. This share capital is my money. The money I have invested. The money earned by the company is reserves and surplus. Belongs to whom? Shareholders. Someday it should be given to shareholders. How it will be given to shareholders? By giving dividend, by giving cash. But imagine a company has, in our previous example, the share capital is 100. Okay. The shareholder is saying, I gave you 100 to start the company. With the 100 I gave you, you earned 200. Give it to me. What I am doing, this money I invested in fixed assets. I can't give it to you, because if I have to give it to you, I have to sell my assets. If I have to give you cash, I don't have cash to give you. Father has everything in property. I can't give you cash. So, shareholder is now getting angry. Hey, my profit is not coming to me. It is being reinvested back in the business, in assets, buying this. Few years, shareholder will be fine. But as the reserves keep increasing, you will have the urge, hey, when I will get that money. But company can't give cash because I don't have cash. I have invested in long-term assets. So, to satisfy the shareholder, okay, I will convert the reserves to share capital. The legal ownership comes to you. It's like father actually transferring the 10,000 crores in son's name. Anyway, money is yours only. This money is yours. But you are not able to wait. Okay, get the transfer to you. Are you following the logic, guys? Clear? When I have a lot of accumulated profits, I can't distribute in the form of dividend. I will give bonus shares. Are you following? Clear? This is one of the many reasons. There are many more reasons. One more reason is to regulate the market price. Meaning, I have 100 as my share capital. If 100 is my share capital, let's say it's 10 shares into 10. Now, if I give bonus and make it 200, if it becomes 20 shares into 10. Earlier there were 10 shares. Now there are 20 shares. I am increasing the number of shares in the market so that I am trying to increase the supply of shares available in the market. So price per share will come down. There are so many reasons. How the price per share will come down? Market price of a share is nothing but value of company divided by number of shares. Okay. Imagine the value of company is 100, number of shares is 10. What is the market price per share? 10 rupees. Now, after giving bonus, will the company value change? No, because balance sheet total remains the same. So this remains 100, but number of shares now became 20, 10 plus 10. So now market price will become 5. So by issuing bonus shares, I will reduce the market price per share. Purila sir, how will market price come down? By increasing shares, basic economics, you are increasing supply, so price will fall. This and all is why bonus issue. When you will be tested in this, when you go to articleship, sir, for foundation, I don't want to know all of this, sir. I am giving you concept. For exam, I want to know what is relevant. Okay, fine. You know what is bonus issue now. You know why bonus issue. But exam, he will ask journal entries. That is what I am going to teach you perfectly. Okay. So, the first journal entry will be reserves and surplus account debit. How you do share application, I will write to bonus to shareholders account. Second journal will be bonus to shareholders account debit to equity share capital. Are you guys following? Understanding? Bonus, cancel. What is the effective entry? Reserves and surplus to equity share capital. Only 2 entries for bonus issue. How many entries? 2 entries. Below this you write a note. Which reserve can I use? Can I use all reserves? Can I use revaluation reserve? Can I use capital reserve? No. Section 63 of the Companies Act says you can use only a few specific reserves. What are those reserves? Okay. First, you can use only CRR. Second, securities premium. Third, free reserves like P&L, general reserve. The reserves that you can use is only CRR, P&L, SP and free reserve. What is it? CRR, securities premium and free reserves. Are you following? Not every reserve. Sir, what is CRR? Capital redemption reserve. That concept itself is a 30 minutes explanation concept, not relevant at foundation, little heavy. If you are still interested, just search in YouTube, what is capital redemption reserve? You will find my video, go see that. That is the most watched. I don't know how it became most watched. That became the most watched video. So you will go find that. It has some 15,000 views or something. I don't know how it came itself. Some old video in my house I recorded. It started trending on YouTube for this topic, whatever. So you go watch that. Okay. Not relevant at foundation. It's a beautiful concept for inter. We will deal all of that in inter. Exam ko what I should remember, sir? First entry, reserves and surplus to bonus to shareholders. Next entry is bonus to shareholders to equity share capital. In this, you should not write reserves and surplus. I should write the respective reserve. Which reserve I can write? Either CRR or SP or free reserves. In the same order. First use CRR. If CRR is not available, then use SP. If SP is not available, then use free reserves. In the same order of ranking. You can't use randomly how you want. Okay. Are you following, guys? With this, let us straight away do the sums for bonus issue. Sorry. I think we have only 4 illustrations in this chapter. Yeah, we have only 1 or. Okay. And write one more note I will give you. Okay. One more note. Again, it's a legal provision. I'll explain in interclass. Not relevant for foundation. Memorize enough. Above securities premium can be used for a listed company only if the same is collected in cash. Only if the same is collected in cash. Only if the same is collected in cash. Yeah. Following, guys. That means what? Securities premium can be collected for a listed, can be used for a listed company only if it's collected in cash. Let's look at the entries. Only 2 journal entries, guys. Illustration 1. This and all comes in exams. Somewhere you should pray to God. Thank you. This and all easy chapter. Bonus, rights is one easy chapter. If it comes, you are just lucky. Following items appear in the trial balance of Bharat Limited as of 31st of March. What are those items, sir? 40,000 equity shares of 10 each. How much? 4 lakhs. Then they gave CRR, SP, collected in cash, listed company. I can use. Are you following, guys? Then general reserve 1 lakh 5, P&L 50,000. Perfect. The company decided to issue equity shares bonus at the rate of 1 share for every 4 shares held. And it is decided there should be minimum reduction in free reserves. Even if this line is not there, first use CRR, then use SP, then only free reserves. How many shares they have? 40,000. They are giving how many bonus? 1 for every 4 shares. So I will do 40,000 into 1 by 4. How much you are getting? So 10,000 shares. Each share face value how much? 10. So bonus is how much? 1 lakh. I am going to give bonus of 1 lakh. From which reserve? First I will use TRR. I will use 55,000 first. Then you will use SP 30,000. Then only you can use free reserves. So what is the entry? Look at the entry, guys. Just like how I just told you now. CRR account debit 55,000. SP account debit 30. Converting reserves to capital. Reserves are converted to capital. Third reserve, which reserve? General reserve, balancing 15,000. 2 bonus to shareholders, how much? 1 lakh. Next entry, bonus to shareholders to equity share capital, 1 lakh. That's it. Same 2 entries what we did. Are you following, guys? Instead of general reserve, you can also use P&L. That is not an issue. But first I told you is what? CRR. Where you will lose marks, so you can't write SP first here. In journal entry itself, the first debit should be CRR. Because law says use CRR first. Are you following, guys? Easy, huh? Second sum. Okay. Same way, 4 journals. And then this third sum. Yeah, third is also bonus only. And then I think fourth is rights, correct? Huh? No, fourth also is bonus. Sorry? Oh, separately is it? I think there's only 1 or 2 illustrations. Only 1 illustration. Yeah, okay. No, not an issue. Let's do bonus. Let's try to finish all the sums. Pretty easy, guys. Illustration 1 is easy. Let's go to the next one. Okay. Let's do illustration. Yeah, we can do illustration number 3. I'm just taking it in random. Following notes pertain to balance sheet of Solid Limited. Look at the same values. Authorized share capital is 11 lakhs. What do you mean by authorized share capital? Total share capital that company has. What do you mean by issued and subscribed? That is the one which is going to come in balance sheet. Preference shares 80,000, equity shares 7 lakh 20. I am only bothered about equity shares. Bonus means. Then reserves. Look at that. General reserve, revaluation, SP collected in cash, P&L. What all reserves I can use for bonus? General reserve, SP, P&L. Correct? I can use CRR, but is this question having CRR? So I will not use it. Are you following, guys? Clear? Okay. Next, secured loan they have given details. Fine. Come down. As of 1st April 2022, company has made a final call of rupees 2 on the 90,000 shares. Look at the question. Company has 90,000 shares of 10 each, 8 paid up. So I am making final call of 2. That you already know in share capital chapter. So I will do 90,000 into 2, final call. After money was received on 20th April, thereafter company decided to capitalize its reserves. That means by way of bonus at the rate of 1 share for every 4 held. So how 1 share for every 4? How many shares I have? So my bonus will be 90,000 into 1 by 4. How much you are getting? 22,500. Are you following, guys? So I have to pass what all entries? You have to pass entry for call and you have to pass entry for bonus issue. So what is the entry for call? Share final call to equity share capital, bank account debit to share final call. What is the amount here? 90,000 into 2. So all the 4 will be 1,80,000. But I know it's going to be lazy, but you have to write share final call to share capital 1,80,000, then bank account to share final call 1,80,000 along with the date, because date of call avanga kuduthiranga question la 1st April is date. I received on 20th of April, date of call and receipt. Write the date, write the narration. Clear, guys? Then after this, bonus issue, we already decided bonus issue is 22,500 shares into 10 per share. So how much? 2,25,000 fixed reserve to take first. Securities premium. Next, my wish, either general reserve or P&L. That is my wish. Between general reserve P&L, there is no restriction. Look at the entry. Securities premium account debit 20,000. General reserve account debit 1,60,000. Balance whatever is left is P&L 45 to 2,25,000 to bonus to shareholders. Bonus to shareholders to equity share capital 2,25,000. Are you following, guys? How many of you studying this chapter first time? Understanding? Easier. So what is new is nothing but just these two entries. That only you are seeing in every sum. Reserves to bonus to shareholders to equity share capital. Easier. Following, guys? Clear? Illustration 3, this is same way. Okay. One important thing we have to check in every sum. Thank God I remembered. Now, what is the share capital after bonus issue? It was 90,000 before, correct? Plus how much now? 22,500. So total 1,12,500 into 10 is how much? 11,12,000. No. 1,12,500 into 10. 11,25,000. Let me repeat very, very important part which most of us miss. Even I just missed. I saw in solution. I am clarifying. Number of shares after bonus issue. Before it was 90,000. I added how much? 22,500. So total became 1,12,500 into 10. My revised share capital is 11,25,000. But in question, what is the authorized share capital of equity? No, equity, not preference. 10 lakhs. That means you authorized is the maximum share capital. It has crossed authorized. That means I can do bonus issue. No. Are you following, guys? So, what to do in this exam? So, that time, how to increase authorized share capital? Section 61 of Companies Act says you have to pass special resolution, alter the MOA, increase the authorized share capital. That only is given as a note here. What you should do? You do the whole sum as if bonus is given. You have to give a note. It has to be ensured that authorized share capital after bonus issue should not be less than the issued share capital. For us here we have less in all practical problems. The authorized share capital may either be increased by the amount of bonus issue or by additional shares by excess by passing necessary resolutions. In this question, authorized was 10 lakhs, actual became 11,25,000. So we have to increase the authorized share capital by altering the MOA. That note you have to give 1 mark. Are you following, guys? Otherwise, what is the purpose of that fellow giving this authorized in question? Waste of space in lakhs of question papers. Correct? Following, guys? Clear? Important note to do. We generally tend to miss this. Able to follow, guys? I agree, yes, doubt. Okay. Illustration number 4. I am not going to do it, guys. Look at 4. Illustration 3. Different numbers. 1 second. Illustration 4 is same as illustration 3. Look at this. Authorized he gave. Issued he gave. He gave the reserves. Last sum he didn't give CRR. This sum he gave CRR SP. Look at the adjustment. Made a final call of 2. After that they made bonus of 1:4. Same 4 journal entries. Final call, receipt of money, transfer of reserves, bonus. What to say? Why SP is? No, CRR only should be taken first. You have to take always CRR first, then SP. Here it is just one small error. You take your CRR first, no doubt in that. 100% I can tell you, take that for the exam. CRR first, then SP. Clear? Answer will not change, only order will change now. Because anyway, balance figure is P&L. If at all answer is changing, let it change. CRR first. Okay. Following, guys. Anybody has a doubt so far in this? Easy a chapter. Happy about the addition. That's why removed and enter. Okay. Last question, illustration 2, little different. So we will do with this bonus is done. Whatever study math sums are done, that's enough. Practice practical problems behind. More than enough for bonus issue. No concept beyond this. It's an easy chapter. Inter also this only sums. Never you should do anything beyond this. Where he will trick us. He will tell it's a, what to say, securities premium not collected in cash, listed company. You can't use. Or he will tell, I am not a listed company, but SP is collected in, not in cash. No, see, if it is a listed company, SP should be collected in. If it is not listed, SP can be anything. It can be cash, can be kind, it's okay. So not listed company, no restriction. You can use SP, whatever it is. Only for listed company, it should be in cash. Sir, what if question says it's a listed company, but SP is silent. They have not given collected in cash. Take an assumption. Take an assumption and give a note. Yes, doubt. Cash includes bank also. Yes, cash includes bank. Somebody is asking a question. Sir, can we expect a question with all issue, forfeiture, reissue and bonus? Maybe. It's just mix of entries. Maybe they might ask. We have to wait and see because this is the first attempt for us. We have to wait and see. Yes. What they will mix, I will tell you. Okay. That we will do in the ending. Bonus, redemption of preference shares, redemption of debentures, combined sum is possible. It is there also. That I will do it. That combined sum is there in redemption of debentures chapter. Redemption of debentures is one scary chapter, guys. It was one of the difficult chapters in Inter itself. Inter itself, people will get scared. So when I get there, I will take it for you. We will discuss over there. And then they can mix all these three. So we have mixed sums. I will do it when I go to redemption of debentures. Bonus, dead easy. Rights, easy. Preference shares is medium. Redemption of debentures is a little bit tricky area. We will spend 2.5 hours and try to solve there are only 4 sums in book. We will learn those 4 sums. Let's do the last sum and close bonus in this video. Past journal entries. See, company's account only 6 units. How many marks for exam? Weightage 20 to 25 marks. 20 to 25 marks, minimum 20 marks, guys. I can go up to 30, but median 25 marks. Only 6 units. So it's easy to score. Okay. The only difficult area is redemption of debentures. Rest all 5 are dead easy. Okay. A limited company with subscribed capital of 5 lakh consisting of 50,000 equity shares of 10 each, called up as 7.5. That means what is the last call? 2.5 is last call. A bonus issue of 1,25,000 declared out of general reserve to making the shares fully paid up. Carefully follow this question. Slight change, but it's the same. Let me write the values. Existing, what is the breakup of 5 lakhs? 50,000 into 10. But is this fully paid up? No, this is not fully paid up. This is only 50,000 into 7.5. How much are you getting? 3 lakh 75,000. So to make it fully paid up, how much should he pay? 2.5. So 50,000 into 2.5 is how much? 1,25,000 is the final call, but I am not doing final call. What is the entry for final call? Share final call in this sum, account debit 1,25,000 to equity share capital, same 1,25,000. What is the next entry? Bank account debit to share final call, same amount, correct? Only changes, I am not collecting money. Instead of bank, I will debit. Final call is given for free. You don't have to pay the final call, but I will make it fully paid up. Are you following, guys? So you are not giving final call, but I am converting partly paid up shares into fully paid up shares in the manner of bonus issue. So other entry, instead of bank, I will debit the respective reserves. Are you following, guys? Now look at the two entries. General reserve to bonus to shareholders. Share final, no, they wrote reverse, guys. This will be the first entry. Share final call to equity share capital 1,25,000. Next entry will be what? Reserves to bonus to shareholders. Are you following? That's what we passed, correct? Are you following? Look at that. 1 second. No, it's not an error. I'll just explain. What he has done, same entry, he has done detailed by using bonus. So what they are doing, normal entry for bonus is what? Reserves and surplus account debit to bonus to shareholders account. This I will write for 1,25,000. Next, the share final call entry. Share final call account debit to equity share capital. How much? 1,25,000. Are you following? I'll tell you what we did. Last entry will be bonus to shareholders account debit to share final call. What I showed you here, and this is just detailing of entry. When I taught you the concept, what we did, share final call to equity share capital, and I did reserves and surplus account debit to share final call, correct? This is what I wrote here, guys. Share final call to equity share capital, reserves to share final call. With this, are you understanding the logic? With this entry, I understand the logic of. So this entry and this entry is knocked off. Same. Share final call to equity share capital, share final call to equity share capital. Now look at this entry. Strike off this bonus and this bonus. What do you get? Reserves and surplus to share final call. Are you getting it? He is doing the same entry, routing it through bonus to shareholders. So both entries are the same. ICA follows this. We will also follow 3 entry model. Are you following? Clear, guys? Understood the 3 entries for 1,25,000. To conclude this chapter, let us do. Second, they are in different method. Same thing, what method we did. Okay. Now, can you try the second part, because this chapter everything I did, nothing you guys did. Can you try this last and then we will wind up bonus issue. I will brief the question. A Limited having fully paid up shares of 50 lakhs consisting of equity shares of 10 each. Fully paid up shares already. Having general reserve of 9 lakhs, resolved to capitalize 5 lakhs out of general reserve by issuing 50,000 shares of 10 each. Each shareholder will get 1 share for every 10 shares held. Can you pass the journal entries for this? How many journal entries? 2 or 3? If it's fully paid up shares, 2 entries. If it's partly paid up shares where bonus is given, we are passing 3 entries. Okay. Dilip Babu following up. Sure. Done, guys. 2 entries, pass it. Finish. Cross check if these are the 2 entries. General reserve to bonus to shareholders, bonus to shareholders to equity share capital. Are you getting it correctly? Done, guys. Perfect. Okay. So with this, we will wind up bonus issue. Thank you. That's it, bonus issue for exams. If you learn this, more than enough. Hi guys, now we're going to discuss redemption of preference shares, another new addition in CA Foundation, new syllabus for accounts. Fairly easy topic and scoring topic for us in exam. What is the entry for issue of equity shares? Bank account debit to equity share capital, correct, but to equity share capital. What is the entry for issue of preference shares? Bank account debit to preference share capital, correct. This is the entry for issue. Section 55 of the Companies Act talks about issue and redemption of preference shares. Now, Act says preference shares have to be repaid within 20 years, meaning equity shares once I issue, I can keep it for lifelong. திருப்பி கொடுக்கணும்னு அவசியமே கிடையாது. If I want, I can repay. See, debentures now I have to repay. Loan I have to repay. Equity shares should I repay? No need. But preference shares I have to repay. Are you understanding, guys? Preference shares should be repaid within 20 years. So if I issued preference shares in the year 2000, by 2020 I should have repaid. Are you understanding? So in this chapter, we are not passing entry for issue. Are you getting it, guys? Issue is already passed in different chapter at different time. 20 years back issue பண்ணிருக்காங்க. அதை நான் repay பண்றேன். Okay. So if this was the entry for issue, what is the entry for repayment? Entry, can you guess? Excellent. Preference share capital account debit to bank. You're absolutely right. Spot on. So redemption of preference shares, we have only 4 entries, guys. How bonus I taught you 2 entries. Rights how many entries? Binayak? Rights no entry. Rights where I taught you entry. No entry. It's only computing theoretical X-rate price. Preference shares, there are 4 entries, guys. Okay. Now look at this carefully. I gave you these entries without the amount. Now let me give it with amount. bank account to preference share capital. Let's say I'm issuing preference shares at par. Bank account debit 100 to preference shares 100. When I repay, will I repay 100? I can repay 100 or I can repay more. That means issue and redemption. Issue can happen at par. Issue can happen at premium. Discount is not allowed. Correct? Issue of shares at discount is not allowed. Redemption also can happen at par, premium, or even discount. Are you understanding, guys? That means what entry you passed in issue is of no concern now. Because that we have in a issue separate chapter. While redeeming, I can repay ஒரு 100 ரூபா share, I can repay by giving 100, or I can repay by giving 120, or I can repay only 90. I am bothered only about passing entries for this part now. Are you understanding, guys? Clear? Following? So, what is the first entry? Now, let's take a scenario. Sir, 100 rupees share, sir. We are repaying it 120. I am repaying it how much, guys? 120. So, entry will be preference share capital account debit. First entry, guys. You can write template. In the chapter, there entry now. For the 4 entries, we have to compute amount. That's it. So, first entry is preference share capital account debit to bank. You're right. But today I will announce the payment of preference shares. But will I repay today itself? I might pay after 1 week. So, first I have to create a liability, then I will do payment. Correct? So, I will do preference share capital account debit to preference shareholders account. Are you following? Are you understanding, guys? Next entry will be, entry number 2 will be, for now let's assume, I told you 100 rupees shares you are repaying at 120. For the time being, let us assume 100 rupees shares you are repaying 100. Easy sum, will not come in exam. So, preference share capital account debit 100 to preference shareholders 100. My second entry will be preference shareholders account debit 100 to bank 100. That's it. 2 out of 4 entries done. Are you understanding, guys? So, what is the first entry? Preference share capital to preference shareholders. Second entry, preference shareholders to bank. Are you understanding this part, guys? Let me slowly introduce the next adjustment. Sir, what instead of 100, if you are repaying 120, what to do? That means you are a preference shareholder. How much should I pay you? 120. So, instead of 100 here, I will write 120. Here also, instead of 100, I will write 120. Because my liability towards the preference shareholders is 120. Correct? But share capital in books is still 100. What to do with the difference 20? Are you following, guys? Are you understanding? Are you understanding there's a difference 20? That means I have to debit something else. For this 20, I have to debit something else. So, my entry will be, this extra 20 is a loss for me or income for me. Where I have to pay you 100, I am repaying 120. So, for shareholder, it's a gain. But I am doing accounting in company books. So, for company, it's a loss. What is it? You just now told me, premium. So, I will create one dummy temporary account called premium on redemption of preference shares account. Are you following, guys? So, how is the first entry going to look like? Premium on redemption of preference shares account debit 20. Preference share capital account debit 100. To preference shareholders, the liability to pay you is 120. Second entry is preference shareholders to bank 120. Are you following these 2 entries? Shweta, you have a doubt? Correct. This one is if you are repaying it 120. What if you are repaying only 90? Instead of this, it will come on the other side. So, let me write the discount entry. So, first if it's discount, preference share capital account debit is 100 only. Share capital is 100. But to preference shareholders account, I am going to pay you only 90. So I have a gain. So 2 discount on redemption 10. Next entry for payment will be preference shareholders account debit 90 to bank 90. Understood? Par means it's easy and the difference itself will not come, same as 100. But sums in the book, discount they have not asked once also. You can copy the template. But exam what they ask? Premium. 99 out of 100 exam sums will be premium. Maybe if examiner suddenly wants to surprise you, he will give discount. We don't know which attempt will be surprise. Only after the attempt we will know. Okay. Following guys, understanding Rishi. Which chapter are we in? Chapter name. Redemption of preference shares. Perfect. Redemption means what? Repayment. But you will use the term redemption. Okay. Following guys. So first 2 entries done, sir. I understood. It's easy. What is that next 2 entries? Okay. Now very simple. Keep this aside for a moment. Normally when you pay rent, what is the entry? 10 rupees rent. Rent account debit 10 to bank how much? After this what you will do in the year ending? Year ending this rent will be transferred where? Excellent. P&L account debit to rent 10. In my P&L debit side, I will write rent as 10. Correct? That means every expense should be transferred to my P&L account or I should transfer to my reserves. Correct? So, this debit, I am going back to the first base, this one, this debit, correct? I should transfer to my P&L or in other words, I should transfer to my reserves. That is my third entry. Transfer of premium on redemption to reserves. So, let me write the third entry will be reserves and surplus account debit to premium on redemption of preference shares. How much in our example it was? 20. This is the third entry. Sir, 3 out of 4 entries done, sir. Super. That's it. Are you getting the third entry, guys? Third entry. Hello. But which reserve you can debit? Can I debit any reserve of my choice? No. Write down. Note. Only free reserves can be debited. Only free reserves can be debited. Are you following, guys? Which reserve? Free reserves. Sir, can I debit securities premium? For that, the answer is not a no. It's yes or no, depending upon this. I will tell you what to do for exam also. If company is following section 133 of Companies Act, which is nothing but accounting standards, then no, cannot use. If company is not following, so here it is, following accounting standards, not following accounting standards, then yes, can use. Are you following, guys? I'll explain the logic. But for exam, where question is silent, question is, you cannot use. You should not use. Even in our study mat, they will not use. Because all the companies will follow what? Accounting standards. Why, sir, this logic? You will get the answer for this mainly in detail only in CA Inter in a topic called Accounting Standard 26. But if you are still curious, sir, I want to know, sir, why I can't use securities premium? Who gave me premium? Which shareholder? Generally, which shareholder will give? Equity shareholder. Equity shareholder kurta premium, how can I use for preference shareholder? I will again repeat. The premium given to me is given by equity shareholder. How can I use that premium for premium redemption of preference shareholders? Are you following, guys? See, when you pass the entry for issue of shares, bank account debit 120, 2 equity share capital 100, 2 securities premium 20 of. This 20 was given to me by equity shareholders. How can you use this for redemption of preference shares? So we will not allow. That's what AS 26 says. AS 26 gives you in brief. Okay. Are you following, guys? In intangible assets, you will see about premium, little bit about intangible items. So in more than AS 26, section 52 actually, guys. Sorry, just correct it. Section 52, securities premium section tells this. Are you following? But if you go and ask anybody who's studying foundation, inter, final, qualified CA also, he will tell same thing. Securities premium following cannot use. Securities premium not following 133 you can use. Ask them why. They will tell, I don't know. Standard is saying, your institute is saying, that's it. Logic is very simple. Are you following, guys? Clear? Sir, then next the higher grade will ask, sir, what if that premium was given by preference shareholders? If question gives that data, we can use. Otherwise, if you are silent, you should not use. Sir, all this okay, sir. I understood logic. For exam, what is the third entry? Debit reserves and transfer it to. That premium should be transferred to reserves. Reserves and surplus to premium or redemption of preference shares. Which reserve I can use? Only free reserves. Free reserves means what? General reserve or P&L account. Correct? General reserve or P&L account. That's it. Any other reserve can I use? No. Revaluation reserve? No. Capital reserve? No. No reserve should be used. Securities premium also, if question is silent in exam, don't use. That's it. Okay. Following, guys. Entry 3 over. Now we have to go to entry number 4. Entry number 4, you write it down so that your notebook is complete. But I will explain only after we finish one sum, because that's it. I need to explain the concept. Okay. For now, you write down entry 4 as free reserves account debit. You will not understand, guys. To CRR account. CRR stands for Capital Redemption Reserve. CRR stands for Capital Redemption Reserve. I will explain in some time. Capital Redemption Reserve. Done, guys. Explanation for this will take 20 to 30 minutes. If I go in detail, I will do it today, don't worry. But after we do a sum, take your material, redemption of preference shares. We will solve 1 or 2 sums first. Redemption of preference shares. Illustration. Yeah, illustration 1. How many sums are there totally? 10 sums. Quickly we will do all sums. I will not be solving all sums. I will read the question, go through the solution, we will jump to next one. Okay. Look at question 1, fairly easy. Exam don't expect, but let's quickly do it. Hinduja company had 5,008% redeemable preference shares of 100 each. That means what is the value of number of shares? 5,000 into 100, which is 5 lakhs. Fully paid up. The company decided to redeem these preference shares at par by issue of sufficient number of 10%, rupees 10, fully paid up shares at par. You are required to pass necessary journal entries. Okay. The company is, what is saying? The company decided to redeem these preference shares at par. So 5 lakhs I am repaying how much? 5 lakhs by the issue of sufficient number of equity shares of 10 each at par. That means what they are saying, look at this. In my balance sheet currently I have preference share capital 5 lakhs of. This I am cancelling and replacing with what? Equity share capital of 5 lakhs. That means I am issuing equity shares and repaying preference shares. Understood? So look at the entry, guys. Look at the first entry in the book. Don't solve this. Let's not waste time in class. We have to finish quickly. Look at the solution. Let's see if we understand. Whichever sum I tell you to solve, we will solve. Okay. So far, everybody understood. Look at this. First entry. I'm issuing equity shares. You know the entry for issuing equity shares. Bank account debit to equity share capital. Clear? How much? 5 lakhs. Now I'm repaying preference shares. Preference shares repayment. How many entries I told you? 4 entries. Fourth entry I'm yet to teach you. So it will not come always. It will come only when there's a specific case. I will tell you when that comes. Leave the fourth entry. Third entry will come only if there is premium. Premium is not there. This sum is par. So I will have only entry number 1 and 2. So entry 1 and 2. Look at this. 8% redeemable preference shares. 5 lakhs to preference shareholders. Preference shareholders to bank. 5 lakhs. Sum over. Quickly 15 seconds. Go through and see if you're understanding this. Understood? Easy, guys. You tell me, if you are the examiner, will you ask this in exam? No. So we will quickly go to illustration 2. Illustration 2 also is almost similar. They had 10,000, 10% redeemable preference shares of 100 each. That means it's how many lakhs, guys? 10 lakhs. The company decided to redeem these preference shares at par. Again par. They are redeeming at par by issue of sufficient number of equity shares of 10 each at 2 rupees premium. In the sum cum previous sum, what is the difference? Previous sum equity shares are issued at par. Here equity shares are issued at premium. So how many entries will come here? 1 entry for issuing equity shares. 2 entries for repayment of preference shares. Totally 3 entries. Look at this. Bank account debit 12 lakhs to equity share capital. 10 lakhs to securities premium. 2 lakhs. Repayment of preference shares is at par. So preference shareholders 10 lakhs. Preference shareholders to bank 10 lakhs. Quickly go through the 3 entries. See if you're understanding. Rishi, understanding? If you're setting paper, will you keep this question? Yes, no. That. Sorry? See, that third entry, reserves and surplus, will come only if you are repaying at premium. Here I am repaying at par. So why will that entry come? It will not come. Are you following, guys? This entry is not even this chapter, first of all, first entry. It's issue of shares chapter, issue of shares at premium. Yes, doubt? No, they are not giving, okay, let me clarify. They are not giving equity shares to preference shareholders. No. I am separately issuing equity shares, collecting that money and giving that money to preference shareholders. For example, A, B, C, D. A and B could be my existing preference shareholders. I have to repay them 5 lakhs or 10 lakhs, illustration 1 and 2. I don't have that money. So newly for C and D I am issuing equity shares. They gave me how much? 5 lakhs or 10 lakhs. That money is given now to A and B. Are you understanding? So in my balance sheet, earlier I had preference share capital, that will go away, it will become 0, replaced by equity share capital 5 lakhs. Are you getting it? If your question is, sir, am I giving equity shares to preference shares? If I am giving like that, my entry will change. That time my entry will be preference share capital account debit 5 or 10 whatever to equity share capital. Are you following? This is not happening here. I am separately issuing equity shares, collecting that money and giving to preference shareholders. Following? Yes, doubt? Clear? Okay. How do I know that? Because they are clearly saying by issuing sufficient number of equity shares of 10 at a premium. They are issuing shares. They are not converting. Okay. Illustration number 3. 3 also is one dummy sum, guys. Quickly we will do. G India has 9,000 10% redeemable preference shares of 10 each fully paid up. The company decided to redeem the preference shares at par by issuing sufficient number of equity shares of 9 each. Okay. So what is the number of preference shares? 9,000 into 10. How much, guys? 90,000. So I have to repay preference shares how much? 90,000. So if I have to repay preference shares 90,000, how much money I need? 90,000. How I will get this money? I will ask equity shareholders. Look at the same 3 entries. Bank account debit to equity share capital 90,000. Then preference shares redeemed. Same 2 entries. Quickly, I'll give you 10 seconds. Go through the solution. See if you're understanding in the class itself. We will finish this full chapter within the next 45 minutes. All sums. Yes. No. I am not. I am taking money from equity shareholders to give to preference shareholders. No. This is the capital is different. No, premium is different. See, that premium is account write-off. Here I don't have money, so I'm issuing equity shares. That money is given to preference shareholders. Okay, come down. Question 4. We will come back to it in some time. Come to question number. I'll tell you which question to do. Yeah, question number 6, guys. 6, 5, 4, they are all exam questions. 4, 5, 6, they are all exam questions. Look at question number 6, illustration 6. The following are the extracts of the balance sheet of ABC as of 31st of December. Okay. Share capital, 40,000 equity shares of 10 each. So what's the total share capital? 4 lakhs. Preference shares is 1 lakh. Total share capital is 4 plus 1 lakh, 5 lakhs. I'm just doing the computation in my mind. They have given the details of reserves. Capital reserve. What to do with that? Nothing. Useless reserve for this problem. Securities premium, 50,000. What to do? Nothing. We can't use. General reserve is 75. PNL is 35. The board of directors decided to redeem the preference shares at par, not premium again. By utilization of reserves, you are required to pass the necessary journal entries. In this, how many journals will come? Only first and second. Will premium entry come? No. So what is the first entry? Preference share capital account debit 1 lakh to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Correct? Those are the two entries. Look at this. Preference shareholders to preference share capital to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Are you following the first two entries, guys? Everybody understanding? Clear? Okay. Third entry I am yet to explain. Just give me some time. I will explain that when the time comes. Okay, let me explain what is the last entry, the entry number 4 that you wrote, general reserve to CRR. You remember that, guys? Let me explain that as a fresh concept. So we have so far finished 4 out of 10 sums, illustration 1, 2, 3, illustration 6, except the last entry which I will explain now. Coming back to concept, detailed concept, why are we passing the 4th entry? What is the 4th entry? Free reserve to capital redemption reserve. Okay. Follow guys. Let's take one balance sheet where equity share capital is 100, preference share capital is 50, preference share capital is 50, reserves and surplus is 200, bank loan is 300, creditors is 50. What's the balance sheet total? How much, guys? 700, correct? Fixed assets 400, stock 200, cash 100. Okay, let it be like this. Okay, 700, just random numbers. Now when you repay preference shares, let's say I'm repaying preference shares of 50 at par, because all these sums so far they have repaid only at par, basic sums. So if you repay preference shares at 50, what will happen? Preference shares will become, cash will reduce by, I will be left with 50, my balance sheet new total will become 650. Correct? Now, you studied partnership accounts. In partnership accounts, whom will you, if company is closing down, dissolution, after selling all the assets, whom will I pay? First whom I will pay? Liabilities only I will pay first. Okay, first I should pay liabilities, creditors, loan, creditors. Then only if I have some money, I will pay whom? Partners, correct? Same concept applies to company. If there's a company, if company is going to close down, if I'm selling the assets, whatever cash I have left, first I should pay whom? Loan and creditors. Then only I should pay shareholders. But what have I done here? I'm paying whom first? Preference shareholders are getting paid first, and who's not getting paid? Loan and creditors. The bank manager is seeing, now I gave 300 rupees. You have not given me 3 rupees also. That preference shareholders fully you repaid. So bank manager is coming and saying, please repay my loan. Can I repay? If I have to repay him, I have how much cash? Only 50 left. Then I have to sell my assets. If I sell my assets to repay, I should better close my business. Correct? So who's not going to be happy about me repaying to preference shares? My liabilities, especially loan creditors, will not be happy. Correct? Correct? So what to do in this stage if they are not happy? Preference share is not a loan, it's a capital. It's part of your shareholders' funds. No, it's never a loan. Okay, if it's a loan, you will pay every year interest. On preference shares, do I pay every year interest? No. So preference share is not a loan. Loan means you have to pay every year interest. Debentures, interest, loan, interest. Preference shares, dividend is optional. I don't pay every year. It's part of my capital. But it's part of my capital where I have to repay in 20 years because Companies Act is asking me to repay in 20 years. Are you following? So now you are the company. Let's say this is balance sheet of, for example, let's say, Bini Limited. Okay. Binayak and Co. Bini Limited. Now Bini Limited is confused as to what to do. Because if Bini Limited repays preference shareholders, who's going to be angry? Liabilities. If he is not paying preference shares so that liabilities are happy, who will be angry now? Not preference shareholders, Companies Act will be angry. Government will come and sit on Binayak's head. Okay. So Binayak is now like a cat on the wall. He doesn't know which side to go. If he repays preference shares, liabilities will catch him. If he is not paying preference shares, government will catch him. He can't repay both. He is not having so much money. What to do? What should Binayak do? Make a fresh issue. That's what we saw in previous sums. Now, let's say we are not doing fresh issue. Now, previously when I did the 3 sums, Hayagrivan asked, sir, in the first 3 sums we did fresh issue of equity shares. How much we got? Plus 50. So plus 50 means 100 became 150. That 50 only I paid preference shares. So my cash was minus 50 and plus 50. So overall cash will still be 100. My balance sheet total will be 700. Now liabilities will be happy. Okay. Cash was before also 100. Now also 100. I am alright. That's what we did in all the previous sums of illustration 1, 2, 3, 4 over 6. Correct? But that time, Hayagrivan asked a doubt. Sir, if I am equity shareholder, why will I give 50 to pay preference shareholders? He raised the doubt that time. Isn't that a valid doubt? If you are the preference shareholder, will you give money so that, if you are equity shareholder, will you give me money so I will repay preference shares? No. So, let's eliminate that option. What option? Issuing equity shares is not possible. Issuing equity shares is not possible. But I still have to repay preference shares and I have enough cash. 100 rupees is there. Why I need to issue equity shares? Only when money is not there I will issue. Now money is there, why to issue? So now Binayak sitting on the wall, he has to make the preference shareholders happy, make the government happy, make the liabilities happy, and he should also be happy. Very difficult to be happy, correct? What to do? What to do? So Binayak came with a solution. Imagine you are all the liabilities. I am Binayak, I am giving the solution. You should tell me if you are satisfied or not. Binayak is saying, see, reserves is how much? These are free reserves, correct? This free reserves belongs to whom? Company. Specifically whom in company? Shareholders. Which shareholders? Equity and preference. So Binayak is saying 200 is mine. Free reserves. I can do anything with the free reserves. Correct? I can declare 200 dividend. This full 200, I can give it to my equity shares. I can give it back to my equity shareholders. Now, if I give that also to equity shareholders, my cash will further fall. Now, every liability has a corresponding asset. Now, this 200 over here, what is the corresponding asset? Is it cash? Can be anything. It can be cash, can be stock, can be fixed asset. So, this 200 on the liability side has a corresponding asset. Correct? Let it be any asset, but it belongs to my equity shareholders, which I can freely use. Correct? Are you following, guys? Let's say tomorrow I declare a dividend of 100 rupees. How much dividend? My entry will be reserves and surplus account debit 100 to cash 100. What I am doing? Payment of dividend. Payment of dividend. So what will happen? Reserves instead of 200 will now become, cash will become 0. Now can the liabilities question me? No. Because I am using my profits and giving dividend to myself. Who are you to question? But they are going to be angry. Correct? So what I will do, I will tell my liabilities, see, if I wanted, I could have issued a dividend of 100, but I am not doing it because for me your happiness is important. I can't pay myself before I pay you. Repaying this preference shareholders and making it 0, so cash became 50, is not my choice. Government is on my head. Look at that. I can't do anything. But I will do one thing for your happiness. This 200 is freely available to use in the future. Correct? What I will do, from free reserves, I will transfer to CRR the same amount of preference shares which is reduced. Preference shares 50 became 0. So I will transfer, free reserves will now become 150 and CRR will become 50. Nothing is changing in the asset side. It remains the same. Reserve alone, I am breaking it as 150 and 50. Now what is happening? Now how much dividend I can give? Only 150. Before I could have given dividend of 200. Now I can give only 150. That means this 50 cannot be used for any purpose. When you transfer a reserve to capital redemption reserve, that reserve cannot be used freely for any purpose. So I am telling my liabilities, see, I have the ability to spend 200 for myself in the future, but I am reducing that ability from 200 to 150. That means 50 rupees what I can spend for myself, I cannot spend in the future. That means 50 rupees worth of assets will still be in the asset side. So be happy. I am reducing my ability to spend. It's like your parents told you, I will not give you more than 2000 rupees for your birthday. Okay. Your birthday is 3 months away in the future. Now you have with you 0 rupees cash. What you did one day, you went to your parents' room, from their wallet, you stole 500 rupees and you used. That your parents found out. You already spent. I spent off that 500, went to movie, ate popcorn and came. Now in the future in your birthday, will your parents still give you 2000? How much they will give you? 1500. Because you spent it off now, my future spending is reduced. Correct? So, because I paid preference shareholders 50, which I should have paid only in the future, but I am paying now because law wants me to pay. My ability to spend in the future is 200 in reserves. I am bringing it down to 150, so I can spend only 150. That means this 50 in CRR cannot be spent. It will always be CRR till the end of the company. This free reserves can become 0, but CRR will always be 50 till end of the company. That means this equivalent asset will always be in the business till the company is closing down. If the company closes down, when you sell that asset, that 50 cash will be paid to whom first? Liabilities, loan and creditor. So I will tell them, see, this 50 is now saved till the end of the life of the company. You will be paid if the company closes down. Are you happy now? As a creditor, are you happy, guys? Are you understanding what we are doing? Why we are transferring 50? Because my 50 cash was reduced now, I am reserving my right to spend the 50 in the future. Are you getting it, guys? Now, same example, you will tell me now how much to transfer to CRR. Okay. Equity share capital 100, preference share capital 50, free reserves 100, loan 200. What's the balance sheet total? 450. Assume fixed assets is 200, current assets is 250. Okay. Example. Now, I am repaying preference shares. So, 50 became 250 became 200. How much I will transfer to CRR? 50. I am locking my ability to spend in the future. So, this 100 becomes 50. Okay. Now, same example, guys. Slight change. Okay. I repaid preference shares how much? 50. So, my cash from 250 became 200. Now, like the illustration 1, 2, 3, I am issuing equity shares of plus 50. So, my cash again became 250. Now, how much to transfer to CRR? 0. No need to transfer. Because my cash is still 250, my shareholders' funds is still 150. Earlier it was 150, now it became 150. Are you following, guys? Next, third scenario. If you are able to answer this, you are getting it correctly. Equity share capital 100, preference share capital 50, reserves and surplus 100, liabilities 100, total is 350, 350, fixed assets 200, current assets 150. Now follow very carefully. I am repaying preference shares. Preference shares became, so cash reduced 50, current cash is 100. Now I am doing a new issue of equity shares plus 20. So cash increased by 20, cash new is how much to transfer to CRR? If you get this correct, you got the concept. How much to transfer? How much, guys? I will transfer 30. Why I will transfer 30? Earlier my shareholders funds put together was 150. Now it is 120. Earlier my cash was 150. Now it became 120. So loss in cash for me now is 30. So I will save only 30. Are you following, guys? Reserve and surplus will become 70. Reserves will become 70. CRR will become 30. Sir, what if in this sum, new issue of equity shares is 500? How much will transfer to CRR? Nothing. Because my cash is increasing, not decreasing. My shareholders' funds is increasing. So for this, they gave a formula in the book. You wrote entry 4 in your template. There you write down below that note. Amount to be transferred to CRR is equal to. Now be very careful, guys. This entire example I taught you, follow, look at this, very, very important. This entire example, I dealt with it as if preference shares are repaid only at face value of par. What if 50 rupees premium, 50 rupees preference shares, I am repaying at 70? Are you following, guys? Ignore premium for the purpose of CRR. Meaning, premium repaid is not considered in shareholders' funds. You will still get the same answer. 50 rupees is the face value. You are repaying 70. My answer will remain the same. You will compute as if you repaid 50. So, for the purpose of CRR computation, consider only face value. because that much only is the fall in shareholders funds. So look at this, amount to be transferred to CRR is equal to face value of preference shares redeemed minus what, guys? Minus what? Face value of fresh issue of equity or preference shares. Write this as a note below journal number 4. So amount to be transferred to CRR is what, guys? Face value of preference shares redeemed minus face value of fresh issue of equity shares or preference shares, if any. Now go back to the very first, this illustration. In this illustration, the face value of preference shares redeemed was 50, fresh issue was 20, that's why you told transfer is 30. In one more scenario example, face value of redemption was 50, fresh issue was 0, so you still have 50 transfer. In one more sum I told you, face value redeemed was 50, fresh issue also 50, so transfer to CRR 0. Sir, what if redeemed is 50, fresh issue is 70, I am getting negative 20, nothing to do. That's why in illustration 1, 2, 3, if we go back and see illustration 1, 2, 3, in all the 3 illustrations, if you see, for example, in illustration 1, if you see, fresh issue is 5 lakhs, redemption is 5 lakhs. So 5 lakhs minus 5 lakhs, how much for CRR? 0. Formula is enough for exam, but are you understanding the logic behind the formula, Vinayak? Okay. Yes. How will you not create an impact if you repay? 70. Shareholders funds, no. The capital is the falling only by 50. Premium is excess. That time what will happen? Your point is valid. Sir, what will happen if I repay? Let's take a sum like that. Then I'll explain in that sum. Now come back to which sum were we in? Illustration 6. In illustration 6, how much we repaid? 1 lakh. What is the fresh issue? In illustration 6, repaid is 1 lakh. What is the fresh issue? Fresh issue. Check. No fresh issue. So how much to transfer to CRR? So it will be 1 lakh minus 0. That's why third entry, you will transfer to CRR from what reserves I told you? Free reserves. That's why general reserve P&L account debit to CRR 1 lakh. Now go through these 3 entries. See if you are understanding quickly. Done. Following, guys. Shweta, understood? Sure. Okay. Question number 7. Illustration 7. That's it. With this redemption of preference shares, concepts are done. We just have to practice sums. Easy or difficult? That's why I brought down from inter to foundation. Okay, fine. C Limited had 3,000 12% preference shares of rupees 100 each. So what is the total preference shares? 3,000 into 100, which is 3 lakhs. The company had to redeem these shares at a premium of 10%. Came off premium. So far I was thinking easy, sir. No, premium came. So I will repay 3 lakh 30,000. I will repay how much, guys? 3 lakh 30,000. It was decided by the company to issue the following. For the purpose of redemption, they are issuing the following. 25,000 equity shares of 10 each. How much equity shares? 2 lakh 50, and debentures 1,000 into 100, which is 1 lakh. You are required to pass. The issue was fully subscribed and you have to pass, show journal entries. So this we have to do a proper full-fledged sum for 4 or 6 marks. Okay. So in this, they are repaying preference shares at what? Premium. That means entry 3 also will come. So entry 4 also will come. Should I transfer to CRR here? Yes. You are repaying how much? Preference shares repaid how much, guys? 3 lakh 30. But I told take only face value. For the purpose of CRR, take only what, guys? Face value. Logic I will explain by the end of this sum. Why you will not take fully. So you will take 3 lakhs. Minus what is the fresh issue of shares? Any fresh issue? Read properly. Is there any fresh issue? It was decided by the company to issue the following. 25,000 equity shares of 10 each. How much, guys? Then fresh issue is there, no? How much fresh issue? 2 lakh 50,000. So how much to CRR? I told take only fresh issue of what? Look at my notes. Look at the notes. You will compute face value of preference shares redeemed. In this question, what is the face value of preference shares? 3 lakhs. Minus, look at the notes. Face value of fresh issue of equity of preference shares, if any. In this question, what is the face value of equity shares? 2 lakh 50. So how much for CRR? 50,000. Let's go check if they transferred 50,000 in the last entry. Where is that? P&L to CRR 50,000. Are you following, guys? Are you understanding? But how many entries to pass? When I look at the question itself, I should know. Redemption of preference shares, how many entries? 4 entries. Apart from that, extra what is there in the sum? Issue of equity shares, redemption of preference shares, 4 entries including CRR. Issuing equity shares, how much? 1 entry. Issuing debentures, how much? So totally 6 entries. Go down and check if they have 6 entries. 1, 2, 3, 4, 5, 6. Perfect. Are you following, guys? Let me run through the 6 entries for you to understand. Look at this. First entry, we are issuing equity shares. How much? 2 lakh 50. After issuing only I can redeem. Then only I will have cash. Look at this. Bank account debit to equity share capital 2 lakh 50. Are you following? Next I am issuing debentures. So entry will be bank account debit to 14% debentures. How much? 1 lakh. Are you following, guys? So bank account debit to equity share capital 2 lakh 50. Bank account debit to 14% debentures 1 lakh. Are you following, guys? Clear? Next, let's go in the order that we know. What is the first entry? Redemption of preference shares. Preference share capital account debit to preference shareholders. Look at this entry. Preference share capital account debit 3 lakhs. Premium on redemption of preference shares 30,000 to preference shareholders 3 lakh 30,000. Next entry I told you is payment of preference shareholders to bank. How much? 3 lakh 30. Then in our flow, the third entry was transfer of premium to general reserve. Look at this. P&L account debit to premium on redemption. How much? 30,000. And in our entries, last entry was transferring to CRR. How much, guys? 50,000. That is this entry. P&L to CRR 50,000. Are you guys following? Understood all the entries? How many of you studying this chapter for the first time? Oh, everybody understood? Sure, guys. Understood all the 6 entries, guys. See, I am not solving because we can save time. We will do next sum. Getting it? This is a proper exam question for 4 to 6 marks. 6 journals, 6 marks. Since it's the first time new addition to syllabus, they might ask a basic sum like this. Proper sum with all transfer. Understanding? Now, Hayagrivan had a doubt. Sir, ideally, shouldn't it be 3,30,000 minus 2,50,000? Transfer to CRR should be 80,000 only, no sir. Was his doubt. Correct? Actually, it's 80,000 only. If you look at this, my free reserves reduced here by how much? By transferring to CRR. And by transferring premium, it reduced by another 30,000. So effectively, my reserves have dropped by how much? 80. That means the money available, my savings is reduced by how much? 80. So liabilities are happy. Because this is 30 only, the other one is 50. That's another way of learning. Now you got the answer, Hayagrivan. Clear? Everybody following? Clear? This much in-depth concept they will not ask in exam. Exam, what they want? 6 journals. You understood all the 6 guys. 4 for preference shares, 1 for issuing equity shares, 1 for issuing debentures. That's it. Okay. Come down. I'm just seeing which sum you can solve. Okay. Let's go to previous sums that we missed in the gap. 7 is over, 6 is over. Correct? 5 and 4 is pending. Let's do both of those. Yeah, now it's time we can do 5. 5 we can easily do. Illustration 5. They have given us the following information. Equity and liability. Shareholders funds is 2,90,000. Reserves and surplus is 48,000. Current liabilities. Trade payables is 56,500. Then they have given some assets, cash and bank. Don't expect this balance sheet to tally. If it's tallying, well and good, but they have given an extract. Okay, fine. The share capital consists of this 2,90,000, correct? This 2,90,000 what a breakup is giving. Consists of rupees 50 each equity shares, 2,25,000 and preference shares of 65,000. So he has given the breakup. Equity shares is 2,25,000. Preference shares is 65,000. Are you following, guys? Clear? So equity is 2,25,000, preference is 65,000. Reserves and surplus comprises of profit and loss only. That means the full 48,000 is P&L. Are you guys following? Understanding, guys? Next, in order to facilitate redemption of preference shares at a premium of 10%, that means preference shares is how much? 65,000. Premium 10% means how much? 6,500. So totally I will repay 7. How much, guys? 65,000 plus 6,500 is how much? 71,500 only I am going to repay. Okay, for that, company is doing 3 things. Sell investments for 15,000 rupees because they don't have money. What is the value of investments in books, sir? 18,500. That is being sold at 15,000. So I have a loss of 3,500, but I got cash of 15,000 to finance part of redemption from company's funds, subject to leaving a bank balance of 12,000. What is the current cash? That means they are saying cash can reduce, but my closing cash should be at least 12. It should not become 0. I should have a closing cash of 12,000. To issue minimum equity shares of 50 to raise the balance funds required. Beautiful sum. In every sum, they tell us how much equity shares have to be issued. In this, I have to find out how much equity shares have to be issued. Proper, nice exam sum. Okay. Now, how many entries? Let's try. In this preference shares, all 4 entries will come. Yes, all 4 entries. Apart from that, how many extra entries we have? Sale of investment, 1 entry. Issuing equity shares, 1 entry. Totally 6 entries. I will do the sum in detail. Let's understand one by one. First, we should know how much equity shares are issued. Otherwise, there is no point, correct? Look at the question and tell me what is the cash available in question. 31,000. Perfect. In this, how much I can use? 12,000 you should keep it separately, like a savings, correct? So I can use how much? Correct? 19, sure? Yeah. 19,000 I can use. Then, apart from this, I am selling investment. Investment sold, how much? 15,000 rupees. So, how much cash is available now? How much? 34,000 rupees cash is available. How much cash do I need? You are repaying preference shares. For repaying preference shares, face value was 65,000 plus 6,500 was the premium. So you need 71,500, but I have only 34,000. That means if I minus 71,500, what is my shortfall? How much? 37,500 rupees I need money. How will I get this? The equity shareholders are sitting. I will give money, whatever you want. Correct? That is the last entry. To issue minimum equity shares of how much, guys? 50 each to raise the balance of the funds required. So that means 37,500 divided by 50. How many shares? 750 equity shares into 50 will be issued. Are you following, guys? Let's go check equity shares issue. Look at this. Bank account to share application 37,500. So this is the new working that we have in this sum. Are you understanding, guys? Easy, clear, guys? Can you quickly compute how much to transfer to CRR? It will take, if you understood the concept, it will take you 6 seconds. How much to transfer to CRR? How much? Okay. How to compute CRR transfer? Follow carefully, guys. What is the face value of preference shares redeemed? 60. 65,000 is the face value of preference shares redeemed. What is the face value of new equity issue? 37,500. So 65,000 minus 37,500, how much? 27,500 will be the amount I will be transferring to CRR. Can you see 27,500, guys? Clear? Understanding? Following? This is the workings. Quickly make a note. Quickly make a note, guys. Then rest of the sum, you have to pass 6 journal entries. 4 for preference shares, 2 for issue. Can you try and pass the entry once? You pass the entry, don't look at me. Use these workings. Pass the 6 entries without looking at the solution, guys. Don't look at the solution, including recording students. So far, the 6 sums I solved. You are just looking at the screen. This sum, I have done some base workings. Using this, I want you to pass 6 journal entries. What are the 6 journal entries? 4 entries for redemption of preference shares, 1 for issue of equity shares, 1 for sale of investment. These will be your 6 entries. Quickly pass it, guys. Recording students included. Pass it in 5 minutes. We will check it. Because only when you solve, you will know the mistakes that you are doing. Because after going home, you don't have the time. Straight away, you will go to exam. So at least 1, 2, 3 sums we will do in the class. This sum, little bit I am helping you for the 6 entries. Next sum, you will do everything by yourself. Quickly guys, do it fast. Then we have to do one more sum. Do the 6 entries. If you are done, check the answer in the book. See if you are having entries as it is. I will start discussing in few minutes. I am keeping the question for others. Recording students, don't search for fast forward button. Do it fast by yourself. Finish, Shweta. All 6. Okay, let me brief through. By now you should have finished, guys. Look at this. We found out 37,500 is the share issue. So bank account to share application 37,500. That same share capital 37,500. Then redemption of preference shares. We saw preference shares capital is 65,000. Premium is 6,500 to 71,500 in our template entries. First entry. Were you able to do it daily by yourself? Next entry was, we will go in the same order. After this, next entry is payment of preference shareholder to bank 71,500. Then transfer of premium P&L to premium 6,500. Then transfer of CRR P&L to CRR, how much guys? 27,500. And then sale of investment, bank account, loss on sale to investment. Are you following, guys? Clear? But you just have to be careful that in this question, reserves and surplus given is how much, guys? 48,000. Can you see, guys? You just have to be ensured that this is sufficient. In this question, it is sufficient. So we didn't discuss. Correct? Sir, what do you mean? P&L is 48,000. So from 48,000, first we sold investments. What is the loss in that? 3,500. Then premium was there. Premium on redemption of preference shares. So minus 6,500. Then we transfer to CRR how much? 27,500. After doing all of this, what is the closing balance of P&L? 10,000. So balance is still available. So we were able to do. But some sums, what if balance is not there? We have to check that also. Are you understanding, guys? Clear? Can we proceed to next sum? Have you all understood this honestly, guys? Able to do it? Okay. Next. Illustration 4. So if we finish 4, 1 to 7 all done. Correct? Illustration 4 is easy. I will brief. I want you to try it. No journals. Only workings. Somewhat like this. But not the same thing. But in this ideology, you have to do some workings. Okay. Illustration 4. The board of directors of the company decided to issue, look at this, issue. How many shares they are not saying? We have to compute. Like previous sum. We have to compute. Minimum number of equity shares of rupees 9. One share is 9 rupees. We have to issue. How many shares to issue? You will find, Delhi will find. To redeem 5 lakh preference shares. Okay. The maximum amount of divisible profits available for redemption is 3 lakhs. That means the P&L is how much, guys? 3 lakhs. Calculate the number of shares to be issued by the company to ensure that the provisions of section 55 preference shares are complied. Also determine the number of shares if the company decides to issue shares in multiples of rupees 50 only. Now, I'll give you a brief, then you compute. What is the preference shares here? 5 lakhs. I want to redeem preference shares. At par or premium? Par. Nothing about premium. So, if I redeem 5 lakhs, how much to transfer to CRR? 5 lakhs. Because I am not doing fresh issue. But for me to transfer to CRR, the entry is P&L to CRR 5 lakhs. But do I have 5 lakhs? No, I have only. That means I can transfer to CRR only. That means I have to do some fresh issue. How much is that fresh issue is asking? How much, guys? 2 lakhs. But how many shares? You compute that number of shares. Look at this. So, out of 5 lakhs, 3 lakhs if it's profit, P&L. So, I am left with only 2 lakhs. How many shares? 4. So follow guys, look at this. We almost finished the sum. Look at this. Amount of preference shares to be redeemed is 5 lakhs. I told you for transferring to CRR I have only 3 lakhs. That means if 3 lakhs is there, then minimum proceeds should be at least 2 lakhs. That you already found out of, correct? When I explained it, if you understood. So if 2 lakhs is what I have to make fresh issue, 2 lakhs divided by 9 is how much? 22,222.22. Now you have to round off to what? You can't do 0.22, correct? So either the answer will be 22,222 or 22,223. Sorry. So now look at this. Either it has to be, the answer we got is 22,222.22, correct? Till here have you all understood? 100%. Now look at the beauty of this. Using basic maths, you will do it as 22,222. If I issue 22,222 shares, one share is how much? 9. How much you will get? One lakh 99,998 of 998. How much you need? You need 2 lakhs, but you didn't get 2 lakhs. Are you following? That's why you have to issue how many? 22,222. 3 into 9, how much is coming? 2 lakhs? 7. So what they're asking, are you understanding? Here you can't apply basic maths and round off to 22,222. Gone. Because minimum money, minimum fresh issue to do is how much, guys? 2 lakhs. If you keep 22,222, you are raising only 1,99,999. You are 1 rupee short. 1 mark also matters. So you should make it 22,223. That's the answer in the book also. 22,223. Are you following, guys? But they told the number of shares should be in multiples of 50. Correct? So 22,223 is not multiple of 50. So they are making it 22,250. I can either make it 22,200 or 22,250. I can't reduce it. So I am increasing it to 22,250. Are you following, guys? Dilly surely understanding? No, it doesn't look like that. 22,000. See, you understood the answer up to 22,223. Okay. Question last line what he has told, the number of shares to be issued should be issued in multiples of 50. Is this a multiple of 50? No. What is the nearest multiple of 22,223? 22,200 or 22,250, because both these can be divided by 50. If you make it 22,200, it is less than this, not sufficient. So you will make it 22,250 is what you will issue. Understanding a proper question for 3 to 4 marks, but you will not be able to solve unless you know the concept of CRR. If you mug up CRR formula, you will not understand. Are you getting it? Honestly, are you understanding, guys? Here online, if you're understanding, can you put in the chat yes if you understood, please? I want to know if you actually understood. Put in the chat. Otherwise, any doubts, put it over there. Sure, all of you clear, guys? So illustration 4 is done. 5 we finished. 6 also over. 7 also over. 8, 9, 10 now. How many are there totally? 3 more. Okay. Okay. This sum let's do illustration 8, sorry. Okay. Why I am not solving, writing every sum, just to save time. Explaining, going through the solution. Illustration 8. The capital structure of a company consists of 20,000 equity shares of 10 each, fully paid up, and 1,000 8% redeemable preference shares of 100 each. So what is the equity share capital? 2 lakhs. Preference share capital is 1 lakh. Okay. Undistributed reserves and surplus. General reserve is how much? 80,000. PNL is 20,000. They are talking about something called investment allowance reserve, out of which 5,000 not free for distribution as dividend. Total is 10,000. That means it's some new reserve, investment allowance reserve. What is the balance in this reserve? No, 10,000. In that 10,000, 5,000 is not free for distribution of dividend. That means how much is free? 5,000. That means he's trying to communicate, out of the 10,000 reserve, I will split it into two. The investment reserve has two parts. 5,000 you consider as free reserve, other 5,000 is not a free reserve. Understood that? That is enough. Rishi, understanding that? Because he is saying not free for distribution as dividend is 5,000, the other 5,000 is free for distribution as dividend. Securities premium 2,000. What to do with that? Nothing. In this chapter, ignore securities premium. Cash at bank amounted to 98,000 rupees because we need to repay preference shares. I have only 98,000. But preference shares is how much, guys? 1 lakh into 100 is how much? 1,000 into 100 is how much? 1 lakh. I need to repay 1 lakh, but I have only 98. That means that also is something you should keep in mind. Okay. Preference shares are redeemed at a premium of 10%. 1 lakh 10,000 I need. I have only 98,000. Simply you can't go past the entry. You have to check if cash is available. And for the purpose of redemption, directors are empowered to make a fresh issue. Super, sir. Make a fresh issue after utilizing the undistributed reserves and surplus. This is mix of the fourth sum. Okay. Subject to the conditions that 12,000 shall be retained in general reserve and shall not be utilized. You have to pass entries for the above arrangements. Preference shares, how many entries? 4 entries. Issue of equity shares, how many entry? 1 entry. We all know the entries. Amount only we have to fill. Are you following, guys? Clear? Okay. Correct. So I will give you 2 minutes time. You need to find two things. How much I will transfer to CRR? What is the fresh issue of equity shares? Nothing new. Already I have done, but I will do it again in detail. But I want you guys to try this. If you find out how much is CRR, how much is fresh issue of equity shares, you can do all the other entries. So give it a shot. Give it a shot. Try it out, and then I will explain. Don't do 6 journal entries. Working note you do and try to do this. Then I will explain. Okay. I can do it, but I want you to try it because only then you will know how much you have understood. All the previous sums, I have done the whole sum. Proper exam question for 6 marks. Do it guys, do it fast. Finished. Oh, Binay, can you give me the answers, guys, so that recording students can cross check if they also got the same wrong answer or same correct answer? Yes. One by one. Vinayak CRR 25,000, fresh issue. CRR 75, fresh issue 25,000. Dilli Babu, same answer. Anybody else different answer? Others same. All of you got the same answer. Okay, fine. Let's quickly cross check. I'll just cross check over here. Excellent. Fresh issue is 25,000. Transfer to CRR. Where is that? 75,000. Perfect, guys. Excellent. You have done by yourself, means you have understood. But let me brief for the benefit of everybody. What is the general reserve available in this question? Totally 80,000. But I can use only 20. He told don't touch. That means you should not touch. So I can use only 60. What is the P&L available? Profit and loss account 20,000. Help me with the values. Any other free reserve? Yes. Out of that investment allowance reserve, I can use 5,000. That means from my existing reserves, I can transfer to CRR 60, 80. Correct, huh? Correct, guys. Yeah, I can transfer how much? 85,000 rupees is available to transfer to CRR. However, my preference charge is how much? Face value 1 lakh. I'm going to repay at how much? 1,10,000. That means you are going to repay premium of how much? That premium will reduce from my reserves. So out of the total freely available free reserves of 85,000, 10,000 will be used by premium on redemption. That means how much is still available with me? 75,000. This 75 only I can transfer to CRR. Correct? So my total issue of fresh issue is, redemption is 1 lakh. Total redemption is 1 lakh. In this redemption, I am having 75,000 from existing reserves. Then balance 25,000 will be fresh issue. Are you following, guys? That working only they would have done somewhere down here. Okay. I don't know if you understood this or not. I don't know if you understood this also. Have you understood, guys? How 25, 75 came? Everybody did by yourself. Perfect. Understood this, how CRR came as 75,000. Because CRR transfer is 75,000, I have 75,000 from reserves. So I have to make a fresh issue of 25 so that I can do redemption of 1 lakh. Now all the entries is normal. If you look at the entries, fresh issue will be 25,000. Online, if you got the answer before I solved it, type yes sir, I got 25, 75. Then 75 is transferred to CRR in the following 3 sources. Preference shares redeemed 1 lakh preference share capital account debit, premium on redemption 10,000, 2 preference shareholders 1 lakh 10,000. My payment is preference shareholders to bank 1 lakh 10,000 and profit and loss transferred for premium 10,000 rupees. Are you guys understanding? Clear? Okay. Fine. Okay. I hope you guys online also understood. Last 2 sums are nothing new. Concepts are done. Like this, he will twist and ask. Cash, I can't use 12,000 rupees. Reserves, I can't use 20,000 rupees. How much is CRR? How much is fresh issue? This is the maximum complication possible in this chapter, even in CA Inter. All these sums are CA Inter sums. Now in CA Foundation. Okay. Perfect. Now, illustration 9 is nothing new. Same sum, one more model. Balance sheet is given as follows. Now you will know, by the time I read the question, you will know, yeah, I should do this. Preference shares is 35 lakhs. Equity shares is 1 crore. But the difference is, this preference shares is 70 paid up. Securities premium 5 lakhs. CRR is already there in question. That means in the past they have done some preference share redemption or something. CRR is there, 20 lakhs. Sir, what I can use CRR for? What is the purpose of using CRR? CRR cannot be used for anything. CRR is section 69 of Companies Act. You can't use for anything except one use. It can be used only for bonus issue. How we finished bonus issue chapter the other day. So in the bonus issue chapter, I told you for issuing bonus shares, you can use CRR, securities premium, free reserves. I told you should use CRR first. Why I told first? In bonus issue, CRR should be used first. Why? Because that is the only purpose. CRR can be used only for bonus. Then better use for that. Your parents gave you 5,000 rupees, 10,000 rupees. They told 5,000 should be used only for buying books. Can you use for something else? No, you will use for that. Like that, the CRR, only one use is bonus. So better use for that. What if I use for bonus? Anyway, it will be converted back to share capital. When will share capital be paid? At the time of winding up. You got the logic, guys? So CRR is basically locking the money till the time of winding up. Even if you convert to bonus shares, it will be repaid only at the time of winding up. So money will be paid only at the time of winding up. So creditors won't mind if you convert to shares. Are you following, guys? Clear? Sweta, understanding? Okay. General reserve is 50 lakhs. Bank balance is 15 lakhs. Next, under the terms of the issue, preference shares are redeemable on 31st of March 2022. We are now in 31st December 2021. They are repayable after 3 months. Correct? After 3 months, 31st December 21, 31st March 22. After 3 months, we have to repay at 5% premium. First sum where they are giving dates. If they give dates, what you should do? Write the date in journal entry. Otherwise, lose 1 mark. Your choice. In order to finance the redemption, the company makes a rights issue of 50,000 equity shares of 100 each at 110 per share. So, new issue of rights. 10 rupees is what? Premium. Rupees 20 payable on application, 35 including premium on allotment, and the balance on 1st Jan 2023. This you are already very good. Share issue, application, allotment, first call, first final call. So issue of shares, you know, left, right, center. Studied in school, already we studied in company's account, issue of shares, correct? And allotment was made on 1st March. So till here, anything complicated? No. Basically, they made a new issue of shares. How much, guys? 50,000 into 100 at 110. I don't care about premium. Only I will take the face value. How much? 5 lakhs. Preference shares is 35 lakhs. Remember that. Okay. Next. The money due on allotment was duly received by 31st of March. Perfect. The preference shares were redeemed after fulfilling the necessary conditions. You have to pass the necessary journal entries. Oh, he told ignore date column. Super. That means no marks for date if you write also. 50,000 into 50 lakhs. Sorry, you are right. 50 lakhs is the value of rights issue. Look at the entries, guys. Okay. Now, preference shares is partly paid up. Correct? So, section 55 says you cannot redeem partly paid up preference shares. So, what you should do? Make it fully paid up, then redeem. That's all. How to make fully paid up? Look at this. Preference shares final call. How much? 30 rupees, and he paid bank account to 8% preference shares. 30 rupees, 15 lakhs. So now preference shares from 35 lakhs plus 15 lakhs. Now it has become 50 lakhs. Correct? Now what I will do? Repay. So unkita 15 lakhs vangi, you want 50 lakhs tharun. Act is like that. Act is saying you should redeem only fully paid up shares. Okay. So I will ask you, you give 15 lakhs, I will repay 50 lakhs. Okay. Next. Also they did some rights issue. Application la how much? 20, allotment la 35. Those entries you know, guys. Application, allotment, look at that. Bank account to share application 20 per share, then allotment 35 per share. I am running through these entries because nothing new in this. Okay. So bank account to share allotment, you know these entries very well. Now we have to transfer to CRR. How we will transfer to CRR? How much is redemption? 50 lakhs. How much is the new issue? New issue is how much? New issue, follow carefully. This is where the dates come important. When am I doing redemption of preference shares? First, look at this. The preference shares were redeemed on which day? Check the question. Are redeemable on 31st of March. So 31st March 2022. Up to this date, how much preference shares or equity shares is done? Up to allotment only is done, correct? Because the balance final call is on, look at this very carefully, 1st Jan 2023. Are you following, guys? So if you look at the breakup, it is 50,000 equity shares of 100 each at 110 now. Let us write that breakup. Rupees 110 per share, they are collecting as follows. How much on application? 20. Allotment how much? 35 including premium. I don't care about premium. I only need face value for CRR. This call is happening after redemption of preference shares. Correct? That means as of 31st of March 2022, how much of fresh issue is made? Only 20 plus 25. So you made only 45 into how many shares? 50,000, correct? How much is that coming to? 22 lakh? 50,000 is the amount of fresh issue. What is the face value of preference shares redeemed? 50 lakhs, correct? So now I will do 50 lakhs is the face value of preference shares minus 22 lakh 50,000 is the new issue on the date of redemption. So how much for CRR? 27 lakh 50,000. Check the answer. CRR 27 lakh 50. Understood? Sir, why sir unnecessarily in this sum they gave application allotment first call for this only? Like this, they will change little bit here and there and ask, but we know the logic of CRR. What is the equation? Face value of preference shares redeemed minus fresh issue of equity of preference shares, both face value on the date of redemption, whatever this is there. So you got 27 lakhs 50. This workings you have to show somewhere, guys. This breakup, this you have to show. Here he gave in the narration itself, he showed. Are you following? Then after this, you know, look at this. Preference share capital account debit 50 lakhs. Premium on redemption 5% premium 2 lakh 50. Two preference shareholders 52 lakh 50. Preference shareholders to bank 52 50. General reserve to premium 2 lakh 50. So this is redemption of preference shares in combination of fresh issue of equity shares with application allotment call. Easy or difficult? But lengthy. 8 marks or 6 marks you can ask. Are you following, guys? Everybody genuinely understanding, guys? Okay. Super. What about the amount received excluding premium on fresh issue, which is 22 lakhs 50,000 till the date of redemption should be considered for calculation. What I explained only is the note. He is saying why I should take only 22 lakh 50, because on the date of redemption I received only this and you should not consider premium. That's why he is saying exclude premium. Understood? Okay. Last sum, illustration 10 also is the same, guys, with small adjustment. Look at this. He is saying with the help of details in previous sum, further assuming that the preference shareholders holding 2000 shares fail to make the final call, what I should do? Reduce that, because they have not paid. Made the final call under section 55. You are asked to pass the necessary entries for 31st March with corresponding figures from 31st December, assuming the shares in default are forfeited after giving proper notice. Same thing, look at this. Only thing is share final call. Okay, basically is continuing the sum, guys. So You are asked to pass the entries, relevant extracts as of 31st March 2022 and corresponding figures on 31st March 2021. Okay. How much call money they have not paid, guys? Yes. Same sum. So how much is the balance call money? We will see here. Out of 110, 20, 35 is paid here, 55 is paid. So final call will be how much, guys? 30, yeah? Can you check once? 30, final call is 55, but they are not bothered about final call. What are they explaining here? He is saying, so here if you see, allotment is 35, application is 20, 55. So 55 is left, correct? In this previous question, when was the final call? And the balance on 1st Jan. Now what are they saying in illustration 10? With the help of details in illustration 9, further assuming that the preference shareholders holding 2000 shares fail to make the payment of final call under section 55, you are asked to pass the necessary journal entries and show the relevant extracts from the balance sheet as of 31st March 2022. But final call is only on okay, fine, correct. Okay, you are absolutely right. So this 55 rupees not paid is for equity shares. They are talking about, you are absolutely right. So in the starting, that preference shareholders had to pay 70 rupees, 30 rupees unpaid. In the 30, 2000 is not paying. So they are asking that, perfect. So preference share final call to share capital 15 lakhs. In that 48,000 paid into 30, 2000 into 30 did not pay. Therefore, my new preference share capital will be how much, guys? Minus 60,000. So from 50 lakhs, how much is not paid? 60,000. You will be left with 49 lakh 40,000. Now look at this carefully. If they are not paying call money, I will forfeit fully. So my preference shares is 50 lakhs. I'll explain with rough working. 50 lakhs. Out of this, who didn't pay call? 2000 shares into 30. Because they didn't pay call money, full shares are forfeited. So I will also forfeit what they paid. So totally I will forfeit 2000 into 100. How much? I will be forfeiting 2 lakhs, correct? That means how much is left in preference shares? So when I am redeeming, when I am repaying, I will repay only 48 lakhs, correct? I will repay only 48 lakhs. What is the amount of new equity issue? 22 lakhs, 50 in the previous sum. So from this I will minus 22 lakhs 50,000. How much is CRR? 50,000. Let me explain again for the small confusion which came. Look at this, guys. The total preference share capital, if everybody paid the money, it would have gone to 50 lakhs, correct? But one shareholder who is having 2000 shares did not pay 30 rupees per share. Because he didn't pay 30 rupees per share, his full share I will forfeit. That means I will forfeit full 2000 into 100. That means 2 lakhs I will forfeit and I will not repay him the money. So how much of shares I should redeem? Only 48 lakhs. So out of 48 lakhs, how much is fresh issue from the previous sum we computed? In equity, 22 lakhs, 50,000. So I will transfer to CRR only 25 lakhs, 50,000. Are you getting it, guys? Understanding? So let's go check if the CRR is correct. Yeah, look at this. Transfer to CRR is 25 lakh 50,000. Are you following, guys? Understanding? Hello? Everybody clear? What is additional in this sum? You have to pass entries for forfeiture and calls in arrears. That you know from the basics, so I am not dealing that in redemption of preference shares. Fully paid up. So in this fully paid up shares is only for 48,000 shares of, because he didn't pay call money. If you don't pay call money, I will forfeit. No, that is basics, not section 55. Normally in share capital chapter, if one shareholder is not paying call money, I will forfeit. So I forfeited. Understood, Sweta? Clear? Okay. Initial attempts, I think they will ask the illustration 9-10 is little on the heavy side. They will ask the other sums. 1 to 8 you be very clear. 9-10 go through once. Okay. So with this we are done with all the 10 sums in redemption of preference shares. Have you genuinely understood, guys? The below practical sums also are very similar only. Nothing new. You can go through that. One sum is there for practice. You can go through this at your end. Fairly simple. Okay. And practice. That's it. Nothing else is left in this chapter. We are fully done. How many of you studying first time and understanding fully? Perfect. So with this we are done with redemption of preference shares. Thank you. Okay, let's start off with rights issue from accounts, guys. Small concepts. If you look at the study mat, we have only one illustration, but to understand the illustration, I need to give you about 20 minutes explanation. That's it. I will do that with the help of a small story. See if you're understanding. By the time story gets over, rights issue also will come to an end. Let's say we have Dilli Babu. Okay. Dilli is having shares in Yes Bank. Dilli is having shares in Yes Bank. How many shares is having in Yes Bank? He purchased 10 shares. Sorry, 100 shares. He purchased 100 shares when the share was 25 rupees. So if you look at Dilli Babu's portfolio, he has how many shares, guys? 100 into 25. He invested 2,500 rupees in Yes Bank. In some time, Yes Bank is issuing a rights issue. Let us understand what is a rights issue, guys. What is a rights issue? Now, what do you mean by rights issue? Sometimes, let's say, when a company wants to make a fresh issue, they issue shares to the existing shareholders. Let me explain rights before I go there. Why will I make issue to existing shareholders? Let's say you have one company is there. Company wants to give some gift. Okay. They will give gift to some strangers outside, or they will give the gift first to the existing employees. Existing employees. Same way, let's say you want some money. Will you straight away go ask some bank for loan, or first you will ask your known friends and family? Known friends and family. So if anytime you need some money, you will ask your known friends and family. If there you are not getting support only, you will go ask outside to some company randomly. Like that, if a company wants to issue shares and get more money, will they ask, you are all the shareholders, guys. I am the company. Company wants money. Will I ask existing shareholders, or I will ask somebody outside? Existing. So, company, you are already shareholders. Raising money from existing shareholders is called rights issue. Okay, what is rights issue? Raising money from existing shareholders. So, let's say you are the shareholder in Sun TV. I am Sun TV. And let's say one share of Sun TV is priced at 500 rupees. Now, I want more money. So, I am issuing more shares. If I ask you rupees 530 per share, will you give 530 per share? No. In a market itself, it's 500. Why will you pay 530? But I want you to invest. So how much I will ask you? Less than 500. If I ask you to give me 470 rupees per share, you will be more than happy. Market price 500. If you pay 470, you will get more shares. So basically, what is rights issue? What is rights issue, guys? Money from existing shareholders. Okay. Keeping this in mind, Yes Bank wanted to raise money from existing shareholders. So they made an offer to Delhi and to all the other shareholders. They told, for every 10 shares you have, you can buy 1 share. For every 10 shares that you have, you can buy how many shares, guys? 1 share. And 1 share you can buy at how much? 24 rupees. They told you can buy 1 share at how much, guys? 24. Sorry, we'll change it. 24 is too small, too close. You can pay 14 rupees per share. How much, guys? 14. So Delhi Babu has how many shares, sir? 100. Correct. So he can buy how many shares? 10 shares at how much? 14. So he will pay how much? 140 rupees per share. If he wants, he can buy. Not mandatory. Let's say first case, Delhi Babu purchased it. So already he has 100 into 25. Now he is buying 10 into 14, which is 140 per share, which is 140 per share. So totally how much money Delhi Babu paid? First he paid 2000, then he paid 140. How many shares he has totally? 100 plus 10. So the total comes to 2640 is the amount he has invested overall for how many shares? 110 shares. So effectively his share was 25 rupees of. He got the offer for 14. So now all his 110 shares on average, 1 share will become how much? 24 per share. Correct? This decrease is happening because some shares are at 25, some shares are at 14. So it will come in, it will drop. It dropped from 25 to 24 only because for every 100 shares, 1 share. So the drop came to 24. Have you understood till here? That means cumulatively Delhi Babu has now how many shares, guys? 110 shares into 24 shares. What happens generally in the market? The price per share, whole market share price was 25. Now company is giving only to existing shareholders at 40 now. Because company itself is giving at a discount, share price will fall. Generally, it will not remain at 25. It will fall. In this example, from 25, it fell to 24. Are you following, guys? It is a normal behavior pattern. How did you find this 24? 2640 divided by 110, which is nothing but 25 plus 140 divided by 100 plus 10. Correct? So, can you give me the breakup of these numbers? What is 2500 in English? 100 into 25 plus 10 into 14 by 100 plus 10 is equal to 24. Correct? You found this, guys. Let me write this in English now. 100 is nothing but existing number of shares into market price before rights plus rights shares into rights price whole divided by existing number of shares plus new number of shares. existing plus new number of shares. Following, guys. So this is the formula given in the book. We have derived it now. Have you understood? Formula for what? Formula to find this 24. Why should I find 24? I will explain in some time. I will explain in some time. Are you following, guys? So this is 24. This answer is 24. If I do this whole equation, this 24 is called, theoretically it's the price of share after rights issue. I don't know whether it's going to be actually 24. But using equation, it's 24. So this is called theoretical ex-rights price. It's called theoretical ex-rights price. Don't mug up the equation. Following till here, guys. Let's go back to the story. This happens only if Dilli Babu is buying the shares. But is it mandatory to buy 10 shares at 14? Not mandatory to buy 10 shares at 14. So what Dilli Babu is doing, guys, he is deciding not to buy the shares. Why should I buy 10 shares at 14? I don't want to buy. Or when he got the offer, rights offer, he was sleeping, he was in Goa, he didn't reply, he didn't see the offer, he missed the mail. So he decided not to buy. So first option is he accepted to buy. Second option is rejected to buy. If he rejected to buy, how many shares he has left with him? 100 shares only, correct? First he had how many shares? 100. He will have the same 100 shares, correct? He will have the same 100 shares. Now with this 100 shares, now what is the value of these 100 shares? 25 was before rights issue. If he is not buying the shares at 14 rupees, somebody else will buy up. So anyway, the share price from 25 will drop to 24. So he is seeing the market price from 25 becoming 24. So his revised portfolio is 2,400. He lost how much, guys? 100 rupees he has lost. Is he going to be happy? No. So Dilli Babu is going to Yes Bank and telling, hey, Yes Bank, give my 100 rupees. What Yes Bank will tell? Naadu kudukano. Nee vaangala rights issue. So isn't this indirectly company is forcing you to take rights shares? But I don't want to take rights shares. So Dilli Babu is now angry. He is little irritated. And sir, what is this? If I purchase means okay, my revised portfolio becomes 2640. Price can generally will not go up after rights issue. Okay. It will not go up because I'm giving you something at discount. Okay. So now price is 2,400. So Dilli Babu is angry, thinking what to do. In this time, Dilli Babu, let's say he met his friend Naveen. Naveen is not a shareholder of Yes Bank. Dilli Babu was walking on the road, he met his friend. Naveen is not a shareholder of Yes Bank. But Naveen wants to buy shares of Yes Bank. But if Naveen has to buy in the market, he has to pay 25. He wants these right shares. What is the right shares? 10 shares into 14. Who has the right to buy this? Only existing shareholders. Who is my existing shareholders? Dilli. Dilli has the existing right, but he doesn't want to use this right. So what Dilli will tell? See, I have the option to buy shares at 14 rupees per share. That offer letter is with me. That offer I will give you. You buy that. You buy those shares. So instead of Dilli, who is buying? Naveen is buying those shares. How many shares? 10 shares at 14. So Naveen has paid 10 into 14. But what gain is Dilli getting? Nothing. So Dilli is saying, because I am giving you the right to buy 10 shares as 14, I want some money. How much money he will ask? How much, if you are Dilli Babu, how much you will ask? You will ask what? 100. Why you will ask 100? Because that was my loss. 100 rupees vanda podu. So Naveen, what he will do? He will pay 10 into 14 to Yes Bank and he will pay 100 to Dilli Babu. So Yes Bank also is happy. Naveen also is happy. Correct? Naveen is happy because how many shares he bought? 10 shares. How much he paid? He paid 140 to Yes Bank and paid 100 to Delhi. Totally he paid how much? 240. For how many shares? 10 shares. Per share value is, how much is per share value? 24. That means Naveen indirectly paid the same 24 X rights price, theoretical X rights price, but he paid 14 rupees to whom, guys? Yes Bank, and 100 rupees to Delhi. Now look at all the three parties. Yes Bank is happy. Yes Bank ku yaradha share vaangano, either Delhi or Naveen. Yes Bank is happy. Naveen also is happy. He got shares of Yes Bank. Otherwise only existing shareholders can buy. He is not existing shareholder, but he was able to buy. Naveen is happy. Naveen also is happy. Delhi was also happy because he had a loss of 100 rupees. He got 100. Correct? So this concept is called renunciation of rights. Renunciation of rights. What do you mean by renunciation? எனக்கு ஒரு rights offer வந்தா, either I will accept the offer, reject the offer, or renounce it in favor of somebody else. Let somebody else buy those shares. Are you following, guys? Now, if you are Delhi Babu, if you get the offer, which is not a good option? Option B, which one? Rejecting is not good, because if you reject, you will have a loss. So either you have to accept or renounce in favor of somebody else. Correct? Following, guys. So in the question in exam, he wants you to find this 24. That's question. How to find the 24? We had this equation: existing number of shares into market price before rights. This is also known as cum rights price. Also known as what, guys? In our example, it was 25. It's also known as cum rights price. Why it's called cum rights price? Because this 25 share price per share is cumulative of rights. What do you mean by cumulative of rights? The price, if I buy a share at 25, I will get the offer to buy share at 14. Correct? If I buy a share at 25, because Delhi Babu bought share at 25 only, he later got the share option to buy at 14. So the 25 is cumulative of rights offer which I will get in the future. So it's called cum rights price. But if you buy share at 24, will you get option to buy rights shares at 14? At 14 you will get no. This is the price after rights issue. So it's called X rights price, excluding rights issue. Theoretical X rights price. So our agenda is to find this 24 applying this equation. This is the whole concept. Now sum is just 30 seconds. I know I would have spent 15 minutes. Sir, idella okay sir. This is the logic. I always teach with logic. It is easy to understand. In exam, how to do, sir? I want to know the steps. Look at the illustration 5. A company offers rupees 100 each share at a premium at 25% of 100 rupees share at 25% premium to existing shareholders for 1 for every 4 shares. The cum rights price is 150. 150 in our example is 25. Okay. I am giving shares at 100 plus 25% premium. So what is the rights issue? 125 is like 14. Correct? 125 is like 14. He is asking you to calculate two things. Calculate value of a right and what should be the X right market price. Sir, number of shares kudukla, sir. Let me assume for simplicity purpose, number of shares are 1 lakh. Okay. So 1 lakh shares of the market price in this question is how much, guys? 150. 1 lakh at 150. Now how many shares I am getting rights? 1 for every 4. So it will be 1 lakh into 1 by 4. How many shares? 25,000 shares I will get. I will get 25,000 shares. And how much I have to pay? A company offers 100 rupees shares at 25% premium. So I have to pay 25,000 into 125. Let me apply that equation I told you. Existing number of shares. 1 lakh into 150 plus new number of shares 25,000 into 125 whole divided by existing number of shares plus new number of shares. What's the answer? Compute and give me the answer, guys. How much? 140, 145 came up. Are you following, guys? So look at the answer over here, 145. Are you getting it, guys? But sir, they have done a different method. No sir, what is that method? I want to know that. I assume the shares to be 1 lakh. In a question, a number of shares kudukla. You assume any number of your choice. Same thing. Let me assume number of shares are 50, guys. 10 no assume. 10 assume. How I saying 10, sir? So 10 into 150 plus I am giving 1 share for every 4 shares. So 10 into 1 by 4 is how much? 2.5. So 2.5 into 125 whole divided by 12.5. What answer you are getting? If you are assuming 10, are you getting the same answer? Number of shares you assume panna sonna. Assume the number of shares. 145 is coming up. So you can assume any number of shares. It's ratio. 145 is coming. In the book, what they have assumed that company has, they told ratios 1:4. Ratios 1:4. So they are assuming company has 4 shares. So 4 into 150 plus 1 into 125 divided by 5. How much? Same 125. Correct? That's what they have done in the book. Look at this. 150 into 4 plus 125 into 1 share divided by 5 shares. Are you getting it? Any number you can assume even 30,000, 40,000. It's a ratio. It will work. Are you following, guys? Now, let's come back to this. What was the price of rights before bonus issue, before rights issue? Price per share 150. Now the price is, what is the fall? 5 rupees the share fell because of rights issue. Correct? That is called value of right. Value of right is what was the price before and what was the price after. So 1 share fell by how much? 5 rupees. In my question, I am assuming I have how many shares? 4 shares. In the book, you are assuming 4 shares. So if 1 share fell by 5 rupees, if they are assuming 4 shares, 4 into 5, they have to pay how much? 20 rupees. This 20 only is what Naveen will pay to Dilli Babu. In our example, it was 100. Correct? 10 rupees per share. My loss was 10 rupees per share. Are you following? How, sir? In our example, 1 share was 25. Later it became 24. So my loss is 1 rupee per share. How many shares? He had Dilli Babu had how many shares, sir? 100 shares. Dilli Babu had 100 shares. So if I come back to this example, I told you Dilli Babu had a loss of 100. What is this loss of 100 which Naveen paid? Nothing but the price per share of Dilli Babu was 25 before. It became 24. So Dilli Babu is losing 1 rupee per share. He is totally having 100 shares. So he needs 100 rupees recovery which Naveen paid. Correct? That's why he paid 100 in our example. Are you getting the logic? Same way in this question, 150 was per share, it became 145. Loss per share is 5. In the book they assumed 4 shares, so 20 rupees. If you have 1 lakh in our thing, 1 lakh into 5 lakh should be paid. Are you following, guys? Understanding the logic of this equation? Same thing, only one sum is there. Let's see if we have any practical questions. It's there. Practical question 4. Can you all quickly try this? I will also solve it just for practice. In exam, you have to do 2 things, guys. Very simple. In exam, what you have to do, I'll give you context. First, you find that 24 in our example, applying the equation. Next you do 25 minus 24 value into number of shares. That's it. That's all for exam. Quickly do question number 4. It will take only 30 seconds to do it. In 30 seconds I will start solving and then we will close rights issue. Practice this. It could be a 4-mark question, 3-mark question in main exam. Number of shares is not given. So if number of shares is not given, you have to assume. If you have to assume, better to assume what they go in the book. 1 share for every 2 shares held. So you assume you have 2 shares. That's it. In that question, 1 for every 4. So we assumed 4 shares. Here 1 for every 2. Assume 2. Done, guys. How do we solve this? 1 for every 2 shares. What was the price per share? 240. Issued at 120. Let's do that equation. So existing number of shares, I have 2 shares into 240. Existing number of shares into existing price. Plus now I am getting 1 share into 120 whole divided by 3. How much you are getting? You are getting how much? 200. So value of right will be 240 minus 200, which is 40 per share. You have how many shares? So 40 into 2, it will be 80. Are you following, guys? But in exam you should not write only this. And the English will know. Existing number of shares into cum rights price, all of that. So 280 is the answer. Let's quickly check. That's it. 200 rupees and 40 is the value. It became 80. Are you following, guys? But you have to write this equation. This formula I told no. Existing number of shares into cum rights price. Which one? This equation you have to write, which I derived. Are you following, guys? That is the answer. All of you understanding? Better to write. Explain this. 4 marks 4 marks will I get if I write like this? If I write like this, 4 marks kurma. Answer is correct. Same 200, 40, 80. You have to explain. X rights price is 200. Value of a right is 240 minus 200. Correct? What is 240? Cum rights value. What is 200? X rights value. So per share for me value is 40. How many shares I have? 2 shares. So 2 into 40, 80 rupees nee pay pannana, then you can renounce. I told you can renounce the right in favor of the other person. Presentation for 4 marks. Are you following, guys? Easy. Everybody understanding? How many of you studying rights issue for the first time? Understood? Clear? Honestly, with logic? Clear, guys? Online, if you understood, type a yes. If you have any doubts, put the doubts. Otherwise, we will close. Question 5. Practice question 5 should be the same. A company having share capital of 25,000 of share 10 decides to issue rights of 1 for every 4. That means it's going to be 25,000 into 1 by 4, which is how many shares? 6,250 held at par value. Assuming that all the shareholders accepted the rights issue, so everybody accepted, nobody renounced, all the money was received, passed a journal entry. That means 6,250 shares into each share is. Are they face value? He is giving for face value. No premium, no reduction. Everything at 10. So 6250 into 10 is how much, guys? 62,500. I will just pass one entry for issue of shares. That's what they have done. Bank account debit to share capital 62,500. That's it. Understanding, guys? Okay. So with this, we are done with rights issue, guys. Thank you. Okay. Now, we are going to discuss dissolution of partnership, which is a new addition again in CA Foundation accounts. Before you watch this video, you need to understand two things. One, before watching this, I don't want you to have 100% control of admission, retirement, death. ஓரளவுக்கு ஒரு fair bit of idea as to how to deal with partnership accounts. If you know partners, capital, cash account, that is enough. This is a completely different concept. If you have a fair bit of idea, it is enough. Okay. Remember in CA Inter, this partnership was part of advanced accounting where they used to ask for 20 marks straightforward question. So the volume of syllabus added is close to a 20 hours lecture. Okay. There is so much in dissolution. We are going to focus on ICA study mat and address over there. Okay. So if you look at dissolution, let me break down the chapter for you guys. Dissolution, we have first basic plus advanced sums. Okay. Normal dissolution, I'm going to start off with basic illustration 1. Normal, basic and I'm giving you the type of sums that we have in this chapter. Then we also have something called insolvency of partner, how to account. In case of insolvency of one partner, insolvency of all partners. Okay, this is another type of sum that we have. In this, the difference is all partners means everybody is not having money, you can't pay. So what we can do, nothing much can be done. But if one partner is insolvent, other partners have money, how do we share? So for this alone, you have something called a GVM rule. It's called Garner versus Murray rule. So this has in-depth logic, but we will keep exam oriented. Garner versus Murray rule is a rule, it's a Supreme, not Supreme Court, it's a UK court judgment. So if one partner is insolvent and if some conditions are met, the loss should be shared in a completely different method. That is called Garner versus Murray rule. Then we also have same dissolution sums, two unique methods of solving, completely different, no ledger, nothing. Two methods of solving the sum. It's called relative capital method, or one more is called maximum loss method. This is the chapter overview, guys. Type of sums, if you see, unique type of sums. We will have basic one, advanced one partner insolvent, all partners insolvent, relative capital method, maximum loss method. Idea is to try and do at least one sum in each of this. Okay. Are you getting it? All of you with me, guys? Okay. Now, this relative capital method and maximum loss method, I can teach you separately. Someone who doesn't even know partnership accounts can do this because it is not of ledgers. It's a complete new method. In Inter, this used to be a 20 mark sum, and one sum in class itself will take 2 hours for solving. And in the latest mock test paper of June, I think they have asked the maximum loss method was tested. These are lengthy sums. Okay. It is easy. It is not easy, sorry. It is dead easy. But it is lengthy. Very lengthy, but it is very easy. And you should learn that step. Adukku the separate steps we have to learn that. I will teach you steps along with the concept. Okay. Let us start off with one basic sum of dissolution where I will teach you the concept along with the sum. So we are going to go with ICA study math sums only. We can practice a lot of sums, but we are going to first stick to ICA study math sums. Additionally, what I will do once we finish all of this, in the description of the video, dissolution was also part of CA Inter. So when I took my CA Inter class, we solved about 20 sums, not 20, 15 sums in dissolution. Those recordings I will give in description. If you have the time, if you want to practice more sums, you can do those sums. Now we are going to stick to ICA sums. So partnership, and of course, what new addition we have is also, apart from this, they have also added dissolution of LLP where there is only one sum in study mat. That also I will do it. Okay. So we will try and cover all these sums. Let me take dissolution study material. Only one sum is there, correct? Let me know if more sums are there. So we are going to solve one sum in each of this. In each of these model, I will solve one sum. Other sums you will practice. Extra sums I will give you recording below this video. Inter study math sums, everything I would have solved. If you have time, you watch it. Otherwise, this you do enough. Okay. For everybody who is watching the recording. So let me open the study mat. 1 second. You guys open the first one in dissolution. Theory and all you go through, guys. I am not getting to the theory. Straight away I am going to the sum. Relevant theory I will explain when the sum comes. Yeah, okay, fine. Before I go to the first sum, clear guys, I am going to start off with basics, then do 1 or 2 additional sums. This GVM rule is a completely different rule, and then we will go to this, and lastly I will keep dissolution of LLP. Fine. Easy. It's new addition, but it's easy, guys. Except 1 or 2 adjustments, rest is easy. Okay. Now, what is dissolution? Business is closing down. That is one advantage for us, because in admission, partnership is going to continue. So I have to prepare prepare the new balance sheet. In retirement, firm is going to continue. In death also, that partner is leaving, but other partners may continue the firm. But in dissolution sums, business is going to close down, guys. So if business is going to close down, I should prepare a balance sheet where the balance sheet total is 0. I should make everything 0 in the balance sheet. Everything should become 0. That is my target. Okay, are you following? So I will teach you with the sum itself. Okay. So illustration 1 with that itself I will teach you the sum. I will solve the full sum. All sums are the same method, only adjustments will change. Look at this. X, Y and Z are partners in the firm, X, Y, Z and Co. Sharing profits and loss in the ratio 4:3:2. Following is the details of the firm. They are given some familiar assets, familiar liabilities, partners capital, small 2 adjustments because illustration 1, dummy sum. Partners of the firm decided to dissolve the firm on the above date on 31st March. Fixed assets realized 5,20,000, book debts realized 4,40,000. So that is nothing but fixed assets and debtors. Stock was valued at 2,50,000. It was taken over by partner Y. These are the adjustments. He wants, and creditors allowed discount of 5%, expense of realization 6,000, whatever. I will come to that. You are required to prepare realization account, partners capital account, cash account. How many of you studying dissolution for the first time? Here, first time, 1, 2, 3. Online, anybody? Others already studied. Okay, I will tell you the technique. It's going to be very easy. The step 1 in dissolution, idea is to close the books up. Okay, so don't even read the adjustments. Step 1 is transferring what? I'll give the logic over here. The logic is very simple. Let's say you are shifting your house. First, what you will do? You will call all of that, find new house. Old house you are leaving means you will empty the house. Let's say you are shifting the house from Chennai and going to US permanently. Will you take the bed from here and go to US in flight? I will first empty the house, sell all the assets, fan, light, whatever money is left with me, I will take the money and go. Correct? That house owner will tell, hey, before leaving, paint the house. So I will first empty the house. After emptying the house, I will sell all the assets because I can't take it to US. I will take whatever money comes, I will paint the house for him, then whatever money is left, I will leave. Correct? So let me take one dummy balance sheet of a firm. Partner A, partner B. Partner A's capital is 100, partner B's capital is 50. Creditors is, let's say, 200. Fixed assets 150. Current assets 200, 300, 350. Okay. 200. So balance sheet total is how much? 350. Now I am dissolving this firm. I am going to close down the firm. That means all assets I will sell. When I sell this, I might not get the same value. Let's say I got only 300 rupees. Okay. I have to pay creditors. How much? 200. I will pay them. How much I have left? How much I have to be paid to myself? 150. I will share this 100 in the ratio of 1 is to what? 1 is to 0.5 or 2 is to 1. 2 is to 1. I will share in the ratio of 2 is to 1. Are you following, guys? So the idea is sell the assets available, pay the liabilities, balance money I will take. In this process there will be some expense. Yes. Okay. Now, but for doing this, first step is step 1 is close all. That means step 1 is to make balance sheet total 0. So what I will do? I will open 3 accounts. I will open one account called, see, the idea is to sell the assets. I want to know how much I will earn when I sell the assets, guys. So I will open something called realization account. Have you seen this account before? In death? No. Death, yes or no? It's a new account. Realization account means when I sell the assets, how much I will realize. So let me open the 3 accounts they asked in this question. All clear? All fine, guys. So realization, partners capital and cash account. Let me open all these 3 accounts. Let me do the sum in detail. Cash account and capital account. You know partnership means capital should have multiple columns based on the number of partners. Here I have XYZ. So I will have 3 columns X, Y and Z. X, Y, Z. Of course, yeah, you draw it more neatly, guys. Okay. I open the 3 columns, three ledgers I open. Fine. The first step is to make balance sheet total 0. Admission, you will prepare balance sheet after admission. Huh? Correct? Retirement, you prepare balance sheet after retirement. Here we no need to prepare balance sheet because idea is to make it 0. How to make it 0? First, the asset should become 0. Huh? Okay. Asset is having debit balance or credit balance? Debit balance. So if asset should become 0, asset should be debited or credited? Credited. Basics. So for example, let me start off with fixed assets. I want to make fixed assets 0. How to make it 0? 2 fixed assets account 5 lakhs. It becomes 0, but something else should be debited. So a temporary account is called temporary account just for the purpose of this account debit 5 lakhs. So my entry will be realization account debit 2 fixed assets. How much? So I will come here. I will write here 2 fixed assets. How much? Are you following? Like this I will do for all the assets. Next, stock in trade should become 0. So I will write what? Realization account debit 2 stock. How much? 3 lakhs. What is the posting in ledger? 2 stock. How much? Super. Are you following, guys? Next, debtors. I am not selling it. I am making it 0. First time making it 0 for the purpose of formality. So entry will be, what's the entry, guys, now? Realization to debtors. How much? 5 lakhs. So I will write 2 debtors 5 lakhs. At this point, my asset side, all the assets have become 0. Correct? Cash also I can transfer, but he told to maintain separate cash account. So cash account also I will close in balance sheet and I will transfer it back to the ledger. I will write down 2. Balance brought down how much? 10,000. Are you following, guys? So asset side became 0. Balance sheet became 0. I have transferred everything in reverse back to the ledger. Ledger also if I close, sum over. Next to go to liability side. Sundry creditors. I should make it 0. How to make a creditor 0? Debit the creditor. So the entry will be opposite. Creditor account debit to realization account. Entries are not there in the book. Creditor to realization. How much, guys? 3,20,000. So I will come here and write down by creditor, how much? 3,20,000. So at this point, creditor also became 0. Now what is left? Partners, capital and general reserve. This belongs to whom? Partners. So transfer everything to the particular partner account, and profit sharing ratio is 4:3:2. So come to partners capital by balance brought down. What's the value, guys? 4 lakh, 3 lakhs and 2 lakhs. So I will write here 4 lakhs, 3 lakhs and okay, this is capital. Now look at the balance sheet. Everything became 0 except general reserve also belongs to whom? Partners. So I will write here by general reserve. How much? 90,000 in the ratio of 4:3:2. So it will be 40,000, 30,000, 20,000. Are you following, guys? Okay. Basically what's happening, look at this balance sheet. Imagine by selling all the assets, you get exactly book value. It will never happen. You will not get same book value. If you get book value, you will realize 13 lakh 10,000. Creditors will take 3 lakh 20,000. Partners will take same amount. Everybody is happy. Partners get back the same amount. Creditors get back the same amount. Assets are sold. Are you following, guys? Are you understanding? Is it fast? First time, who's learning first time? Someone raised hand. Understanding, you three? So, imagine I get whatever is there in balance sheet. Asset sell panna, I am getting the same value of 13 lakh 10,000. What I will do with 13 lakh 10,000? Pay my creditors, pay my partners, everybody gets the money. Correct? Are you following, guys? That is an ideal scenario where in the balance sheet, in this case, imagine in this case which I gave example, fixed assets after selling you got 150, current assets after selling you got 200. You got how much? That was the balance sheet total. With this 350 you will pay creditors 200, partners will get same 150, everybody is happy. But reality won't happen like that. I will either get more or I will get less. If you get more, we will share it happily. If you get less, who will share the loss? That's it. Partners only. In what ratio? Sometimes you will only get selling this 50 rupees. But creditors are how much? That means partners should bring money to pay creditors. So dissolution ending, only 3 adjustments can happen. Got the exact cash needed, will never happen. Got more cash, partners are happy. Exam, they will not give that. Loss came. So how much loss should partners bring in? Share. That only will come in exam. Okay. Fine. So the first step, sir, all this understood, sir. For me, foundation, logic I don't want. I anyway told the logic to an extent. Exam, what to do? Step 1, transfer all the assets to realization account. Transfer all the liabilities to realization account. Cash to cash account. Partners values to partners account. Even if partner has a loan, will it come to capital account or realization account? Partner loan. Will it come to realization account or partners account? Partners loan. Is it part of capital or is it part of liability? Liability should come where? So it will come to realization account. That's it. Are you following, guys? Partners loan will come to my realization account unless question gives some other details. Are you following? Okay. Now coming to the adjustments, let's deal with it one by one. First, fixed asset realized how much? 5,20,000. So, come down. What is the normal entry for realization of fixed assets? Bank account debit. Realize 5,20,000. So entry will be bank account debit 5,20,000 to fixed assets. Normal entry. Asset of thing, you will write 2 fixed assets. How much? 5 lakhs book value, 2 fixed assets. 5 lakhs, 2 profit on sale, how much? 20,000. Isn't this the normal entry on sale of fixed asset? But I can't pass this entry. Why? You can't credit fixed asset because the account itself is not there. Why? I already closed it and previously we passed an entry. What entry we passed? Realization account debit to fixed asset 5 lakhs. So, if you again credit fixed asset second time, you are crediting fixed asset 2 times and making it a double negative. Correct? So, this is the normal entry, but I can't pass this because fixed assets is already transferred where? To realization account. That means, look at this, fixed asset is there in realization. So, this entry, what I will do, instead of crediting fixed asset, I will credit what? Realization account. How much? 5,20,000. Sir, what about crediting profit on sale? No. You cannot create new accounts in dissolution. Idea is to close. So, whatever profit or loss you get, I will transfer to which account, guys? Realization account. So, what is my entry? Bank account debit to realization on sale of fixed assets. How much? 5,20,000. Post this to realization of. So, I will come here and write by bank fixed assets sold 5,20,000. Now, focus carefully only on the fixed asset part of realization account. Debit side has 5 lakhs. Credit side has 5,20,000. What is the impact? Only fixed asset. What is the impact? 20,000 plus. If difference is there on this side, in P&L, this is profit of. That means this is profit. Are you following, guys? So, I will again repeat. Ignore everything else. My realization account is like a P&L account. It's like a P&L account for you to understand logic. In this account, debit side, you had 5 lakhs fixed asset. You wrote it here. 5 lakhs here. Credit side, just now I wrote on sale. Instead of writing bank to fixed assets, I am writing bank to realization. So, I will write here 5.20 lakhs. So, you have profit how much? Imagine this is not realization, this is P&L. So, on the whole fixed asset settlement transaction, I am left with a profit of 20,000, which is already accounted in this ledger. But I will not compute profit now itself. I will compute profit in the ending. Are you following, guys? Understanding of everybody? Clear? Are you getting it? Next transaction. Book debts was realized for 4,40,000. What is the book value? 5 lakhs. I don't care about book value. What is the entry for? Okay, I should do one more posting. Sorry. So here we did bank realization. How much cash you got? 5,20,000. So go to the cash account. I will write here to realization 5,20,000. So can I write step 1 in dissolution is transfer all assets and liabilities to realization account. Step 2, transfer cash to cash account. Most sums we do it like this. Step 3, transfer capital and reserves, if any, to partners capital account. These are the first 3 steps. In all sums, exam you don't know what to do, do this. You will get 2 marks or 1 mark. At this stage, balance sheet total is 0. Step 4, account for sale of assets and settlement of liabilities using above 3 accounts only. Which 3 accounts? Realization, cash, partners capital. You should not create new account. You should not open new account. Settlement of all assets and liabilities through realization, cash and partners capital account. Why through realization? You just now transfer everything to these 3 accounts. Correct? You transferred everything to these 3 accounts, guys. So settlement also should happen through these accounts only. Just now we did settlement of which one? Fixed assets. Let me show you the next settlement of book debts. Book debts is settled for how much? 4,40,000. What is the normal entry for settlement of book debts, sir? Bank account debit 4,40,000 to what? Book debts. What was the book debts in the question? To debtors 5 lakhs, and you will write loss 60,000. I should not do it like that. I cannot use new accounts because these are closed. My entry will be bank account debit to realization account. How much? 4,40,000. Go to realization account and I will write here by banker to banker. Yeah, by bank. In bracket, this is for what? Book debts. How much? 4,40,000. By accounting like this, automatically loss is accounted. How, sir? Book debts on the focus only on book debts. What I am highlighting. Book debts on debit side is 5 lakhs. Book debts on credit side is 4,40,000. Difference is coming on this side. If this was P&L account, this is loss. That means in both the transactions, first transaction of fixed assets, I had a profit of 20,000. Here loss of 60. Effectively, I am accounted a loss of 40. But I don't have to do every step by step. It is automatically accounted. Are you following, guys? So I will not explain in this detail for each adjustment. Automatically loss gets accounted. I want you to know the logic. That's why I am doing it. Following. Next. Stocks were valued at 2,50,000. This time let's be a little quick. So stock is valued at 2,50,000. That means I sold stock for 2,50,000. What is the entry? Bank account debit 2,50,000 to no stock. You will write what? Realization 2,50,000. Come to the credit side here and write down by bank. Bracket le write down what item. Otherwise, you will not remember what bank it is. How much? 2,50,000. Are you following? What is the loss of stock? 50. Look at this. Debit is 3 lakhs, credit is 2,50,000. So it's a loss of 50. Of course, contra we have to post. Other side we yet to post. So to realization, book debts, to realization, stock 4,40,000, 2,50,000. Correct? Contra posting, double posting of journals. Correct? Everybody understanding till here? Quickly. Next one. Correct. I didn't read the whole thing. You are right. Stock was taken over by Y. So I didn't read the whole thing. Stock was valued at 2,50,000 and taken over by partner Y. So entry will slightly change. So what entry we pass now for stock selling is bank account debit 2,50,000 to realization 2,50,000. Correct? But did I receive bank? No. It was taken over by, if I got the cash, who would have taken the cash? Y. So instead of debiting bank, I will debit capital Y's capital account. Are you following? That means if I debit Y's capital account, what is the meaning of this? If I write here 2 realization 2,50,000, my payable towards Y will reduce. Are you following, guys? Still it's a loss for me because it's still a loss here. Enga varaduna, it will not come in the cash account. So entry is, this is the entry guys. Instead of getting cash directly, Y took. It's like this. Look at this. Sell stock, get cash, give to Y. Instead, he is taking the stock. So no need to pass cash entry. Directly I will pass. Look at this. If you want more detail, bank account debit to realization. Then I will write, when I am paying Y settlement, Y's capital to bank account. Is there a settlement entry for partner? So you will cancel bank and the entry will be Y's capital to realization. Are you getting it guys? Rishi following? So this adjustment is done. I have accounted everything. They are not asking journals in exam. I don't think they asked here. No, if they ask, you will prepare. They are only asking ledgers. Okay. But I will do journals for comfort. Till here all adjustments over. Come down. Creditors allowed a discount of 5%. That means what? Look at this. Creditors I have to pay 3,20,000, but he is saying pay me 5% less. So I will pay him 3,20,000 minus 5%. How much is that? 16,000. So you will get 3 lakh. So I have to pay creditors 3,04,000 enough. So for paying creditor, I will write to bank 3,04,000. Usually you will debit creditor, but now what I will debit? Realization account to creditor to bank 3,04,000. So how I will post this? Come to my realization account. Here I will write to bank creditor 3,04,000. Come to cash account by realization. In bracket, please write down what purpose it is. Creditor 3,04,000. So if you look at the net effect, creditor I have to pay only 3,20,000, but I paid him 3,04,000. So you have a profit of 16,000. Everything will get set off with each other. Next, last adjustment. Expense of realization amounted to. What is the normal entry for expense? Expense account debit to cash or bank. How much? 6,000. Adhe entry now. Instead of debiting expense, what you will debit? Realization account debit to bank 6,000. So I will write here realization to bank expenses. How much guys? 6,000. Come to cash by realization expenses 6,000. All the adjustments you have accounted. So you are coming back to my steps of solving this chapter. I am now at this point. Account for sale of assets and liabilities using above 3 accounts. Now after all the adjustments are done, what should I do next? After I deal with all the adjustments, close realization account and find profit or loss. I told you realization account, each transaction we are getting profit or loss. Remember I highlighted in yellow over here. Now I have done multiple transactions. Now you close the account and tell me overall profit or loss. Go through the sum, find out overall profit or loss. Quickly do it guys. We have the answer of course. How much loss you are getting? 80,000 loss. So I have a loss of 80,000. Apona na business close pandra process la, my partners will get 80,000 rupees less because my assets was not sufficient to pay all liabilities and partners. This loss will be shared by whom? X, Y, Z in what ratio? 4:3:2. So I will transfer this to partners account. 2 realization loss. How much? 80,000 in the ratio of 4:3:2. What is the value for X? How much? 35, 5, 5, y 6, 667 and z is 17,717. 17,000 778. Okay, 778. Okay, now with this process, realization account is closed up. This steps will not change for any sum. Ella sum adhe step now. Only here and there adjustments will change. So 0.6, find profit, transfer such profit or loss to partners capital account. Till this step, all sums same. Basic, advanced, insolvency of one partner, multiple partners, all sums are same. No GVM rule and all till here. Till here, even Garner versus Murray rule sums, same steps. Whatever sums and dissolution that they are going to ask you in exam, except for these two methods. Because these two methods, we ledger prepare panna. We are doing statement. So, for all the other sums, including dissolution of LLP, it's not new. Instead of partnership LLP, including this, for all these, till here, my steps are going to be same. Transfer the profit or loss to partners capital. What will change in the last method is only settlement of partners will change sum by sum. Each sum will have a unique settlement based on the nature of sum. This sum will be simple. Every sum you have to first find the closing balance. How much is payable to partner, but you should not write. What is the payable amount for each partner here? Payable amount for each partner 4,40,000. So 4,40,000. How much? 4,04,000. 445. For Y, here 3,30,000, 2,20,000. This is an easy sum. I understand that, but still 3,30,000, 53,333, and Z is 2,02,222. What is this? This is the amount I have to pay to the partner. A is saying, give me 4,04,000 for dissolution. B is saying, give me some 53,000. C is saying, some 2 lakhs or 2,000 you should pay me. Correct? I am saying, oh, so much money you want. Let me see how much money I have first. So I will check what is the closing balance available. Can you find out what is the closing balance available in cash? 5, 6, 7, 8, 9, 9,70,000. Correct? Just check if, sorry, 6,60,000 only I have. Now, can you total these three? Whatever I shared in yellow here, these three guys. How much is coming if you total all these three? 6,60,000, round off, okay, correct. So what I have to pay the partners is 6,60,000. What I have is 6,60,000. So I will write here to bank, and here I will write down by X, Y, Z. Bank account is closed, capital account is closed. Same will be the solution over here. The same amounts you would have got. Cash account should have a closing balance of similar amounts. Are you following, guys? In this sum, fortunately, the capital account balance and bank account balance tallied. In some sums, there might be excess loss, money may not be available. How do you adjust this and close only will change in every sum. Are you understanding, guys? With this, we are done with the basic sum of dissolution. Advanced also same, but you will have advanced adjustments. We will do that also, or I will give you a recording for that, but we will do. Are you following till here, guys? Easy, huh? Okay. Now, this is a separate concept, insolvency of partners. Let's go to next concept of insolvency. Okay. I'm just trying to find a question where all partners are insolvent. Illustration 2 is GVM rule, guys. Yeah, illustration 2 is Garner versus Murray rule. Question, very, very important for exam. Either this will, if dissolution comes in exam, he will test only GVM rule or piecemeal distribution or maximum loss. Okay. Now what I will do, I can't solve both today. Meaning, either we will do GVM or maximum loss method, one of those two. Let me do another easy sum just for us to get comfort. Let me take dissolution of all partners. So I have already knocked out basics. Now let me go for dissolution of all partners. It is illustration number 3. Question 3. One partner is question number 2. Okay. Let me go to illustration number 3, which is fairly easy. If it comes in exam, you are just lucky. That's it. Illustration 3. Easy one. See, in this, everybody is not having money. Insolvency means what? No, insolvency means I don't have money. In this, all partners are not having money. Look at the question. Amal and Bimal are in equal partnership. The balance sheet stood as follows when the firm was dissolved. These were the assets. Bimal's drawing was so high, so capital came off on debit side. Then Amal's capital, creditors. Creditors is the highest amount. Come down, assets realized as follows. Then the expense of realization amounted to 175. Amal's private estate is not sufficient to even pay his private. That means he is insolvent. Bimal's private asset has a surplus of only, he is also insolvent. He is not saying everybody is insolvent. Indirectly he is communicating. This is the classic case of insolvency of all partners. Are you following, guys? How to solve this? Exactly same as what we did now. Let me solve with the book itself. Okay. What is the first step? Transfer all assets and liabilities to realization account. Assets will go which side? In realization account. Visualize the entry. Realization to asset. So it goes to which side? Debit side. So look at this. Two sundry assets. Two plant and machinery, furniture, data, stock, all of this. Are you following, guys? I am just saving time because we need to understand the sum more than like what to say, doing it. Are you following, guys? Similarly, I will transfer all liabilities. How many liabilities you have? Only one, creditors, 4,800. But what they have done, they have not transferred creditors. So we will do it and we will tally with the book. Okay. You will help me out. In realization account, it's the same, guys. So two sundry assets. What are the total assets? Give me the total assets. 4,000 without the drawings. 4,800. By sundry. Without transferring, he is keeping separately because the question is asking you to prepare ledger accounts. I will tell you the same thing. It's both basically 4,000. Creditors also 4,800. Okay, fine. So assets are enough only to pay the creditors. Okay. Let me open bank account. Let me also open capital account. Both are same. I will tally in the ending. Okay. So we have Amal and Bimal. Amal and Bimal. Ignore the handwriting, guys. Amount is fine. So give me opening balance. Amal has by balance brought down. How much? Look at the question. How much? 750. 750. Bimal has debit side. To balance brought down. How much? 550, correct? So we are doing in the method that we are aware. Both are same. I will explain in the ending. So I have transferred everything. This became 0, correct? Now assets are realized, guys. How much is the total assets realized? 1250 plus 150 plus 400 plus 500. How much are you getting? 2000. So instead of passing single entry, I am passing one combined entry just for saving time. Okay. So my entry will be bank account debit 2300 to realization how much? 2300. So I will go to realization account by bank how much? 2300. Here I will write down to realization 2300. Are you following, guys? Opening balance of bank 200. Sorry. Did you include 200 in this? Include pannala. So I will write down to balance brought down 200. You are absolutely right. Correct. Understanding till here? Do you feel it's fast? Okay. Same thing, but I'm doing the same sum again. Okay. Next, all assets are realized now. Next step, expense is 175. What to do with expense? Realization to bank, it's an expense. So I will write down by realization 175. Here I will write down to bank 175. Correct? All transactions are accounted for. What is the missing transaction made to account? Amal's private estate is not sufficient to even pay his. He is saying he is insolvent. Bimal kitta 200 rupees irukku nu solran. Okay, let's see how to use that 200. Come down. Now, look at this. Look at the bank account. Find the closing balance. How much is the closing balance in bank account? 2000. 2325. At this point, I am left with only 2325. When I do settlement, you sold the assets, correct? But I am yet to settle the liabilities. I am yet to settle the liabilities, guys. Are you following? So, can I pay this full 4,800? No, I can't pay the full 4,800. How much cash I have? 2325. So creditors are not going to be happy. But what can they do? Nothing. Because both the partners are insolvent. Creditors should only go to Tirupati and pray. Beyond that, nothing else they can do. So at this point, I have 2325. Bimal Kenjiketna, he is giving how much? 200 rupees. So Bimal will give another 200 rupees. So let me add that 200 that Bimal gives, correct? So how much my cash now becomes? 2525. Cash account is closed up. This full 2525, who will take? Creditor. So what is the entry for settling creditor? To cash 2525, and I will write realization account. Instead of writing creditor, so I will go to realization account and I will write here to bank how much? 2525. That is the loss of creditor. Can you see, guys? Creditor na pay panna vendid 4,800, but I am able to pay him only 2525. Are you getting it, guys? Hello? Now all the transactions are accounted. Can you find out realization profit or loss? Loss, how much? What's the loss? Two 125, correct? Can you check, cross check once? Total this minus this. 400. That's why I was waiting. Total level over there 7,000. 7,000. So I have a loss of, what does 400 represent? 400 says this is my loss. This loss will be transferred to whom? Partners capital, correct? So loss will come on debit side. So now if you go back to the solution over here, we will find that same 400. Look at that. Okay, let's go to partners capital itself. I will write down here 2 realization loss. How much? Equal partners, 200, 200. So balance brought down was 750, 550, correct? 750, 550. Realization loss, can you check it once, guys? Oh, we did a different way, correct? Yeah. What is the total of this? No, 587 plus 1688. 2275. Okay. Check this correctly. Yeah, okay. Got it. Yeah, correct. 400 is the loss. So you are transferring this 400, 200 and 200. This is the loss on settlement. Now follow very carefully. 4,800 is the amount of settlement, the amount to be paid, but we actually paid only 2525. Can you tell me that difference? 4,800 minus 2525, how much? 2275. Now if I leave it like this, you will cumulatively tell my loss is how much? 400. But is that my loss? No. Loss is 400 if creditors have agreed to take 2525. But they have not agreed to take 2525. You were supposed to pay them 48. Did he give you a discount? No. If you leave it like this, 400 is like a discount. So the actual loss is 2275. That's why in the book what they would have done to avoid confusion. So the total loss will now be 2275 plus this 400. How much you are getting? 2675. Now you add, yeah, so look at this. 2275 is the loss of creditors. That is the 2275. And apart from that, you will not have any other loss. Look at this. Look at this. If I continue in this method, forget that 2275. In this method, if I close, here you will get A and B. 750 minus 200, you get how much? 550. For B, you will get 750 on this side. That okay. And who brought money? B brought money, how much? 200. So the 200 will come here. Entry will be bank to B's capital. So 200 comes here. So now the balancing figure will be how much? No. 550. Correct. So let me again explain this ledger for everybody. Opening balance is 750, 550. In our method, realization loss is 200, and the money brought in by B is 200. If I close the account, it shows that A should be paid 550, B should be bringing in 550. So B will pay A 550, some will get over, correct? But that is not correct. Why? This is not the actual loss. The actual loss is 2275, which I was not able to pay. That's why in the book for this case, in case where all partners are insolvent, what they will do, creditors will be kept in a separate account. So what they have done, they have transferred everything to realization account except creditors. So you will get a different loss which will be transferred to partners, and then creditors in the 2275 loss only will be transferred to a separate account called deficiency. What does 2275 mean? it is a meaning that this much was unable to be paid by the partners. If they were solvent, Amal would have brought in 587, Bimal would have brought in 1688. Are you following the difference, guys? If you do it in this method also, it's fine. This extra 2275 loss, I will account over here. I have to account over here. Then it will tally. Are you following, guys? The 2275 loss, what is the share per each partner? Equal, which is how much? 1337, 1337, 1137. So if I write let me explain. Okay. Now 2 creditor loss. How much? 1137, again 1137, correct? So in our, you everybody understood our method, guys. In our method, what we missed to account was the creditor's loss, which was additionally 1137, 1137. Now if I place this here, now can you find the balancing figure for both the partners? Hopefully it should come. Here how much you are getting? 587. Here 550 plus 200 plus 1137 minus 200. 1687. It's tallying with our book, guys. 587, 1687. Are you following now? Now you're getting the tally. The difference is, if we do in our method, everything is perfect. Realization loss is 400. You would have missed out on this. So this loss also, if I add here, now you get 587, 1687. Now are you able to sync both, guys? Yes, you can do this. Absolutely, you can do this. And this you should transfer where? Deficiency account porter. This will be transferred. You can absolutely do this. Are you following, guys? Understanding? Are you getting it? Do it in the same way. In fact, I do all sums in the same way. I will do the adjustment only in the end, in the capital account. If you get that logic, okay, this one loss. Why I am taking this loss? This is not a discount for me. Are you getting it? Genuinely understanding? Anybody wants me to explain again? Hurry, not following. Sure. Paatha apdi therliye. Rishi, sure, able to follow. Okay. So deficiency account is one type of sum. This is the only sum that we have. Even in CA interclass, this is the only sum I have solved. They same sum for last 10 years, it's there in study mat. But they have not tested so far in exam. If it comes, very simple, and the loss will be transferred to deficiency. High given following are sure. Understanding, guys? Girls following. I'm doing the same method, connecting with what's there in book, because book you have understood anyway. Online following, guys, can I proceed? Just give me a quick confirmation if you are still watching the class. Okay. Fine. Now what we have left majorly in this chapter for our foundation is, in insolvency, I told there are two types of sums. One is insolvency of all partners, which we finished. So what is left is GVM, and then this other method, piecemeal distribution and maximum loss method. Each of these will take time. That I will do in the next part of the video for recording students. So you just, this is the basics, look for the next part. Okay, hi guys, let's start off. Now today we are going to learn Garner versus Murray rule in Dissolution of Partnership, CA Foundation, new syllabus. If you look, if dissolution at all comes in the exam, the tricky areas is only the piecemeal distribution or Garner versus Murray. Rest of the sums are basic. So today I am going to teach you Garner versus Murray rule using illustration 2 of our study mat, which is a very much worthy exam question for minimum 10 to 15 marks. Okay, fine. What do you mean by Garner versus Murray rule? This is nothing but, we call it sometimes as GVM. GVM na bare meaning it will have. Okay. This was a case in not Indian Supreme Court, in UK court between partners for settlement. Okay. First I will give some theory notes. The sum till the last step remains the same. So what I will do, the theory part I will teach in the ending. I will give you notes. GVM, we have some notes in the book. Can you see these 4 points? My work is to ensure that by the end of the sum, within the next 45 minutes, you understand these 4 points and you summarize. I will summarize and give you the points. But let's start the sum, because the GVM application comes in the sum only in the last step, last stage. Rest of the sums are, steps are same. So rest of the steps, just like dissolution, step 1, transfer assets, liabilities, we are going to do that. So let's do illustration 2. I am going to do it. Look at the question. P, Q and R were partners sharing profits in 3:2:1. No partnership salary etc. is allowed. Balance sheet is as follows. There are two types of capital, fixed capital and current capital. They are given both capital. In GVM, we will mix both. I will tell you the logic later. And then you have assets and then you have some liabilities. R's current account is showing a debit balance and there's a P&L debit balance also. On 1st July, the partnership was dissolved. Motor vehicle was taken over by Q at the value of rupees 500. No entry was passed, so we have to pass the entry. Assets realized as follows. Creditors were paid so much, cost of dissolution. Then loan from P was repaid. P and Q were fully solvent, able to bring in any cash, but R was forced into bankruptcy. When will GVM rule come? First, if there are three partners, P, Q and R, if all partners are solvent, this will not come. Because if all partners are solvent, they will bring the money. If all partners are insolvent, I did a different sum. Illustration number 3 we did, deficiency account. That is also easy. GVM comes if any one partner is solvent and remaining are insolvent. This case also it's easy because Q and R is having loss. P will share the loss of Q and R. But in this sum, who is insolvent? Only R is insolvent. So where one partner is insolvent, this fellow's loss, he is not able to contribute. How will the others share that loss? That decision is given by GVM. That means we have to first find that loss up. That will come only in the end of the sum. So application of GVM happens only in the end of the sum. Somebody who wants only that can go to the end. So let's start the sum as a normal sum, guys. We have to prepare 3 accounts. They are asking us to prepare cash and bank, realization, partners fixed capital after transferring. That means that they are asking you to mix both the accounts. So let's prepare both all 3 accounts. Realization account. Then I will prepare cash account. Capital account you will draw P, Q and R. Fine. What is the first step in dissolution? Even if you don't know GVM, how to get marks, till the ending you can go. What is the first step? Transfer all assets, liabilities. The first goal is to make the balance sheet total 0. So first let's do that. That is easy for any sum. How much ever complicated sum, the first step you can do and get 1/3 of the marks. Or at least 10 mark question, 2 marks you can get by transferring all assets, liabilities. So what are all the assets here, guys? Assets how much? So I will write one by one. I will write the total, guys. So 2 fixed assets I will write. What is the entry? Realization 2 assets. So I will write down 2 trademark, 2 freehold property. Trademark is how much? 40. Freehold property is 8,000. Next asset, 2 plant and equipment 12,800, 2 motor vehicles 700. 2 plant 12,800, 2 motor vehicle how much? 700. 700. 2 motor vehicles 700. Fine. Any other asset is there? Yes. Current assets. So I should write 2 stock, 2 debtors. Bank alone I will not write. Correct. So 2 stock 1,000, 3,900. 2 debtors. Now next question. Debtors, should I write 2,000 or 1,900? If you write 1,900, how will provision account be closed? So you should write this side 2,000, provision this side 100. Then only account will be closed. Correct? So 2 debtors how much? 2,000. Provision when we go to liabilities, okay, let me write now itself. By provision how much? 100. Are you following, guys? Okay. Are you understanding? How do I close the asset? Asset should be credited. If asset is credited, what to debit? Realization account. So entry will be realization to asset. Next. Miscellaneous losses, we will come to that. We will come to that. Go to liabilities. In liabilities, you can see loan from P 8,000 by loan from P how much, guys? 8,000. Next by creditors 12,400. Following, guys? Okay. By creditors 12,400. Fine. So I have transferred all the assets and liabilities. Next, transfer the cash. Cash is how much? 200. So I'll write down 2. Balance brought down how much? Cash 200. We'll come to the miscellaneous items later. Go to capital account. First write the fixed capital. First write the fixed capital by balance brought down how much? 20,000, 20,000, 10,000. Next, current account by balance brought down to balance brought down. What is current account balance? 500, 900 or 400 on the debit side. Correct? So write all of these. Open the account, transfer accordingly. Done, guys. Transfer everything. Hurry, getting it. Now at this point, if I look at my balance sheet, everything is closed up. Assets are closed. Here fixed capital is transferred. Come down. These things were transferred, current asset is transferred, current account is transferred, creditors is transferred. Our current account also is transferred. What is still pending? P&L debit. How much? That should also be transferred up. To whom? PQR in which what ratio? In the profit sharing ratio. What is the profit sharing ratio given in the question? 3:2:1. So how much is 12,000 in the ratio 3:2:1? 6,000, 4,000, 2,000. Are you following, guys? So I will transfer 6,000, 4,000 and 2,000 to which side of capital account? So I'll write to P&L debit 6,000, 4,000, 2,000. Are you following, guys? So far, no application of GVM. Any dissolution, basic, advanced, insolvency of all partners, whatever sum, dissolution is the first step. இங்க வரைக்கும் பண்ணிட்டனா ஒரு 10 மார்க்ஸ் சம்ல ஒரு 2 or 3 marks they can give. 2 marks you can expect maximum. Okay. Sweta, understanding? So now I have transferred all the capital related balance to capital account. Cash account is kept in cash account and realization is transferred to realization account. At this point, just to again reinforce, what is the balance sheet total? 0. Balance sheet total became 0 because I transferred all the respective balances to the respective accounts. Only these 3 accounts. Are you following, guys? Anybody has any doubt till here? Hello? No. Okay. Next. Let me go to adjustments one by one and deal with these adjustments. Because only, see, after finishing all the adjustments only, that method itself will come. Now, from here only adjustment starts because balance sheet got over. First adjustment. On 1st July 2022, the partnership was dissolved. Motor vehicle was taken over by Q at a value of 500. No cash entry was passed. That means motor vehicle in book, what is the worth, guys? 700. That which partner took? Q was smart. In the business like asset if I sell, when money will come, when I will get. He told, hey, can I take the bike? Everybody agreed. So he took off the bike. By reducing his share by how much? 500. So what will be the entry? If partner has taken over an asset, see, normally when you sell the asset, motor vehicle, entry is going to be bank account debit 500 to motor vehicle 500. What is the book value? 700. So loss will be, this is the normal entry, but I won't pass this in dissolution, correct? What I will pass? Because everything is already transferred to realization, if motor vehicle is sold, I will pass bank account debit to realization 500. But did I get the money? No. Who took the motor vehicle? Partner. So instead of debiting bank, what I will write? Q's capital. His share is reduced. So entry will be Q's capital to realization. Are you getting the logic for the entry? In the entry ko GVM rule ko samandham illa. This can be a separate entry in any sum. So, if partner takes over the asset, entry is partner's capital to respective asset. No. Partner's capital to realization account because it's dissolution, already asset transferred, correct? So if I will show that 200. Sir, what happens to 200, sir? I want to know. Come here. In partner's capital, he took the asset. So I will write here. To realization, how much? 500. Correct? I will go to realization account. I will write down by Q's capital 500. Correct? Now at this point, look at the realization account and look at only motor vehicle. Motor vehicle's book value was 700. I was supposed to get 700, but I got. So my losses, it's already accounted here. Correct? When I close this account, what you will get? 200 loss. It's included in the other items. Are you following, guys? Same thing I told you in the first sum also. Correct? Are you understanding? This is normal dissolution. Next, come down. Super. They have given details of each asset how much they have realized. Can we save time? Total all of this, how much? 16,000. So can I write one combined entry? Bank account debit to realization 16,600. I actually have to write separately. Bank account to realization 0 for trademark. Bank account to realization 7,000 for freehold property. Tanitanya eldunu, I am writing combined just to save some time. So I will write here by bank. In bracket I will write all assets sold or realized. How much? 16,000. In exam you should do separately. Okay. Half mark varum. Pannidala adha prashna kedaidu. Pannidana sir, fast ah pannidana. In cash I will write here 2 realization how much? 16,600. So make a note till here in realization and cash. Done guys. Hello, done guys. Next, go to the next adjustment. Below this dabba, we'll go one by one. Trade creditors were paid 11,700 in full settlement of their debts. That means I paid full trade creditors, full settlement how much? 11,000. I should pay them how much? 12,400. Instead of paying them 12,400, they are asking only 11,700. That means it's a gain for me. What is the entry for payment of creditors? To bank, how much? 11,000. Normally I will debit what? Creditors, but now I will debit realization account 11,700. So in the debit side of realization, I will go here and write down to bank, how much? 11,700. In bank or cash account, I will write by realization account, how much? 11,700. Discount. Because of the word full settlement, they have given discount. This is the posting. Done guys. 11,700, 11,700 on both sides. Fine. Now look at realization account. Only look at creditors. Creditors on credit side is 12,400. I should pay 12,400 off, but I paid only. That means the gain is already accounted here. So here gain, there loss, here gain, there loss, total will be net. Okay. Are you following guys? Fine. Look at the next adjustment. Like this, ella adjustment to mudikanum guys. You should finish the adjustment, but you should not close the ledgers. Okay. Next. The cost of dissolution amounted to rupees 1,500. What is this? Expense. This time I won't write the entry. Let's do in the mind. Normally entry for expenses. Expense to bank. How much? 1,500. Expense to bank 1,500. This time realization to bank how much? 1,500. So entry will be to bank 1,500, and in cash I will write by realization 1,500. Correct? I told you in the previous sum, in bracket we have to write the nature. Correct? Otherwise it will look confusing. Realization, realization, realization. What is what you will not know. If the sum tallies, it's okay. If the sum doesn't tally, you have to come back and check. அப்போ உன் ஆன்சர் உனக்கே குழப்பம். அப்போ எக்ஸாமினருக்கு எப்படி இருக்கும்? If you yourself don't understand which is what, how will the examiner know? So what you should do is you should write by realization. This is for creditors. This is for assets. This bank is for creditors. This is for expense. So what happens? If at all it doesn't tally, you will also have clarity, and examiner also will have clarity, and marks also will be with clarity. Okay, fine. Yes. B's loan is, we'll get there. B's loan, yeah, it's going to come. It's coming next. Next, the loan from P was repaid. I have to repay loan. What is the entry for repaying loan? Loan to bank. But here loan is already transferred to realization. So entry will be realization to bank. What is the value of P's loan? 8,000. இங்க ஸ்மார்ட்டா பாத்தீங்கன்னா இந்த P என்ன பண்ணிருக்கான், கிரெடிட்டார்க்கு டிஸ்கவுண்ட் வாங்கி அவன் ஃபுல்லா வாங்கிட்டான் லோன் 8,000 rupees. So entry will be by realization 8,000. What is it? P's loan. In realization I will write to bank loan 8,000. Are you following, guys? Paying P's loan. Hi Griva, understood? All the created creditors also. Okay. So look at the meaning of this, guys. Look at the meaning over here. Creditors was 12,400 was payable. I paid 11,700. So we got a gain of, but Q's loan, P's loan, payable to him was 8,000. I paid 8,000. So no profit, no loss. Got it? First 8,000 on the credit side is transferring the balance. Second 8,000 is the payment to him. Are you getting it, guys? Clear? Clear? So ensure, I'm just showing the realization account. Ensure your account looks like this. Then I will go to cash, then I will go to capital. Ensure you've noted all of these. Your name? Narmada. Okay, following, guys. Your cash account looks like this. And my capital, nothing great. I didn't do any adjustments yet. Okay. Now come down for next adjustment. P's loan was paid in full. Now P and Q are fully solvent and able to bring in any cash. R was forced for bankruptcy and was able to bring only 1/3 of the amount due. Till here the sum is normal. Now only settlement of partners comes. So find out realization profit or loss of. Loss 51,000. Let me cross check with the book. Perfect. Loss is 51,000. So I will write by realization loss 51,000. Everybody cross check if you got that. Same answer we have. And find out the share for P, Q and R also. What is P share, Q share, R share, and write that. Guys, following, guys. Okay. How much you got realization loss? 2. Realization loss of all 3 partners 51,000. How much? 25,500, 17,000, 8,500. Okay. Now we have transferred realization loss. Okay. Till here have you all understood, guys? Okay. Now what you have to do is roughly compute whether each of the partner is having a positive, like is the balance coming on debit side or credit side. The closing balance. Don't write in the notebook, just roughly compute. Credit set for all the three. Credit set for all three. That means all the three partners have to bring in money. Roughly. See, you calculate la P or a column or 31,000 varda approximate. Anga only 20,000. So he has to bring money. Q or a column or 21 kita varda. Anga 20 da irukku. So he has to bring money. Similarly for R also, 8 plus 2, 10,900, anga 10,000. So all three should bring in money. Correct? Correct? P can bring in money. Q also can bring in money. But can R bring money? No, he is insolvent. So first insolvent, how much he is not able to bring, you find out. So what is the loss for him? 900 rupees. Correct? Look at this. You get 900 over here. Correct? Can he bring 900? How much he can bring? The question says, the question says he can bring only, sorry here, R was forced into bankruptcy, he was able to bring only 1/3 of the amount due. So R's due is only how much, guys? 900. He can bring only 1/3. So 1/3 is 300 only he can bring. Correct? So what is the entry for bringing in money by partner? Bank account debit to R's capital. How much? 300. Correct? This entry can be account, guys, as if he's bringing in money. So to bank, how much? Sorry, you're right. To R's capital. R is bringing in money. So bank account to capital. So I will write to R's capital. How much, guys? 300. And I will now write here by, in capital account I will write by bank. How much? 300. Are you following, guys? இது நான் ஏன் பண்றேன்னா ஃபர்ஸ்ட் நான் யாரெல்லாம் காசு கொடுக்கணும்னு பார்க்குறேன். P and Q solvent, எனக்கு பிரச்சனையே கிடையாது. No problem in that. Only Q is insolvent. So out of 900 he can bring only 300. So how much he can't bring? So now this 900 I will change it to 600 is the loss which he can't bring. Correct? Now the question is, this loss should be shared between the other partners. In what ratio? For that only GVM ratio. For that only GVM. Are you following, guys? In what ratio is the question? This loss should be shared between the other partners. GVM rule, I will brief it in the end of the sum. I will give you notes. All the cases, whenever a question has fixed capital, you will use fixed capital ratio. Are you following up? So follow, guys. I will give you GVM theory in the end of the sum. Let me finish the sum. Edukku sir GVM vardana? Till here you would have anyway done the sum. Correct? That 600 rupees loss should be shared by the other partners in what ratio? That ratio only GVM gives a beautiful guidance. That guidance says, if the partnership has fixed, you have to use capital ratio. Even in the maximum loss we use capital ratio. So it's very clear to use capital ratio. But which capital? This sum has two capitals, fixed and current. If fixed is there, I will use fixed ratio. Okay, I will use fixed ratio. Here in the question, what is the fixed ratio? 2:2:1. So between P and Q it is 2:2. So it will be how much, guys? 1:1 now. 300. So how I will share the loss? R's capital debit பண்ணுவேன், close பண்ணுவோம்ல. R's capital account debit 600 to P's capital to Q's capital. How much? Sorry, 300. Correct? This is the sharing of loss. So I will go here. How I will post that? 2 R's capital. How much? Sorry, 2P, 2 Q's capital. How much? 300. Here I will write by R's capital 300, 300. This is the entry, guys. Entry purinjada. R capital 600 debit panni, 2 P's capital 300, 2 Q's capital 300. The narration will be 600 shared in the ratio of 1:1 using GVM rule. That only would have been given note. Solvent partners to bear the loss, insolvency in their fixed capital ratio. I will explain GVM when I get there. Okay. Following, guys. So I have shared. Correct. Hello. Now is R closing? Is R tallied, guys? R account tally aicha. No. Correct only? No, not correct. 1 second. Posting of this. R's capital debit side I will write 2 P and Q. So 2 P and Q 600. Correct or wrong, guys? I think I wrote opposite. Huh? Okay. So I will write, I wrote opposite, sorry. So I will write down by P's capital by Q's capital. In R column I will write how much? 300. This will not come. Here I will write down 2 R's capital 300, 300. Yeah, you are right. Following, guys. Okay. Now is R column tallying? R column is tallying. Just check if it's tallying. 10,900, 10,900. You have to make it tally, guys. That's the idea. Okay. R column tallied. Following. R column is done, guys. Fine. Now can you roughly find out balance in P and Q? Roughly. Which side is the balance coming? Still this side only, correct? How much? P. Okay, some balance is coming on. Some balance is coming, guys. Don't compute. Don't compute that. Don't compute. So, what GVM rule says is, it says P and Q are solvent. You can bring money. What is the loss of realization? 25,500, 17,000. That money you bring in solve. You bring that money. But really they will not bring. It's just a notional book entry. That loss, as if you are bringing the money, you have to pass one notional entry. So what is the loss? 25,500 and 17,000. So my entry will be bank account debit 2 P's capital 2 Q's capital. How much? 42,500, 25, 17,000. Really will they bring cash? No. GVM rule is saying just for the purpose of book entry to nullify the realization loss, they will bring in that money. So I will write here by bank 25,500, 17,000. Are you following, guys? This is the dummy entry. Either you podalanalu sum will tally. How, sir? I will show you. If you don't write this also, if I don't write this also, okay. For a moment, let me not write this. Can you tell me what is the balance over here? Roughly. How much? 11,300. And how much? 1,000. How much you are getting? 900. Correct. 11,300 and 900. They have to bring in cash. Correct. Guys, are you following what I am saying, guys? 11,300 and 900. Okay. Find out the closing balance in cash account. Which side it's coming? 11, 18, 19. Inga varum. How much? $4,100 is the cash needed. That means it's an overdraft state. It doesn't make any sense because how can you pay all the expenses when cash is not available? Are you getting what I'm saying? Unkita cash illa, but you have paid. Look at the book cash account. This sum only. What's the cash account? Yeah. How can you pay? That's the same thing. Okay. So how can you pay cash? You are getting 4,100 on the debit side of cash, and capital account we are getting 11,300 and so much. So how did you pay all these expenses and cash itself is not there? Correct. So for that reason what they are saying, we will do a notional entry in GVM rule as if they are bringing in money. So how much is that? We can erase all of this as if they are bringing in money. But really they will not bring. It's just a book entry. How much is that? 25, 500, 17,000. Now you find the closing balance, guys. Now it will come this side. Find the closing balance. How much are you getting? Find the closing balance. Let's cross check with this account. We wrote these three. We wrote current account also. Realization loss LDH. Current account transfer 5,000. What is this current account 5,000? Okay, net balance போட்டிருக்கோம். Fine, leave that. Okay, அது பண்ணிட்டோம். Car 500 போட்டோமா நம்ம? Just cross checking. By bank we put 300. Then we wrote 2 hours capital 300 எழுதிட்டோமா? Correctly we wrote, guys. Then we wrote by bank money brought in 25 500. Come down deficiency we wrote 600. Okay. So we should get 14,200, 24,200. வரலையா அது? 14,200 is coming. 16,100. What we missed out? Q. Q or a debit? Correct only, no. Just check once. How much? 7,000? But 24,200 they got. How? Can you check the book value if it's the same? 7,200 வருது. 7,200. Can you check in the book? 42,000 is the total. Bookல check பண்ணுங்க கரெக்டா இருக்கான்னு. 20,000 plus 25, 42,000 in book. This 24,200, not 7,200. If you do all these. Do this, guys. I am taking the. I don't have the calci with me. You add 20,000 plus 9,000 plus 17,000 minus 300, 17,000, 500, 4,000. How much are you getting? It's 24,200. Who gave me different answer? You took 9. You thought, oh, sorry, my bad. 9,000. My bad. 9,000. Okay. This is also 5,000. Okay. 5,000 or 500, whatever. Fine. Got it, guys. So you have to pay them how much? 14,224. 500 only. Strike it off. Okay. Cash also we have how much here? 25. 500. 2P. 2Q is how much? 17,000. 25, 500. Now check the closing cash. Check the closing cash, guys. Check the closing cash. How much you are getting? 38 400. Add these both. 38 400 is coming up. 14 200 plus 24 200. That's it. Tallied. Okay. Basically, அவன் இந்த கேஷை கொண்டு வரல, பட் கொண்டு வர மாதிரி ஒரு என்ட்ரி போடுவோம், அவ்வளோதான். Are you following, guys? Clear? So we got this side 38 400. This side also we got 38 400. The sum will still tally if you do the sum without this entry. Without this and without this, if you do, it will still tally with a different closing balance. Are you following, guys? But GVM rule says no, you have to bring in this cash. Are you following, guys? Understanding? How many of you not understanding? Which part? Why should they bring in cash? Because if he is not bringing in the cash, the amount of cash available with me is only 200 plus 16,600 plus 300. But my expense add பண்ணி பாரு எவ்வளவு வருது? More than that, correct? So look at this. If they don't bring in cash, the money available is only 200 plus 16,600 plus 300. Total that in the calculator. How much is that? 17,100. But my expenses, how much? More than that. How do I pay expenses without bringing in cash? Correct? Partners are solvent. I don't have enough money because of realization loss. So for that logic, the Supreme Court says, let them bring in this money, again let them take and go back if anything is left. So whatever is the realization loss, they have solvent partners should bring in. Later, after paying everybody, if money is left, they will take and go home. They anyway took home 38,000 back. Got it? They didn't take the same amount back. Look at this. He brought in 25,500. He bought in 25,500. He took only 14,200. Q bought 17,000. He took 24,200. So basically, one partner கொண்டு வந்த காசு இன்னொரு partner எடுத்து போய்ட்டான். A bought 25,500. B took the bulk of the share. That's why you bring the full money and you do balance it off. Getting it off? Getting the logic, guys? Understanding? Everyone following, guys? Okay. Clear? Now let me explain the theory in GVM rule with the book itself. Okay. Look. Yeah. Copy down this one. Are you understanding, guys? Sure, purida? Illa, handwriting purida nu ketta. Copy pandrathu. Online, have you understood? If you understood, can you type a yes? Type in the chat. Google Meet, if you are still there. Yeah, Google Meet. YouTube, if you are still there, type in YouTube if you have understood. Cash account is this. Understood? Now when you read the study math solution, you will get logic. Okay. So going to the GVM rule now to explain. Follow, guys. Let me use the book itself to explain. Okay. In this capital ratio and insolvency is called Garner versus Murray rule. Okay. I will give you notes also. Right, let's write down. Ending, I told you I will give you notes. Insolvency, all partners, other cases. If all partners are insolvent, we will use what method? Deficiency method. No partner insolvent, normal method. In other cases, some partners insolvent, some partners solvent, we will use Garner versus Murray rule. What is GVM saying? It is asking you to check if the party is fixed capital or okay, in GVM what they are saying, is it fixed capital or fixed plus current account. First let me explain here. In GVM, you can use both fixed or fluctuating capital. Okay. If they are maintaining capital at fixed amount, then all the adjustments should go to, no, if they are maintaining fixed account, adu onnu dhaan irukku. So all the adjustments will go to which account, guys? Through the current account. Let me explain. Okay. Sorry. This side I'll write only current account, correct? Okay. Fine. Only current account. This is fixed capital plus current account. That's the variation you have, guys. Either I have two capitals, fixed and current, or I have only current account. This sum which we solved is what? Fixed plus current. So if it's fixed plus current, very simple. Loss shared in fixed capital ratio, realization loss, same, which they will not bring the loss amount. தேவைப்படாது, அப்போ காசு இருக்கும் businessல. Okay. Follow, guys. I'll first write all adjustments to go to current account. Are you following, guys? Okay, I'm keeping it simple. I'm not going in detail what you need. So insolvency, simple. All partners the deficiency method. No partner insolvency na inga varave varadu, normal method. Others GVM. In GVM you have to see, is the question having fixed plus current account like this sum or only current account? That means only one account for capital. If I have fixed plus current, the loss just like this sum. This is question number 2. Question number 2, the loss shall be shared in fixed capital ratio. Here we saw 600 was shared equally in the ratio of 20:20, 1:1. Correct? All other adjustments to go to current account, we anyway mixed everything in the same account. Which one? Yeah, we can do. That's what they've done in the book also. Okay, all adjustments will go here. All adjustments means like what? Salary, interest, etc. Okay, fine. And you should write here, in case of realization loss, solvent partners to bring in cash equal to realization loss. Correct? In case of realization profit na cash irukku, I don't need, there is no insolvency. Insolvency varadu, loss da varum. Yes. Okay. In case of realization loss, solvent partners to bring in cash equal to realization loss. Understood this sum? So I have given you notes for this sum what we have done. Okay. There are still other variations in GVM. GVM has 3 possible conclusions. This is one possible conclusion for this sum, illustration 2. We will do other sums also, but let me write the note. In case of current account, only is a beautiful adjustment. We have a different sum. I will do that sum. So follow, guys. Capital account na it's like this. Current account na come down. I am writing it down. If it's current account, all step 1, all adjustments to be transferred to current account. That is the only account. Follow, except realization loss. Except we have not done a sum in this. I will explain this once I give the note. See, what I have given you note is for the sum we have done now. Okay, this you understood. GVM has 2 more scenarios. Now I am telling the second scenario. If the question has only one capital account, like this fixed current pirikla sir, one capital na irukku. all adjustments to be transferred to current account. Like what adjustments? In this sum we did some adjustments of like motor vehicle, then whatever this and other adjustments, except realization loss. No, except realization loss or profit, both. Except realization loss or profit. So then step 2, ratio to share loss of insolvent partner. Inga namalukku ratio illa, correct? So ratio is equal to capital closing balance, not opening balance. Closing balance, not opening. Fixed na easy sir, 2020. Capital closing balance after all adjustments except realization loss or profit. Are you following, guys? The logic is realization start பண்றதுக்கு முன்னாடி what was the ratio? Meaning, I'll give an example. If I have capital balance, I will plus or minus my P&L account, plus or minus general reserve, plus or minus salary, plus or minus interest on capital, plus or minus interest on drawings, plus or minus drawings, whatever. I will do all that. எல்லாமே பண்ணிட்டு ஒரு closing balance வரும் பாத்தீங்களா? That balance ratio I will take. But you should not take realization profit loss. Logic, why? Because what was the capital balance before start of dissolution? Because these things are normal items. So I want to find out what is the ratio before dissolution started. Because after dissolution started, ratio will change because of realization. So I want to find the closing balance before start of dissolution. Are you getting it? Are you able to get it, guys? We will do a sum. When we do a sum, you will get proper clarity. This is the most complication possible in GVM. Okay. So now enna pannona in the sum la second sum if it was there, this sum what we did, where is that? Yeah, this sum neenga enna panninga, you took ratio 20,000 off. If only one capital account is there, nee ella transactionum potrunum except this realization. Now you find one closing balance, rough compute pannom on the ratio. In rough you have to compute. Are you following, guys? That ratio after paying adukku ratio in the 600 rupees vandirukla, 600 we shared as 300. In what ratio to share? This sum was 1:1 because of 20k. In the other method, you have to do all the adjustments excluding realization and find the closing balance. What was the closing balance before realization? That ratio I should take. Are you following, guys? Clear? We will do a sum. It's there in the book. We will do a sum. This is how will they ask the question? Sir, how do I know, sir? GVM rule, should I do the previous case what we just did, or should I do this? How we will know? In question, how many capital accounts? If there are two capital accounts, fixed and fluctuating, easy. Ipo panamai. Irukradhe oru capital. This is the only way. Are you following, guys? Understanding? We will put the realization loss after this. After distributing that 600, then I will put realization loss. Suma you will do in pencil in the side and distribute. Correct. Perfect. You have to find one rough closing balance. You should not write there. Keep in calci. Do working note. Getting it up. We will do a sum. Okay. Now below this, common note for both. Common note for GVM. Whichever method. Any GVM method. Common note. Fixed capital, fixed plus fluctuating, anything common. Okay. If a partner is solvent but has debit balance in capital account before start of dissolution. If a partner is solvent but has a debit balance in capital account, negative balance in capital account before start of dissolution, such partner will not share the loss of insolvent partner. I'll explain. Remaining partner. If a partner is solvent but has debit balance in capital account before start of dissolution, such partner will not share loss of insolvent partner. For example, in this sum, look at this. In this sum, all the three partners had credit balance of P and Q are solvent. Imagine at the start of the sum, P didn't have credit. P had fully debit. He will not share the loss of 600. Full 600 will go to Q. No. Leave this two classification. Overall, if I have a debit balance, and even though I am solvent, if I have a debit balance, I will not share. Because already I have to bring money. I will not bring more money. Let me give you some numbers for both of this. Question 3 we finished. Question 4 is one normal dissolution sum where D became insolvent and one partner has debit balance. Perfect. So question 4 is the question which perfect. Question 4 is Question 4 will solve for both cases. In the note one kurthanilla. In the note or application is question 4 plus this second method I told you no. That is also question number 4. So when I do question number 4, you will get more clarity. That's why I didn't give you theory first. I finished the sum, then gave you theory. If you look at the theory, this one you are understanding well because you did a sum. This part you are not understanding because you are yet to do a sum. So when I do the sum, I will explain this part fully. So those who are watching recording, look out for the next part where we will do illustration 4, where I will explain the concept as to why is it like this. Partner with solvent but debit balance will not share the loss. Just to give you a context in this session itself, in this question, if my friend P had a debit balance in capital, he will not share the loss even though he is solvent. That full 600 who will share? Q will share. Why, sir? That only we will see in question 4 with logic. Did you understand question 2? Did you understand the notes related to question 2? That's enough. You understood what to do in the next method? We will apply in the next sum in next class. Are you following, guys? If that sum gets over, that part of dissolution is over. That's it. Clear, guys? Fine. So with this, we will close this session. GVM, one more sum. Once I do illustration 4, you will get full clarity tomorrow. Recording students, look out for the next video. Thank you. Bye-bye. Okay. Hi, guys. Welcome back to Accounts CA Foundation new syllabus. We are in Dissolution of Partnership. Those who are watching this session, please go and watch the previous session first, part 1, where we are discussing basically Garner versus Murray rule. In Garner versus Murray rule, last class we explained the whole concept and we did illustration number 2. End of the class I gave you some notes where I told if a company or if a partnership is having only one type of capital account, then the way you find that ratio for sharing the loss will be different, and I gave you a note also. Note if the partner is having debit balance, how to do that. That is the last complicated sum we have in GVM rule, illustration 4. Let's do this sum. Okay. Look at this. A, B, C, D are sharing profits in the ratio 4:3:2:1. Decided to dissolve their partnership on 31st of March when their balances are as follows. They have creditors so much, employee provident fund, okay. Capital account, unlike previous sum where there was fixed and fluctuating, then it's easy. I will take fixed ratio. Here you have A and B 40 and 20,000. C and D have 3,200, 8,415. Okay. So two partners have debit balance before the sum started. Now, following information is given. We have adjustment 1, adjustment 2. We will come to adjustments in some time. then adjustment 3, for which we have to pass entries. D became insolvent and a dividend of 25 paisa in a rupee was received in respect of the firm's claim against his estate. That means he is able to pay how much, guys? 1/4 he is able to pay. He is able to pay only 1/4. Prepare necessary ledger accounts is the question. Are you following, guys? So as usual, even though it's GVM rule, what type of GVM sum is this? This is a case where only one capital account is there and one partner or two partners have debit balance and one partner became insolvent. Who is that? D. So his loss, he can only bring how much? 1/4. So he can't bring how much? 3/4. What he can't bring, that should be shared by other solvent partners. Who are the other solvent partners? A and B and C. But C has a debit balance, so he will not share the loss. This only I gave as note in the previous class. Correct. According to mutual agency in partnership, all solvent partners should share the loss equally. But this is as per GVM rule, UK court, House of Lords ruling. So court has told he will not pay. What is the logic? See, C already debit balance. Already he has to bring money. Don't ask me more money. He is already in loss with respect to the firm. That was the court ruling. Okay, fine. So as usual, what you should do first in a sum, let's quickly do a sum. Prepare 3 ledgers. What are the 3 ledgers? That's all. Realization account. For first step is to transfer all the items. So let's do that practice. Realization account, cash account, and then partners capital. Who are the partners? So you have to prepare 4 columns on both sides. Quickly prepare that, guys. Okay. Quickly prepare the 4 ledgers. 3 ledgers, sorry, 3 ledgers in your notebook. We'll go to adjustments later. First, as usual, what should you do, guys? Transfer all the assets and liabilities to realization account. Transfer all the partners related items to partner account. Cash, if any, to cash account. So look at this. First, I will transfer all the assets. Bank is 535. So that will go to which account? Cash or bank account. To balance brought down 535. Balance brought down 535. Then data, stock, prepaid, plant and machinery, patents. All these I have to transfer realization account. Quickly I will do it. 2 debtors. I am closing. This you know. What is the entry for closing? We are debiting the realization account and crediting the respective asset. So 2 debtors, somebody help me out. 2 stock, then 2 prepaid, next plant and machinery, patents. What are the amounts? Debtors is 15, 850. 25 200, 800 prepaid, 20,000 plant and machinery, patents is 8,000 is patents. Similarly, I will transfer liability. Common question students will ask is, sir, creditors I will transfer, sir. Should I also transfer employee provident fund? That is also another liability. I will just transfer it as it is. Both will be transferred to my realization account. Idea is to close my account. So balance sheet should become 0. Then what you will do if you don't transfer? I have to transfer. So by creditors, by employee provident fund, by creditors 15,700, by employee provident fund is 6,300. Capital accounts transfer respectively. So capital account sorry, come down here. For A and B, it is on the credit side by 40,000, 20,000. For C and D, it's on the other side. To balance brought down 3,200, 8415. 3,200, 8415. Clear, guys? So I will transfer everything. Quickly cross check. This is how your capital account will look. Opening balance, cash will look like this. Realization looks like this. At this point, balance sheet total is how much, guys? 0. This you will get 1.5 mark if you do it correctly. Okay. Now there are totally 3 adjustments. I have to do all the 3 adjustments one by one. Okay. One of the creditors took some of the patents which is having a book value of 5,000 at a valuation of 3,200. Balance creditors was paid at a discount of 400. We need to understand this in detail. Okay, look at this. The total value of creditors is how much? 15,700. Okay. In this they are saying one creditor took patents at a valuation of 3,000. No, patents book value is 5,000, but he is taking it at a value of 3,200. That means I will split my creditors into 3,200. Another one is no balance creditors 15,700 minus 12,500. Let me explain this adjustment. The total creditors is 15,700. In this, I am splitting my creditors into 2 parts, A and B. Splitting them into A and B. What A is saying, what you have to pay me is 3,200. You are not able to pay me 3,200. So I will take your patents, which is worth 5,000, but I will take for my full due of 3,200. So something worth 5,000, he is taking for 3,200 because you are not giving him cash. So the actual entry for this would have been creditors account debit 3,200 loss to patents how much? 5,000. Here I will write P&L account debit 1,800. I have a loss. Okay. The remaining creditors, they told, I don't want all these patents, I want cash. For you, I will give you a discount of 400. What is the discount of 400? If I reduce 400, he is saying, you better pay me 12,100. For this entry will be realization account debit to bank 12,100. Correct? Actually, instead of realization, you will debit what, guys? Creditors. Correct? Are you following, guys? Understanding this, sir? So we have to pass 2 separate entries for both the parts, both sides. This is easy. This is like a normal adjustment. So I am paying cash of how much? 12,100. Let me do that posting first. So I will write here by, not creditors, by realization. In bracket I will write creditors 12,100. In realization account also I will write down to bank how much? 12,100. To bank is 12,100. Here I will write down creditors. We will go check that. Look at this. 12,100. Are you following, guys? Okay. This everybody is clear? Now what to do with this other part, 3,200 which he took? What to do? I can't pass this. This entry you understood. P&L debit 1,800, creditors account debit 3,200, 2 patents 5,000. Correct? Hello? But I can't pass this entry because creditors is now transferred to realization, patents also SN, realization, loss also SN, realization. Because there is no involvement of bank here, there is no involvement of partners capital. So my entry will become realization to realization 5000, again realization 1800, 3200. So no entry to pass. I will not pass any entry, but still it is automatically accounted. How, sir? If you look at this, in realization, my patents is worth 8000, creditors is worth 15,700. One is on debit side, one is on credit side. One guy took the other thing. One creditor of how much? 3,200 took the patents worth 5,000. So automatically what's my loss? 1,800. It got accounted in the ledger itself without passing any entry. I will pass an entry only if realization account or bank account or capital account is disturbed. Here the entire entry is happening within realization, so I will not pass any entry. Are you following, guys? Clear? Everybody clear? Understanding? Fine. Let's go to next adjustment. There was a joint life policy. Ayo, JLP, sir. JLP comes, I'm getting scared. Partnership, JLP, it will not sit. In dissolution, JLP is nothing. Treat it like another asset or liability. Only in admission, retirement, death, the JLP will continue. Here I am closing. Closed na settlement. JLP of 20,000 not mentioned in the balance sheet. Well and good. And this was surrendered for 4,500. That means how much cash I got? So if you get cash, entry will be bank account debit 4,000 to what? Realization, no JLP account, to not even mentioned in balance sheet. So to realization 4,500. Are you following, guys? Yes. Premium? Nothing to do. Not mentioned in the balance sheet. So you never accounted it now. That if I settle, basically, I thought my assets was so much, but without my knowledge, there was one more JLP worth of 20,000 which I didn't account. Surprisingly, I got 4,500. Happily take it. Don't ask any question. Bank account debit to realization account. That's it. Okay. Are you following, guys? So my entry will be by bank 4,500. In cash I will write to realization JLP 4,500. JLP is easy, guys, not like admission. When you settle, how much you are getting, that's it. Okay. Following, guys, clear? Adjustment 1 is over, adjustment 2 is over. Forget Garner versus Murray rule. These two adjustments can be adjustment in any resolution sum. Are you understanding, guys? Okay. Next, last adjustment. The remaining assets, whatever is there, were realized at the following values. Debtors at 10,800, stock at 15,600, plant and machinery at 12,000, patent at 60% of their book values, expense is so much. Let's pass entry for one by one. What is the entry for debtors? Bank account debit to realization, how much? 10,800. Like this, first let's do for debtors, stock, plant and machinery. I'll explain the balance after that. Okay. Fine. So I will write here. By bank, I am combining the three, guys. I am combining the three for simplicity purpose. Which three I am combining? Debtors, stock and plant and machinery. Can you combine in exam? No. Classroom purpose I am combining. So 10,800 plus 15,600 plus 12,000. How much are you getting? 38,400. So I am passing one combined entry. Assets realized 38,400. Come down here in cash to realization asset 38,400. Are you following, guys? So to realization of asset 38,400. Super. Next, now come to the last two adjustments. Patents at 60% of their book value. Follow very carefully. What is the value of patent in question? 8,000. How much creditors took? 5,000 worth he took off. So how much is left? 3,000. In that 3,000 I am getting only 60%. How much is that? 1,800 only patents gave. So entry will be bank to realization. How much? 1,800. So I will write down. Write with me guys. By, sorry, here 2. Realization patent. How much? 1,800. And in realization I will write down. By bank 1,800. Correct or wrong? Correct. Are you following guys? See, patent totally was 8,000 in books. In this our creditor friend took 5,000 for some other value. So I am left with 3,000 into 60% is what I am getting when I sell. So I got 1,800. What is the doubt in this? Patent full away? If the creditor took the full 8,000, then this adjustment will not come. If the adjustment still comes, creditor took the full patents and then they are saying balance realized 6,000, question drafting error. Okay, only because there was still some patents left, the balance is sold for 60%. Next, the expense of realization amounted to 1,500. What is the entry for that? Realization account to cash or bank. How much? 1,500 given in the question. Instead of 1,500, if you write 1,800, what will happen? Some will tally, but you will not get marks. So, by realization in bracket expense 1,500. Here I will write realization what guys? To bank realization expenses 1,500. So far what is the involvement of GVM rule here? Nothing. Normal dissolution sum. Okay. We have done everything. Now all the adjustments are over. Now we have to find out what is the loss, what is the profit, all of that. Correct? Correct guys. Now follow. Once go and check in the balance sheet. Is everything which is transferred to realization settled? Debtors is settled. We got realization. Stock was realized. About prepaid they spoke anything? No, they didn't speak anything about prepaid. Plant and machinery we realized? Yes. Patents we realized? Yes. Liabilities are also creditors we paid off. But this employees provident fund 6,300, nothing is given. Can I leave it like that? No. It is a liability it's on the liability side. Employees provident fund is a liability which I have to pay. So I have to make the payment now, even if question is silent. What is the entry for paying liability? Realization account debit to bank. How much? 6,300. Are you following guys? Sir, I will explain again. If question is saying liability need not be paid, it's a gain for me, but I have to account it. I will tell you why. Look at this. If you don't pass that entry, credit side I have a 6,300, debit side nothing is there, then it leads to a gain of 6,300, which is not correct. They have nowhere told PF need not be paid. I have to pay, so the entry will be in cash account by realization employees provident fund 6,300. Here I will write to bank employees provident fund 6,300. Are you guys following? Are you understanding why we are doing this? Sure? Okay. Prepaid expense. Now what will happen to prepaid expense guys? Now prepaid expense, they have not given any adjustments. Can I assume I have realized prepaid? Can I assume I realized prepaid? No. So here they have assumed that prepaid is basically gone as loss. See, prudence concept. Liability I have to pay. So I am assuming I am paying liability of 6,300. I can't assume 800 is recovered, because what is recovered is specifically given. The remaining assets were realized as follows. That means prepaid is not realized, loss. If you look at the realization account, Prepaid is accounted on the debit side at 800, nothing on the credit side. That means it's a loss. Are you following? Now can you find out the closing balance? Is it loss or profit? How much you are getting? Are you getting the same amount in what you did? Book we are getting 2350. See here, are you getting 23,050? Total I don't want to know, leave it. Okay, you do in notebook, guys. After doing all of this, okay, give the total. How much you are getting? 89,000. 89,750. 89,750. Rishi, understanding? Done, guys. This loss will go to which partners? 4 partners. In what ratio? The 4 ratio. What is that? 4:3:2. So can you split in the ratio 4:3:2:1? Write it, but don't write in capital account. Compute and keep it. Compute and keep it. 4:3:2:1. Please compute and keep it, but don't transfer. Okay, following, guys. Hello. Now don't write, you compute how much ever you got for the realization loss between the 4 partners. Compute it, but don't write in capital account. Now come to capital account, guys. Who's insolvent? D. What is the loss of D? 8,415. But how much he is able to bring in? They told he can bring 25 paisa in a rupee. 1 rupee has how many paisa? 4 paisa. 1 rupee, I think 100 paisa only, no. So he is able to bring 25 paisa. So 1/4 he can bring. So how much is that? How much is that, guys? 2103. Let's check. Hold on 1 second. 2103. They did 2680. Not only I'm checking. Can you do 8415 plus 2305? How much? 10. In this, can you do 25%? 2680. Why did they take this? Only solvent partners having credit balance has to bear the loss. That is fine. He will bring his share of loss in cash. Okay. They have considered realization loss and then they are doing the share. But as per the provision, if you see, if capitals are not fixed, all transactions drawing profit or pass through capital accounts should not exhibit current accounts. Will determine after all adjusting all reserves, accumulate profits to the date of dissolution, all drawings, interest to the date of dissolution. But before adjusting, this is the provision. But before adjusting profit or loss on realization account. But here what they have done, they have adjusted the realization account, which is against the principles of Garner versus Murray rule. What they have done here is Purila. They are not following GVM principle, but you should not do like that. See, avana pannirukanga normal sum mari realization loss debit panni, the total loss comes to 10,720. In that 10,720, 25% he is able to bring a D. So by bank recovery is how much? 2680. So if you reduce 2680, what is the balance loss? 10,720 minus 2680. How much? 80. This 8040 is the deficiency of, who will share this? A and B, correct. So A and B will share this. They will share in the capital ratio before realization. Perfect. So let me explain. So let's write the, I'll explain guys. Okay. Let's write the realization loss. 2 realization loss. How much? A's share is how much? We are right. Book is also correct. We are also on the correct track. Notes also nothing to change. Let me do the sum. What is the loss for all the 4? 9220, 6915, 4610, 2305. Let me explain from here. Okay. 2305. What is the total loss of D? Total this we just computed 10,720. D total is 10,720. In that he is able to bring how much cash? Now follow guys. I am writing realization loss. Let me explain. We will write. I am finding the total loss of D. Total loss of D is 10,720. Adila is able to bring 2,680. Are you following guys? So out of 10,720, he brought in 2,680. How much is the loss now? 8,040. Now follow very carefully. This 8,040 should be shared between whom? A and B in what ratio? In capital ratio. Which ratio? Closing means what you will take? 40,000 minus 9220. You should not consider that. Are you following guys? You should take the ratio before realization loss for those two partners. So before realization loss, what is the ratio? 40 and 20, which is 2:1. I will take 2:1. Are you following guys? This is the other GVM, other part of GVM. I will again repeat. We wrote realization loss for all the partners. Yes, we will write that. For anyway, we will write in capital account. After writing this, I found out these loss is totally 10,720. Out of 10,720, he is able to give me 2680. So what he is not able to give is 8040. The question is, this 8040 in what ratio I will share? That only the provision says. If it's a fixed capital, you will use fixed capital ratio. If it's only one capital, you will do all adjustments in capital account except realization. So you should find what will be the capital balance before realization loss. So without considering these two, you will take only 40,021, which is 2:1. So this 8040 in the ratio of 2:1, how much you are getting? 5360 to 2680. Who is going to share this? A and B. Why C will not share? Because it's already having a debit balance. So entry will be A's capital account debit 5360, B's capital account debit 2680 to D's capital 8040. This is the entry that we will share in for GVM. Are you following guys? Are you getting it? Now you will post this. How you will post? In D's capital, you will write by A's capital by B's capital. How much? 5360 and 2680. Perfect. Similarly, I will write on the other side. Other side, what I will write guys? 2 D's capital. So 2 D's capital in whose column? A and B's column 53602680. This adjustment only is the GVM sharing of loss using the ratio of 2:1 before adjusting realization loss. So our notes say the same. What is our note saying? The loss will be shared in the ratio of the partner's capital before adjusting realization loss. Because after adjusting, what is the logic, sir? After adjusting realization loss, the new ratio is the ratio after dissolution. I want to know what was the ratio before dissolution. Correct, exactly. If there was salary, interest on capital, interest on drawings or drawings, all those things I have to adjust with this 40,000 and 20,000. But I should not adjust realization loss. For example, if there was drawings I will reduce here 5,000. Then the new ratio would have been 35,000 is to 20,000. Are you following, guys? Reserve. If I have reserve, let's say my reserve is 15,000. I will add 15,000 here. Then the new ratio will be 40 plus 15. 55,000 is to 20,000. Are you following, guys? Everything I should adjust except realization loss. Are you following? So you should do a rough working. If at all other adjustments are given, you will do a rough working. Are you understanding? Are you clear? Yeah, correct. For insolvent partner, we have to account realization loss. For other partners, we will not account realization loss, only for the purpose of ratio. Okay. No, in previous sum, we didn't have to worry about this because there were two capital accounts, fixed and fluctuating. So anyway, I will take fixed capital ratio. All the adjustments goes to my current account. Fluctuating. Understanding? Are the notes matching? What was the notes you wrote in the last one? Above the note, what did you write? In previous class, I have to scroll up quite a bit. Yeah, here, this is it. Look at this. Ratio to share loss of insolvent partners, capital closing balance after all adjustments except realization loss profit. That is nothing but capital plus or minus all these things. Correctly we wrote. Nothing to change. Correct? Following, guys. Now with the sum, are you getting clarity? Okay. Now come back to the sum. Now rest of the sum is normal. I told you in GVM rule. What did I tell you? If a partner has realization loss, that much loss money should be brought in by the partners. Correct? Whatever is the loss, you should bring in money, I told her. So what is the loss here? 9220 6915 4610. D cannot bring money. He is insolvent. So these three partners will bring in money. So what will be the entry for that? By bank, how much? 9220. C will bring money for his share of loss. So that note I gave you, look at this. That partner with debit balance, the partner with debit balance where I gave notes, look at this. But if a partner is solvent, has a debit balance in capital account before start of dissolution, such partner will not share the loss of the insolvent partner, but he will bring money for his share of loss. That also is not doing. Why is that? Okay, insolvent partner loss he will not share. So this money he will bring in. How much is that? Yeah, 6915 and 4610. Same thing I will write in capital account, sorry, bank account. 2 A, B and C. Can you tell me the total, guys? 9220 plus 6915 plus 4610. 23050. 18440. How 18,440 came? We are adding 9220 plus 6915 plus 4610. Are you following? The cash that the partners are bringing in. Guys, 1 second. I will add it myself. 9220 plus 6915 plus 4610 in the calculator you have to do it. 20,000. 745. Sure, I can trust now. I can take this time. Okay. These kind of mistakes if you're doing an exam, that's why better actually. Instead of writing total, you write separately, guys. 9220 plus 6915 plus 4610. Okay, fine. Now all the adjustments are done. Can you close the capital account of ABC? See which side balance is coming. For everybody, credit side, huh? A and B, debit side. Okay. How much is coming for A? To bank. For A is how much? Yeah, take your time. Do it for ABC. Total will be 49,220. Correct? 49,220. A's difference is 34,640. For B, order total will be 26,915. 26,915. How much? 17,320. Correct? 26,915 minus 6,915 and 2,680. Let me cross check. Yeah, perfect. 34,640, 17,320. 34,640, 17,320. That's the answer in the book also. Are you getting this, guys? Hello? Getting it? What is the answer for C? C order total is 7,810, 7,810. So his total will be 3,200. So if I look at the answer also for C, the answer will be 3,200. Get these answers, then I will explain how do you close the sum. 3,200. Check if you are getting this, then I will tell you how to close the sum in a minute. All of you getting this, guys? Okay. So now what is the meaning of this? I have to pay A how much? 34,640. I have to pay B how much? 17,320. C has to bring in more how much? 3,200. So C is going to bring more cash. He is not sharing D's loss. I'm not a loss. His loss is bringing more. So how much I will write for C? By bank how much? 3,200 rupees. So in cash account I will again write to C's capital 3,200. Are you following, guys? C will bring in more 3,200. Now can you find closing cash and tell me how much is there? After all the adjustments, add all these properly, slowly you add, minus these, add all these, minus this, and tell me what is the closing cash available. 535 plus 4,500 plus 38,400 plus 1,800 plus 2,745 plus 3,200. 69,180. I want the cash available. So the total is 69,180. So what is the closing cash? 49,280. Correct? This is the cash available. Correct? Okay. 49,280. How much should I pay A and B? 34,640 and 17,320. Can you add these two? How much again? If you add these two, are you getting 49,280? Are you getting it, guys? So I will write here by A, by B. A will take 34,640. B will take 17,320. Cumulatively, they will take so much. $51,960. Check the bank account if everything is there from our note. 535 is there. Then realization. A's capital, B's capital, C and D's capital. This 3,200 you didn't add up. 2680. That we didn't write here. Huh? Okay, so 2D's capital 2680. Now how much you're getting if you add? So we forgot to write this 2680, correct? So bank D got in 2680, his share of 25%. So you will get, now add this 2680 which I forgot to write. Again, these mistakes you should not do, I can do in the class. How much you are getting? 70. 51. 960. Is it matching total now? And the total is 70. The 8. 71 860 is the total. Let me explain one more last time. Okay. So follow, guys. Basically what is happening over here, whatever realization loss is there, A, B and C have brought in that money. After they brought in that money over here, after they brought in the money, I noticed that I have to pay A 34,640, pay B 17,320 and C has to bring in 3,200. So if I go to cash account and write 3,200 for C, we missed to write 2680 which D brought in. We only did one side posting. So total cash available was 51,960 which is nothing but 36,640 plus 17,320. Cash account and capital account will tally. With this sum will come to an end. Following up. Understanding? If you understood, type a yes in the chat, guys. If you have any doubt, now is the time to ask, please. One question from Hemant online is, sir, can I use the notebook as turning it? Because partner has 4 capital accounts. Can I turn it and do? If you turn and do, cash account will be like this. Realization will be like this. Capital will be like this. You are confusing yourself and the examiner. Preferable to do it in the same side. I think it's not hard. 4 debit, 4 credit. Neatly you can do it. If you want to turn, then turn the full sum. One ledger if you turn, or it's okay. If you finding it very hard, then capital account alone you will turn. But just understand, examiner is going to correct lakhs of papers. Your paper alone if you turn, you are making the examiner turn the answer sheet. You want to irritate the examiner or no? You decide that. Yes, Mahesh. Yeah, what I will prefer is in the answer sheet, one side you do debit side, one side you do credit side. That is better. Instead of turning the notebook, if you will have 2 sides, no, middle cut point. So this side you do debit side, this side you do credit side. That is better. So it will be more clean. Got it, Hemant? What I was saying is, this is the notebook, correct? This is your notebook, guys. Here you write debit side, 4 columns. Here you write credit side, 4 columns instead of turning it. If you feel space is not sufficient. Okay. So I hope you guys have understood. Let me know in the chat. Yeah, Google Meet and live. Perfect. Fine. With this, we have completed GVM in full. We have done 2 sums with the full concept. That's all GVM possibility is there. With that, we have finished GVM. Thank you, guys. Okay, hi guys. Let's start off with a unique concept in Partnership Act, especially in dissolution, where we have a concept called piecemeal distribution. Under this, there are 2 methods of solving sums. This was part of our CA Inter, like I said, brought down to CA Foundation, new syllabus accounts. The 2 methods are called maximum loss method and relative capital method. Anybody who's even skipping partnership fully, doesn't matter. These 2 methods are a unique way of solving, and sometimes this can be an exam question. In Inter, any one method will come for one 20 marks question or 15 marks question. Okay. Today we will be addressing what is piecemeal distribution, why we have these two methods, and I will teach you maximum loss method and we will do one sum. I will teach you concept in detail, I will solve it, you will understand. Next sum you do by homework, practice, all sums are the same concept. Okay. Relative capital method you will see in part 2, separate discussion, the separate type of method. Now, let's come to a normal dissolution sum. What do you do in dissolution? Every sum, whether insolvency or not insolvency, every basic sum you will prepare one realization account. First you will transfer all assets over on the debit side, then I will transfer all the liabilities on the credit side, and then you will start doing settlement. Towards the ending, you will see if there is realization profit or realization loss, and accordingly transfer to the partners, and then you will make them settlement in the partners capital account, correct? Now, that means I have to sell all the assets and pay all the liabilities, correct? Only after I do all of that only you will find realization profit or loss. In reality, how long will this take? This process will take how long? Months, years. It takes years. Because imagine this classroom is there, guys. I have chairs, this camera, light, this system, bottle, then lights, AC, all of that. Imagine we have to dismantle this classroom, close it. So we have to sell all the assets. How long will it take to sell every single asset in this? Will I have buyers ready? Hey, they're going to sell the classroom. Come on, chair, immediately I will buy out. No. It will take months, or even classroom might take some months. We will find buyers. But for a partnership company, one big factory with so much plant equipment, it will take years to sell, correct? Then will the partners wait for me to prepare the realization account, wait for 2 years for settlement? That means all the sums of dissolution, inherently it's a wrong concept. In all the sums I am assuming on the same date, you sold all the assets and settled liabilities. Is that practically possible, guys? No. That's the biggest problem. That is why for that problem we have this solution. So basically what we are doing in dissolution, if you see dissolution of partnership, in all the sums you are assuming that on a single date all assets are sold, all liabilities settled, partners are paid, which is not true. In reality what will happen? This day I would have sold the car. This day I would have sold debtors. After 1 year I would have sold the land. Again after 6 months I would have sold the stock. Correct? So different days I will sell the asset. Now two options. Do I wait for selling everything? In the ending I will pay the partners, or should I pay whenever I sell? Proportionately. Ending means how long they will wait. Then who will keep after selling? This money is coming. Who will keep the money? You are saying you pay the money in the ending. I am selling the car 2 years back. Who will keep that money? Can I keep it? Are you getting the point, guys? That means piecemeal distribution means they are saying all assets and liabilities are never sold on the same day. They are sold on different day. So today if I am selling car for 500, irunda kaasa vechu I will give the people. That's it. This 500 I will give to the existing creditors, existing partners proportionately. Then next the debtors gave me 1000. That 1000 I will give to people on those days. Are you following, guys? That is called piecemeal distribution because that's more logical. Now you are understanding the logic, guys. In the piecemeal distribution, there are two ways to account it. Both methods, same answer. Okay. Two methods to account, that is called maximum loss method and relative capital method. Today we are going to see maximum loss method. Okay. For this, there is no particular format. If you look at the study mat itself, two sums, they are written in two different formats. You can do in your own template of working note if you understand the concept. No need to prepare ledger. The idea is very simple. Let's take one question. Let me take illustration 7. Okay. If you look at illustration 7, okay, they are saying the total assets is 48,500, cash is 500. Liability creditors is 2000, A's loan is 5000, Capital account of ABC is 15,000, 18,000 and 9,000. The assets, unlike other sums, we got on different day. First installment I got 1,000, second installment I got 3,000, third installment I got 3,900. Like that, totally I got how much? 34,000 I got. But I need how much? 49,000. That means what is my loss? 15,000 loss. On the face I can find, see, 49,000 is the total of assets. But after selling assets, you got only 34,000. That means I have a shortfall of 15,000 rupees. This loss, who has to bear and when they should bear? But this loss is on the last day of each of this installment is on a different day. How do I account is the question. Are you following, guys? And each stage. So what they are saying, they are making one assumption in this maximum loss method. The name itself gives you the hint. Maximum loss. Okay. They are saying, for example, first in our example, they sold the car. They got how much? Assume after this, you will not get anything else. Assume that rest of all the assets you are unable to sell. Assume that after selling all the assets, I got only 500 rupees. What is the maximum loss I will have? Find out, share the loss. Are you following, guys? So every time you sell an asset and get the money, you have to assume this is the last. It's like saying, sir, this is my last attempt, sir. After this I will pass. We will always assume this is the last attempt. But reality we know. Final, inter, foundation, correct? We will all think June or September or Jan, that is my attempt. But reality we will wait. Like that we will assume, this is the last asset I am going to sell. After this I will not get any money. If this is the last leftover 500 rupees, who will take this? Are you following, guys? That is the method. So I will teach you with the solution itself. You got the overview of what concept they are following. So for this there is one statement, guys. What statement I use in inter or foundation, same in study mat, but little bit here and there they change. I will prepare one big statement. For both relative capital method and maximum loss method, statement is the same. What will change is the working note. Okay. So therefore you get some uniformity for exam. ICA 100% allows this. Don't even worry. So I will prepare a statement like this. Big one, particulars. Then I will write cash in hand. Okay, cash in hand. Then I will write, after writing cash in hand, how many columns? It's a statement. It's a statement. How many columns to open? How many our liability is there? Open that many columns. Okay, if question asks 10 liabilities, 10 columns. Exam they won't ask like that. Here how many liabilities? Creditors and ACE loan. Between those two, whom you will pay first? So write creditors first. Next to whom you will pay? I will pay ACE loan. After paying creditors and ACE loan, next to whom you will pay? I will pay partners. Who are the three partners here? A, B, C. So I will write A, B, C. One column for A, one for B. This is my number of columns. In both the methods, whether it's maximum loss or relative. Okay, same steps. If space is not there, you turn the book like this. That's why in ICA one sum they were done like that. Just to scare you. The idea is, when the minute you saw this, ayo, what is this? You will get scared. Okay. This is how you create your template. Particulars, cash in hand, then liabilities in the order. First creditors, then ACE loan, then ABC. Okay. So I will prepare one table like this. Let's do it together. Of course, my handwriting will be little, you already by now guessed it, but try to manage, get the numbers. First, let me write whatever the balance available. Okay. Opening balance. As per question. As per question, what is the cash? 500. Help me out, guys. You have the book, so you will tell me values. Those who are online, we are solving new syllabus study mat illustration 7. From where they got this question? Same question, CA inter. Inter I used to solve, no for foundation. Okay. So creditors is how much? 2000. ACE loan 5000. ABC 15,000. 9,000. you fill all the opening balance. That is the first step. For this, how much marks you will get? 0, nothing. Now only we are starting the sum. Okay, fine. Next, before the installment itself, I will use the cash I have. I can use the cash and make the payment, guys, correct? So first I am going to write under this utilization. Like this we'll write multiple times. First I am using the cash. This cash minus 500, who will take? Creditors. So creditors also minus 500, rest everything hyphen. Next I will write 2, balance after cash in hand paid. Particulars should be big, guys. You have to explain what is happening. Here it's little small but little bigger. Okay, always it's big. Balance after cash in hand. So after paying the first 500, what you have? Cash is 0, creditors became 1500, rest is the same. So write again and draw one line. Are you following up? So first 500 is given to my creditors. Super. Next, quickly guys. Next, what is happening? In the question they told there is a installment. First installment how much? 1000. So next point number 3. First installment. How much, guys? 1000. So in cash in hand column I will write again how much? 1000. This 1000 who will take? Creditors. So I am trying to mix two columns. I am writing here itself minus 1000. Are you following up? This cash is given to creditors. No sir, I want to write detail. Next line I will write installment of 1000 paid to creditors. Okay, so I will write first installment collected and paid to whom? Creditor. Explain what you are doing. First installment collected and paid to creditor. Next item. Very good, super. Balance after? Excellent. Balance after first installment. Again draw one line. Like this every installment I should do. Okay. Balance after first installment. Cash became 0. Creditors is 500. Remaining items copy paste because I am yet to go there still. Following, guys. It's lengthy and easy. Lengthy and easy, but you should not make small mistakes. Here and there small mistake gone. Balance after first installment. Next you are getting what, guys? Second installment. How much? 3000. So I will write here. Second installment. How much? 3000. Who will take this 3000? Creditors will take first 500. Then balance 2500. Who will take? ACE loan. That's it. So second installment paid to creditor and ACE loan. That's it. Second installment paid to creditors and ACE loan. Next item you can guess. What is it? Super. Excellent, guys. Balance after second installment. After second installment, again draw one line. You write the balance. Cash will become 0. Creditors is 0. So it will be 0 for rest of the sum. Okay. Here it will become 2000, 15,000, 18,000, 9,000. Till here if you do, you will get half mark, 1 mark, 1.5. Depends on how many installments you finish. Next installment is 3,900. Here only we have to be little cautious. Second, third installment. Third installment 0. Sorry, how much? 3,900. Creditor 0. ACE loan 2,500. Don't pay partners yet. Don't pay partners yet. Hyphen, hyphen, hyphen. Okay, so 2500, correct. In the question they also gave, so how much cash is left now? 1400. Okay, 1400. We missed one small thing, we will do it now. Paragraph below, can you see? Expense of realization was expected to be 500, but ultimately amounted to be only 400. That means this expense I should do in the first installment itself. Sir, what is expense of realization? Broker. Say, I am selling all the assets up. One agent will tell, sir, I will find the buyer for you. His broker expense, correct? So broker told how much is fee, sir. So in the starting he told he is going to charge 500, but later amounted to only 400. But initially I thought how much it is? 500. So I will do less expense. How much, guys? 500 also I should do. Less expense 500. This inga panna kodadu actually. Enga pannu? First 500 cash irukla adla pannu. Are you following, guys? Correct. You are absolutely right. So I have to give this expense first. Then only I have to give creditors. Then only I have to give whom, guy? Ace loan. Are you following, guys? Is it going to impact my answer? No. I am doing in third installment. You should have done in the first installment. Are you following, guys? Okay. Now again I will write 8 or whatever. Balance after which installment? Third installment. Now be little careful because there is some balance now. Full cash use panna. Look at this. I got 3000 in our sum. In our sum, I got 3900. Ace loan I paid how much? 2500. Expense I missed over there. So now I am giving expense. How much? 500. So how much balance is left? 900 is left. Are you following, guys? This na starting liye panna ever balance. Adhe 900. See, na starting liye panna. This 500 will anyway become 0. Still I will keep paying. I will be left with how much? 900, 0, 0. What is Ace part? Ace thing? 15,000. B. 18,000. 9,000. Till here have you all understood, guys? Really sure understood. What is the meaning of this? Understood? What is the meaning of this? After paying all the expenses and creditors, liabilities, let me repeat. After paying all the expenses and liabilities including creditors, etc., I am left with 900 rupees. But partners want how much? 15,000, 18,000, 9,000. This is after which installment? Third installment. Now come here. See, I know that in the fourth installment you are going to get 6,000. I know in the fifth installment you are going to get some 20,000. But can I predict the future? Nobody can predict the future. Correct? So as of today, I have with me 900 rupees. I will assume that this is the last rupee. I will assume after this, I will not get any money. So I am left with 900, but I have to pay the partners 15,000, 18,000, 9,000. Whom should I pay how much? What ratio? What ratio, guys? Show how at each stage cash received will be distributed between the partners. Correct? That is for profit. That is for sharing profit and loss. Correct? Is that the ratio for sharing the cash? Be very careful. Question la kuduthirukkan. Show how at each stage cash received should be distributed. Installment 1 is easy. Installment 2 is easy. Between the partners, they share profits in the ratio. Profits and loss. Profits and loss in the ratio 2 is to 1. That means we share profits and loss in this ratio. This is cash. Can I share cash in this ratio? No. Are you following, guys? This is where the sum heats up. Okay, so here at this point only, till this stage, relative capital method, maximum loss method is the same. Till here same, no change. What will change? How to settle the cash available to partners to compute this only maximum loss or relative capital. Are you following, guys? Now coming to maximum loss method. Now I will keep this statement separately. I will come down and do some working notes. Okay. Let me do working note 1. I will explain, guys. This is the new part. So far it's easy. This is the only little tricky area. Okay. How much cash I have? Can you tell me the total of capital all put together? 15,000 plus 18,000 plus 9,000. How much? 42,000 pay பண்ண வேண்டிய இடத்துல என்கிட்ட இருக்கிறது எவ்வளவு? 900 தான். I will repeat for non-Tamil students. In a place where I have to pay 42,000, I have only 900. So what is the total loss the partners are going to cumulatively share? 41,100. Correct? Correct. This loss all the partners are going to share. Who are the partners? A, B and C. So this loss, let me split between A, B, C. This is loss. For this I can use what ratio? Profit sharing ratio. So 2 is to 1. How much you are getting? 16,440. Again 16,440. 8,220. That is my total loss. Okay. Now let me prepare partners rough capital account. Okay. So partners, if you understand working note 1, next installment will become easier. So I have partners A, B, C. Now follow very carefully. According to this, the opening balance of partners is how much, guys? No, 15,000, 18,000, 9,000. This is payable to them. But according to my above working note, the loss each partner should share is how much? Loss as above. This is now loss. 16,440, 16,440, 8,220. Tell me the differences, guys. 1,440. I will tell the sign in some time. Next is this is negative. This is 1,000. $780. One second. How much are you getting? 780. That is what you would have got in the book over here. Sorry, this also is profit, correct? Okay, these two are positive, this is loss. Same numbers we have in the book, minus, plus, plus. But I have to explain the meaning of this. I'm sure you understood. Okay, what we did you understood, but let me explain. Okay, partner A should be receiving only 15,000 rupees, but his share of loss is 16,440. That means, will I pay him any money? No. There is no need to pay him any money. If I prepare a capital account, credit side will be 15,000, debit side only I will put loss. If I put capital account loss will come debit side. How much will put? 16,440. That time the closing balance will come here, 1,440. This means partner should bring in money. Will he bring money? He will tell you, first you give me money. Why should I give money? Correct? So the meaning of this is partner A should bring in 1,440, but he is not going to bring. Okay. Go to partner B. Partner B I have to pay 18,000 rupees. If I prepare a ledger, partner B I have to pay how much, guys? 18,000. But his share of loss is only 16,440. That means I still have a payable of how much? That means I have to pay him still 1,560. Are you getting it? Now, C, we should pay C 780, he should pay us 780. We should pay. So now can I repeat the final conclusion? A should pay the firm 1,440. I should pay B 1,560. and I should pay C 780. Is this clear for everybody, guys? Okay. If this is the case, still do I have enough money to pay B and C? No, I have only 900 rupees. B wants 1560. C wants 780. Can I tell C, okay, take 780 rupees enough? No. I have to now you tell me, guys, between these three people, 900, whom I will give? Whom I will give? A, B, C or B and C? B and C. Because A should give me. I will tell CA, நீ எனக்கு காசு கொடுக்கணும், நான் கேட்கல, சைலண்டா 900 rupees கேட்காத. So I will again repeat, I will say CA, according to the capital account ledger, you have to pay us 1440. So I am not going to ask you that because I know we are in a loss stage. But 900 rupees you don't ask, I won't give it to you. Correct? Now A is saying, yeah, correct only, you are very much right. I will remain silent. Okay. Now this loss of A, because A is not giving the money, will be shared by whom? In partnership, partners share profits, joint and several. So if one partner is loss, it will be shared by the other partners. So this loss I will share between the other partners. Because A is not giving 1440, I will share his loss with other partners. Correct? In what ratio? Usually 2:1 now. Usually 2:1. You are right, 2:1. But in this method, there is a much in-depth logic. At foundation level, I don't want to go there, guys. A huge concept, huge logic. You are very right. 1440 should go to them in profit sharing ratio. But this is what loss? Capital loss. Correct. So because it's capital loss, we have a method called Garner versus Murray rule. In that rule, they are saying such a capital loss will be shared to the other partners in capital ratio. In what ratio? Capital ratio. That is the only part you should remember. Why capital ratio? You will understand when you see Garner versus Murray. Beautifully, I will explain that. Here, because it's what loss? Capital loss. So here we have to share this. So now next I will write 3. Sharing 1440 to other partners in what ratio? Capital ratio. I will tell you a quick logic. Logic is basically, this is what loss? Capital loss. See, profit loss comes on a day-to-day basis. Capital loss will be shared only in capital ratio of the partners of how much they have contributed. Well, how much B contributed? C contributed. So ratio is 2:1. This sum, fortunately, capital ratio and profit ratio is same. So in exam, by mistake, if you did 2:1, also correct answer. Okay. So this 1440 should be shared between B and C in the ratio 2:1. How much is that? 960, 480. I will reduce the loss, add more loss. Therefore, balance payable to B and C. How much? 1560 minus 960. 600, 300. Now, this 600, 300, we have to pay or they have to pay up? We have to pay them. Total how much? How much I have? That's it. So, for computing, you take 600, he will take 300, we will do all these. Sir, if you wanted to explain the same thing in ledger, basically there is nothing but one partner's loss in ledger, capital account, A, B and C. A's loss is shared between B and C in capital ratio. Understood? So what I am saying, I have to pay you 1560. I don't have 1560. But A should pay me 1440. He is not paying. He is your partner. Share his loss in capital ratio. Understood logic? So 600, 300. Now go back to my statement. Here I will write 9 less partners payment. Working note number 1. This working note only is maximum loss method. So less 900. For A I will less how much? Nothing. Because A is not taking anything. B less 600, 300. For this 600, 300 only will change in relative capital method. Rest everything will remain the same. Now what you will write next? Very good. Balance after third installment. Correct? third installment and partners payment. Partners payment. Cash is 0 here. 15,000, 17,400, 8,700. Are you following, guys? I agree with understanding of. How many installments over? 3. We have 2 more installments. That means you have to do 2 more working notes. Working notes will come only when you are making settlement to partners because money is not sufficient. I will continue this ledger because I have working note. I am going below this. Okay. Have you made a note till here, guys? Everybody made a note till here? Okay, quickly. Till here if you made a note. I hope you have made a note till here. Done. Same step will be repeated 2 more times until the installments are finished. Okay. Lily Babu is taking photo. That photo will come back to him after 1 year in Google memory. 1 year back. Done the sum. Okay. Fine. This is the working note. This same thing is there in study mat, guys. This 600, 300. Look at this 600, 300. Of course, presentation will slightly change. Whichever you understand, do and properly explain. Okay. This is the dabba. Quickly make a note. Recording students, if time is not sufficient, you can pause and write. Working note number 1. Done. Can we proceed, guys? Okay. Online, make a note. Any doubts? Put it on YouTube, guys. Sorry, 1 second. Done. Can we proceed? Okay. Next, I'll again show you in the ending. Recording can pause and write. I'm continuing this statement below because I don't have space over there. Okay. So I will write down what is next installment. 6,000 rupees. So I'm writing down whatever item. 4th installment. 4th installment. How much I received? 6,000 rupees. Creditors will be 0. Ace loan 0. What is Ace value? 15,000. 17,400. 5,000. 8,700. Online, one student asks a doubt. What is the heading of this statement? What will be the heading? Distribution of piecemeal distribution using maximum loss method. Piecemeal distribution for creditors and partners using maximum loss method. Clear, guys? How do you know in exam it's maximum loss method? Question will specify. Solve using maximum loss method. Okay. Because we can do the same sum in other method also. Not mentioned now, you can solve in normal dissolution itself. Realization account. We will do the same thing in that method. I will show the sum. Okay. Answer should be same. Will be same. Okay. I will show that. Let us finish this sum. So I got 6,000. So now next, settlement of 4th installment. Who is going to take? ABC will take who will take how much? Working note 2. Working note 2 I will write below this. So I am writing working note 2. At this point, what is the total cash available, guys? 6,000. Go up. What is the payable to partners? 15,000, 17,400, 8,700. Can you add all these three? How much? 41,000? Correct, no, it was 42,000. I paid 900. So leftover should be 41,100. If you want to cross check, irundhathu 42,000 first la. Now 900 rupees I paid. So I should be left with 41,100. So what is the loss? Assuming at this point 6,000 is the last payment. After this I will not get any payment. Assuming this is the last payment. So 6,000 minus 41,100, how much you are getting? 35,100. This is the MAC payable, correct? So now what I will do? I will again split this just like last time between the three partners in the ratio 2:2:1. So how much you are getting? 14,000, 40, 7,020. This is the loss. What is the partner's capital? 15,000, 17,400. So again I will write particulars A, B, C. Okay. So I am going to write first balance brought down from previous working note capital or the statement 15,000, 17,400, 8,700. So working note 2 you will write how much? 15,000, then 17,400, 8,700. Loss, maximum loss shared for each party, maximum loss what you computed. Therefore balance due guys. Look at this. The meaning of this is, hey, I have to pay A 15,000 rupees, but his loss is 14,040, so I can pay him only 960. Hey, I have to pay B 17,400. His loss is 14,040, so I can pay him only 3,360. Similarly for C, 1680. Here nothing came negative. Unlike working note 1, if you remember working note 1, we got one negative which was shared, again lost by shared. Here the meaning of these three amounts is, I have to pay A, I have to pay B, I have to pay C. That means no need to apply the next step here. What is the total payable? 960 plus 3360 plus 1680. How much you are getting? 6,000. How much I have? I can pay this. No need the next step. No need that Garner money will never, money is more means working note wrong. Okay, money is, it will either perfectly tally. If it's not tallying, one of these three numbers will be in negative. Then you have to again interset off by using capital ratio. Like how we did here. Look at this. Here if you see, money was not sufficient. Because if I added 1560 plus 780, money was not sufficient. Money would have been sufficient if A brought in 1440. He is not going to bring in 1440. That's why this was shared between other partners as 960 and 480. This step of sharing in capital ratio is not applicable in this working note because we never got a negative. Because no partner had to pay us. Are you getting it up? Are you following? Clear? Online, if you understood, type a yes, otherwise I'll repeat again. Quickly make a note of working note 2, guys. Working note 2, make a note. What if it's more than 6,000? Working is wrong. Working note is wrong. It will not come. See how it will come. I'll tell you how. I'll tell you the logic. See, this is the total payable of this loss. How did you find this? This is the total payable. This is what I have. So this is the loss. That means it has to tally. So what I have to pay is 41,100. My available is 6,000. So loss is 35,100. If I split the loss, the balance should be equal to 6,000, or if it's more, then you have to interset off. Like how we did. If it's more, you have to interset like previous case. Okay. Understanding, guys? So now I will go back to my working note. I will write here minus A how much? 960. B 3,360. 1,680. From where these values came? Working note 2. Now I will write down item 11. Balance after 4th installment. cash is 0, creditors and all 0, capital of A is 15,000 minus 960, how much? 14,000, no? Sorry, 14,000, 40, 7,000, 20. What number does this represent? Balance that I have to pay to the partners, which is nothing but the maximum loss, correct? Into nothing but the maximum loss in working note 2. Why is this? How is this tallying, sir? Look at this. Look at this. Partners, what I have to pay is 14,040, 14,040, 7,020. How is this tallying with the maximum loss of this in working note 2? Because if you don't pay the partners, after this, sir, after this I don't have 1 rupee, then the loss A will share is 14,040, the loss B will share is 14,040 and C will share is 7,020. That is the maximum loss they will share. That's why in working note 2, this is the maximum loss shared. If this is the loss, how much I will pay only we computed. So that balance only should come. Are you getting it, guys? Okay. Next, 12th one, last one, final installment, correct? Final installment, how much? 20,100. Here they gave one note. Can you see one note? That somewhere down he explained. Includes saving in expense. What is the meaning of this? You don't have to do anything extra. What he is saying, initially I thought my expense will be 500, but it was only 400. That means I got back that 100. So my actual realization is 20,000 for assets plus 100 for expense. No problem. This money also what I will do? Give the partners. So I will write here 20,100. That is how we will share the last one. Look at the previous distribution of 6,000. Same steps. Okay. Now try this last step, guys. I have 20,100. This is the payable. So I have to prepare working note 3. Working note 3. I have 20,100. What is the total of partners' capital at this point? 14,040, 14,040, 7,020. How much? 35,100. Let me explain the meaning. I have to pay 35,100. I have only 20,100. Therefore, loss that the partners have to share is 15,000. 15,000. Okay. Do I have to do this extra 100 rupees as installment 6? No. That 100 rupees is included in this. Okay. What if they have not given that 20,000 over here? See, if they have not given this note, instead if they gave only 20,000 and if they gave the same note 500 and 400, then I will reduce only 400 first instead of 500. Or you reduce 500, you add how much? 100. You make it 20,100. Effectively, you paid only 400. So 100 should be added back. Since in question they already added, we are not adjusting. Okay. Following, guys. So 15,000 rupees came. This you will split between 3. Same steps. How much? 6,000? 3,000. What is the balance of partners? 8040? 40? This balance I have. This balance you should take. Heading 14,000. 14,040. 14,040 was payable. 14,040 was payable. 7,020 is payable. You got the hang of it. Good. So next item will be called maximum loss. This much I can't pay. This much I can't pay. So what I can pay, balance left is 8040, 8040, 4020. What is the meaning of this? They will pay us or we will pay them off? Can you add all these three? How much you are getting? Add this 8040, 8040, 4020. 20,100. Let me repeat for A, guys. Look at this. For A, I'll be slow here. Look at this. For A, I have to pay 14,040. That is the payable after the previous installment. But I have to pay him 14,040. I have only this much, so my loss is 15,000. If I split the loss, A's share of loss is how much? 6,000. So his balance is how much? 8040. If I prepare ledger, it will be like this: 14,040 payable, 6,000 loss. Therefore, balance payable is 8040. I can pay him only 8040. Similarly for B and C, so I can pay A 8040, B 8040, C 4020. Total amount payable is 20,100, which is matching with 20,100. So I will go here and write down final installment how much? 8040, 8040, and which one? 4020 is what I will pay. And now I will write last one, balance after final installment 0, 6,000, 6,000, 3,000. Total of this is how much? 15,000. This is the loss I am not able to pay. Are you following, guys? This is what they will share. Everybody got it, guys? Okay. This is the loss. Now let me just show you. This sum was so lengthy. You got loss of A is 6,000, B is 6,000, C is 3,000. Correct? Now same sum, I am going to solve it in the same sum. Let us solve it as a normal dissolution sum. Let me prepare the realization account here itself. Okay. First you will transfer all the assets of 2 sundry assets, 48,000. I will transfer liabilities by creditors, 2,000, by A's loan, 5,000. Correct? Cash. In this cash, how much is the expense? So how much cash is left? 100. So that 100 is included here. Included here, guys. Now what is the total realization of all of this? So entry for realization of bank account debit to realization. So I will write here, by bank how much? 34,000. Can you find the realization loss? Correct? To realization loss how much? Oh, sorry, other side. Hold on one second. Cash, sundry assets, cash realized so much. Sorry. After collecting this money, we have to pay these people. So account is not yet complete. See, realization account, I transferred assets, transferred liabilities, settlement from assets. I have to pay liabilities of. So I will write here to bank how much? 7,000. Add both the liabilities. Add 2,000 plus 5,000. Now how much you are getting loss? 14,500. Realization expense is there 500. That also I will write here to bank because first I paid 500. Then only I got back 100. So to bank 500. Now what is the loss? 15,000. Same as that. Are you following, guys? Now this, if you split between the three partners, you will get how much? 6,000, 6,000, 3,000. If I do in a normal sum, by transferring all assets and all liabilities and making payment, you will get the same answer. For doing in 4 lines, we did in 1 page. Because this is, which is correct? This one. Because at each installment, we will know what is the loss. In practice, this only will be done. In reality, if at all after clearing CA, if you get a chance to do winding up for a company. After I cleared my CA, one of the first job I got. With this sum is over, guys. Understood? If you look at this, ending will be, ending, where is that? Statement he didn't prepare. Okay, they didn't prepare this. Here. 6,000, 6,000, manner of 3,000. Are you following, guys? So actually, after clearing, when I cleared my CA, one of the first jobs I got from Big Four was in a team called IBC, Insolvency and Bankruptcy team. What the team does, which all company is going to close down, that company's assets, they will sell, pay the liabilities and pay the partners or shareholders. Now in this sum we saw realization expense 500. For whom is that? For CA. Who is that agent who will sell the assets and pay liabilities? CA. That's another job profession for you. It's a separate vertical. We have an act called IBC Code 2016. Today you cannot learn everything. After you clear CA, you have to specialize what you want to do. So one specialization is to be an IBC expert. That means if company is closing down, I know how to make it close well. Postmortem you will do very well. Sell the assets. Because fight will come there, correct? Everybody will fight. For example, take Kingfisher Airlines today, guys, Vijay Mallya company. He is not paying the money, but still his flight is there. I should sell his flights, pay the liabilities. Now all the banks will fight, give the money to me. So we need a mediator, liquidator. Heard of liquidator? That liquidator is a CA. This is the work of liquidation. So maybe in articleship or post qualification, if you get chance to do this, this statement will be useful. This is what you will do. So this is maximum loss method. Understood, guys? Any? General reserve, his question is, sir, good question. Sir, what if in this question general reserve appears in balance sheet? General reserve is profit share. Why will profit come in dissolution? General vandalu debit side la vandu. P&L loss and varum. Loss vanda I will reduce with this. Reserve will be added to capital in the same profit sharing ratio. Generally it will not come in profit, it will come in debit side loss. This is illustration 7. Exactly same thing they have done like this, guys, in the study mat, which is illustration number 6. Same thing, you will try question 6 as practice at your end later. Similar method, you will get the answer. With this we are done with maximum loss method. Hoping you have understood. In the next part, separate 1 hour, we will do relative capital method. Thank you. Okay. Let's start off another method in dissolution of partnership. Last sum we are going to do in dissolution of partnership, which is relative capital method. Under piecemeal distribution, there were 2 methods, maximum loss and relative capital. Maximum loss we finished yesterday. Those who are watching recording, please go watch that first, because I explained what is the logic of piecemeal. Why we are doing piecemeal, we explained. I gave you a format of one statement and I told you for both the methods it's the same format, except for settlement of partners alone we either use maximum loss or relative capital. So if somebody is watching this directly, go watch the part 1 or find that video and go see that. You will find the link in description. Now come back to relative capital method. Relative capital method, we have one sum in the study mat. We are going to do that sum. But I have to first explain the concept to you. The concept of relative capital. Okay. Now, in this method, payment of liabilities is going to be the same. I will pay the liabilities as such. Only when it comes to payment of partners' capital, we have to adopt a different method. In maximum loss method, what assumption we did? We assumed that this is the last payment and then we found out what was the maximum loss and share that loss, correct? Here, we are going to do a different concept. Let's take the illustration given in the book first before I go to the sum. I have 3 partners, A, B, C. Their capital is 15,000, 18,000 and 9,000. Let me write it this way, sorry. A, B, C. How much, guys? 15, 18, 9,000. It's an illustration in the book. Example, profit sharing ratio is 2:2. 2:1. Okay. This facts like this will be there in every question, guys. Now, look at this. What we are understanding, by looking at this. This is the capital, this is the profit sharing ratio. This method has only one extra working note apart from the normal statement we are going to do. What they are saying, for 1 rupee of profit, see, imagine the company earns 5 rupees profit. How much will A take? 2. How much will B take? 2. How much will C take? 1. Correct? Any doubts in this? No. C, for 1 rupee profit in the business, he gave a capital of 9,000, meaning all the sums we have done, we keep profit sharing ratio separately, we keep capital separately, we don't read them together. Correct? Imagine my profit sharing ratio is 1:1, but my capital, A gave 70,000, B gave 7,000. Does it make sense? Will you do partnership with somebody? They are saying we will do 1:1, but you give 70,000, I will give 7,000. Will you accept? If profit sharing ratio is equal, capital also should be equal. Ideally, will you agree for a partnership like that? But look at this. In this business, they have kind of fooled C. For 1 rupee profit, that fellow Pavam, he invested 9,000 rupees. So I want to find out, for every 1 rupee of profit, how much capital everybody invested. So what I will do, I am just going to divide capital by profit. So I am going to divide this. Are you following? So I will tell, for every rupees 1 in profit, A invested how much? 7,500. B invested 9,000. C invested 9,000. Are you following, guys? Now who is the smart person between A, B, C? A. For 1 rupee profit, he invested only 7,500. B and C are the fools who invested 9,000 for every rupee of profit. So while repaying, whom you will repay first? A or B or C? B and C, because B and C paid more. Correct? So I will tell, B and C will tell, we were the ones who made mistake. A, you were smart. Ideally, we also should have given only 7,500, but we gave 9,000. So what they are saying, let us take A's capital as base. Let us take A's capital as base. We should have invested 7,500 only. So what should have been the capital? If the capital is in the ratio of 2:1. So I will write revised capital. If capital is in the ratio of 2:1, how to find that? If I need 2 rupees profit, for 1 rupee profit I am giving 7,500, then for 2 rupees I should invest how much? A correctly gave 15,000. Now B is saying, I also should have not invested 18,000. If I invested 7,500, if I wanted 2 rupees, I should have invested 15,000. Correct? C also is saying, you are right, I invested 9,000. No, I should have invested only 7,500. So they are saying the capital should have been 15,000, 7,500. But actually it is 15,000, 18,000, 9,000. So A is saying, okay, fine. Now I will be silent. My capital is 15,000. It should have been 15,000. So totally, I didn't give anything extra. B is saying, correct, you are right. Capital should have been 15,000. But like a fool, I gave 18,000. So how much extra I gave? 3,000. C is saying, then don't leave me. I also gave extra of 1,500. Both of them gave extra how much? 3,000 and 1,500. This extra also should be in the ratio of 2:1. I'll explain. Extra. Now, this is called the excess capital. This extra also is in the ratio of 2:1 now. So it's fine. So it is fine. What if instead of 3,000, this was 5,000, 1,500? Then again we have to repeat the step to find excess of excess. We will do that in the next step. For now, you stop with 3,000 and 1,500. So look at this. How much B gave extra? B gave extra how much, guys? 3,000. How much C gave extra? 1,500, correct? So while repaying, the provisions are saying, if I have only 1,000 rupees left, whom I will repay first? Nothing for A. I will give only B and C both gave extra, and both my extra is in the ratio 2:1. So I will give this 1,000 to B and C in the ratio of 2:1. Until this 4,500 is repaid, A will not get anything. Are you following, guys? Understanding? So while repaying, I will repay like this. This is the sum. Are you getting it, guys? Now let's go to the main sum. Illustration 8. Let's do it. The sum will actually be the same till you come to payment of partner's capital. Till then, I will only keep paying my liabilities. You have to prepare one working note like this, excess of excess capital. Follow, guys. Let's start off with the sum as usual. When that part comes, I will again prepare this working note. Only one difference we are going to have is, if this 3,000 and 1,500 is not in the ratio 2:1, you have to again repeat the above step. You have to keep repeating until the excess is in this ratio. Are you understanding logic, guys? Everybody clear? Let's go to the sum. Illustration 8. There are more complications here. Thankfully, we don't have that in the study mat. Okay. A partnership was dissolved on 30th of June. The balance sheet was on balance sheet on that date was as follows. You have cash and sundry assets. You have the 3 capital that I have to pay, and you have liabilities. Fine. Just like the same sum I can solve using piecemeal or maximum loss. I told you, guys, the same sum we can solve using piecemeal, maximum loss, or normal sum itself. Okay. The assets were realized in installments. That's the whole concept of piecemeal. And the payments were made on proportionate capital basis. Creditors were paid 29,000 in full settlement of their account. So creditors, I have to pay 30,000, but they are taking only 29,000. Expense of realization estimated to be 5,400, but actually it was only 4,000. And then this amount was paid on 15th of September. How many installments we have? 3 installments where money came, and the loss ratio is 2:1. Again, we have to open the same statement. Can we open it, guys? Let's do it together. Okay. How many of you studying relative capital for the first time? Almost full class. Same statement. Easy sum, guys. Particulars. I told you template. What's the template? First you will write particulars followed by cash. Big column for particulars followed by cash. After that, all the creditors in the same order of payment. First sundry creditors are first loan. Loan, because this is loan of B. This is loan of B. So I will write first the external liabilities first, correct? So first I will pay creditors, then I will pay loan of B, then only I will pay A, B, C. Correct, guys? Let me write the opening balances. Opening cash, how much? 10,800. Creditors? Creditors is how much? 30,000. But we have to pay them only 29,000. 1,000 is discount. So, but let me write the opening balance as it is. Loan of B is 10,000. ABC, A is 76,000, B is 48,000, C is 36,000. Are you guys following? Hello? Now, before even I go to the first installment, existing cash I have to use up. First cash I will use for what? No. Expense. I have to keep it aside for expense, guys. We missed in the previous sum, correct? So expense here is how much? It is actually 4,000, but I don't know now. I know that only on 15th of September. So I have to keep aside reserve cash for expenses. How much? How much, guys? Reduce 5,400. At the same time, creditors gave me a discount of 1,000. I don't have to pay that. That also I have to reduce of discount received. How much, guys? 1,000. Are you following? Now I will write revised balance. Revised balance after above adjustments. So revised cash is how much? 5,000. Revised creditors is 29,000. Loan is 10,000. 76,000. 48,000. 36,000. Are you following till here, guys? After this, what I will do next? Cash paid to creditors. So minus 5,400 minus 5,400. Again I will write revised balance. I am doing in detail, so you will understand every step. Now what is the revised balance of cash? 0. Revised creditor is 20. 23,600. 10,000 is same. 76,000. 48,000. 36,000. Done, guys. After this only you are getting the first installment. First installment is how much? 25,200. So I will write first installment 25,200. This 25,200 who will take? Creditors and loan. So I will reduce up to over here 23,600. Loan how much I will reduce? 1,600. Correct? Nothing for capital. So I will write balance after first installment. Cash will of course become 0 because I use the cash. Creditors becomes 0. Loan becomes how much, guys? 8,400, 76,000, 48,000, 36,000. I am yet to touch capital. Till here, like I told you, relative capital method or maximum loss method, no change, same, copy paste. Okay. Next we will go to second installment. So I will write down second installment. Second installment, how much I am getting? How much? 60,000 I am getting. Okay. First you pay off whom? Loan. How much? 8,400. Partners we will decide later. So now you write down balance before paying partners. After paying liabilities, before paying partners. How much cash I have? 51,600. Liability became 0. Partners is 76,000. 48,000. 36,000. Are you following? Okay. Now the question is this. This 51,600 only I have left. But I have to pay 76,000, 48,000, 36,000. Correct? To pay this, how to pay? Who should get how much? Relative capital method will answer. Are you following, guys? Everybody clear? So for this I will come down to a working note. Working note 1. I have to prepare one separate working note till the end before you can go back there. So I will write down particulars. What is the partners? ABC or PQ or ABC. How much? 76,000, 48,000, 36,000 capital. From here I want you to participate with me. Okay, I will give you time to copy. Recording students, participate, because this table only is the unique concept in this method. What is the profit sharing ratio? 2:1. Now this is 1, this is 2, 3. 3 is called capital per unit of profit. It's called capital per unit of profit. Capital per unit of profit, guys. We will divide 1 divided by 2. 1 divided by 2. How much you will get? 38,000, 24,000, 36,000. 38, 24, 36. Let's check that once. 38, 24, 36. Perfect. Okay. What do you mean by this? Let me explain. For every 1 rupee of profit, how much A invested? Loudly. 38,000. How much B invested? 24,000. How much C invested? 36,000. Who is the smart one? B. B for 1 rupee profit invested only 24,000. Others are fools. They invested 38,000 and 36,000 for 1 rupee profit. So everybody is saying, no. I want my capital also to be in the ratio of profit sharing ratio. All these days B enjoyed. At least at the time of dissolution, you pay me first. So what would have been my capital if I also contributed just like B? So what should have been the capital? We will call that as revised or required capital, keeping B as base. B is saying, okay, I will be silent. All these days I enjoyed. Now it's your time. So B should have invested how much, guys? 48,000. 24,000 for one profit share. But he is investing. He wants 2 rupees. So 24,000 into 2. Same way A also is saying, see, I would have invested 24,000. Now if I should have invested 24,000, A will tell 24,000 into 2 how much? 48,000. C will tell 24,000. Are you following this, guys? Are you understanding this part? Sorry? Explain. A. Basically, A actually invested 76,000, which is not correct, because he invested 38,000 per unit of profit, per rupee of profit. When you looking at B, B invested only 24,000. So A is saying, if I invested like you, how much I would have invested? If I invested, everybody are saying, because B is the smart one, if everybody wants to be smart, if I invested like B, how much I will invest? So A is saying, that means I should invest only 24,000. I want how much profit share? 2. So I will invest 24,000 into 2. I will invest only 48,000. Are you getting it, guys? B has anyway invested only 48. C is saying, Anosyama, unnecessary, I invested 36,000 for 1 rupee. I should have invested only 24,000. So now we want to find out, okay, how much excess they contributed, each of them. Look at this. A should have contributed only 76. He gave how much? 76 for 2 units. But he should have given only 48 for 2 units. So how much extra A gave? 76 minus 48. So I will write excess capital. How much, guys? 28,000 is the excess capital of A. What is the excess capital of B? Nothing. He gave correctly. What is the excess capital of C? 12,000. Are you guys following? So A and C are saying, until you repay my excess capital, no 1 rupee also should not go to B. So first A should get back how much? 28,000. C should get back how much? 12,000. Then only the rest will get that money. Okay. But now A and C are comparing among themselves. A and C are comparing among themselves. A is saying, both A and C are fools because they gave more money. Now who is the bigger fool? between A and C. We have to see. So, again I will write the profit sharing ratio between A and C. Okay, 2:1. Repeat the step. Profit sharing ratio. I will find capital per unit. You will find how much, guys? 14,000 and 12,000. 14,000 and 12,000. Here, follow carefully. 14,000 and 12,000. Here, A is saying, follow very carefully. Now the new capital is 28,000 and 12,000. Both of us gave extra. But who gave more extra? A. A is saying, see, C is saying, for 1 rupee, I gave only 12,000 rupees. But for 1 rupee, you gave 14,000 rupees. You are the bigger fool. Excess la excess. Both of us gave extra, but who gave more extra? A. So now I will again keep, A is saying, I will keep you as the base. If you are the base, I will find a revised capital. C will still remain at 12,000. A is saying I should have given only 24,000, correct? Which is nothing but 12,000 into 2. I should have given 24,000. Now look at this very carefully. I'll explain the logic over here. Look at this very, very carefully, guys. What is the excess capital of A and C? 28,000 and 12,000. Now, what ratio is this? It's not in 2:1. So we found out for every 1 rupee of excess capital, 1 rupee profit of excess capital, C gave 12,000, A gave 14,000. I am still a fool. I shouldn't have given 14,000. It would have been sufficient if I gave only 12,000. At least I could have compared my foolishness with C. I am now a bigger fool by 2,000 rupees because I gave 2,000 extra. So he is saying I should have given only 12,000. So if I gave only 12,000 extra per unit, for 2 units I will get 24,000. If I gave 24,000 extra instead of 28,000, then the excess would have been in the ratio of 2:1 now. 24,000 and 12,000. I will again repeat this part. Look at this. The excess is 28,000 and 12,000. Both of us gave extra, but our extra is not in the ratio of 2:1. So to make it in the ratio of 2:1, I am saying for 1 rupee extra, I should have paid only 12,000. So if I paid only 12,000 for 1 rupee extra, for 2 rupees extra, I should have paid only 24,000. I should have paid 24,000. If I paid 24,000 extra, if A paid 24,000 extra, if C paid 12,000 extra, our ratio would have been 2:1. But how much extra I paid? 28 instead of 24. So again, excess is how much? 4,000. For 28,000, 24 is 4,000. So A is saying, overall I paid 4,000 more extra than you. So look at this. B paid, what is B's total capital? 48,000. Write it as it is. Okay. What is A's capital? 76,000. What is C's total capital? 36,000. Who paid the most extra? A. How much extra? 4,000. Now I will write. Okay. A is saying, Nada irikradile nariya kurta. Highest extra. Remove that extra. So now you will still get 48,000, 72,000, 36,000. Now after this 4,000, what was this? Is excess on excess. We call this extra la extra. What is the actual extra they gave? 28,000 and 12,000. So for A, 28 la already 4 removed. Already 4 removed, guys. So now I will remove 24 for A. For C, I will remove 12,000. What is the revised capital? Sorry? Should remove You should remove 28, but the 28 includes 4,000. So first I will pay 4,000. Now you get how much? 48,000, 48,000, 24,000. Now is the capital in the ratio 2:2:1. Now let me explain this. How to repay the capital? The partners paid 48,000, 76,000 and 36,000. First I will pay whom? A. How much? 4,000. Till I pay 4,000 to A, others should sit silent. Others will sit. After I pay 4,000 to A, now the revised capital will become 48,000, 72 and 36. Now I will pay A and C how much? 24,000 and 12,000. After I pay A and C 24 and 12,000, then the revised capital of ABC becomes 48,000, 48,000, 24,000. Now the capital has reached 2:2:1. After this, you will continue to pay them in the ratio 2:2:1. I basically want to bring their capital in the ratio 2:2:1. Until it comes to 2:2:1, I am removing the excess paid. Are you following up? Understanding, guys? Delhi, understanding? Hurry. So, first to whom I will pay? A, how much? 4,000, not 28. 28 is what I should pay. But in the 28, first I will pay 4,000. Then after paying to 4,000, they will be left with 24 and 12. So imagine I have only 1,000 rupees left. Who will take that? A will take full 1,000. Imagine I have only 3,000 rupees left. Who will take that? A will take full 3. Imagine I have only 5,000 rupees left. Who will take that? 4,000 A will take. Remaining 1,000, 24,000, 12,000. I will start in the ratio 2:1 until this becomes 0. Are you following, guys? Clear? Now let's go back to our statement. Keep this in mind. This working only is there in the book also. Same dabba. So that's what we computed. Look at this final conclusion as per book. First fourth distribution sequence. First 4,000 will be paid to A. Next 24,000 and 12,000 for A and C in the ratio of 2:1. After this, others will be paid 2:2:1. Are you following, guys? Let's go back to our table. Same dabba is there here. Exactly what I did with the presentation thing. So this you have to do for any sum. This only will carry bulk of the sums. Marks, sorry. So if I come here, how much money I have? 51,600. In this, who will take first? A. So I will reduce first A share. How much? 4,000. And I will reduce for A 4,000. Are you following up? Now you find the balance after paying A. Do it multiple times, no problem, so that you don't make mistake. After paying A 4,000, how much is left? 47,600 here, 72,000 here, 48,000 here, 36,000. Are you following, guys? Next, who will take? A and C, how much? So I will reduce for A 24,000, I will reduce for C 12,000. So my cash also will reduce by 36,000. Now how much cash you have left? I am left with a cash of write the English well, cash left after excess capital paid 11,600. Now look at the capital 48,000, 48,000, 24,000. Are you following now? Are you getting it, guys? 11,600, 48,000, 48,000, 24,000. Now after this 11,600 who will take? All three will take in the ratio of 2:2:1. How much? I will reduce 11,600, 4640, 462320. Now what is the revised balance? 0, 43,360 for A, 43,360, 21,680. Following, guys. Okay. Now last installment, how much we got? Third installment, how much? 80,000. But read the question carefully. Last installment we got 80,000 and they also told expense was estimated 5,400, but actually this amount was paid on 15 September, which matches my last installment. That means in the start of the sum, how much cash you saved for expense? 5,400. But the actual expense was only 4,000. That means you will get back how much? 1,400. That means last installment available cash is 81,400, which is my 80,000 plus 1,400, which I didn't use in the starting. Correct? Are you following, guys? Now this 81,400, how I will share? To the three people in the ratio of 2:2:1. What is the value, guys? 32,560, 32,560, 16,280. Can you tell me the closing? 10,000, 10,800, 5,400. Is this the answer that you have? Now check if this loss is in the ratio of 2:2:1. It's in the ratio of 2:2:1. This is the amount I cannot pay them. They will bear this loss. It's in the ratio of 2:2:1. This is your relative capital method. Easier. Which is easy? Relative capital or maximum loss? Both. I don't know, but either, anything can come in exam. Both will not come in the same attempt. Okay. This is a little easy sum worth 10 marks. There are some complications. Internal they used to ask. Out of every installment, 1% will be taken by liquidator expense. So what they will do, every time we get installment, how much we got installment here? 80,000. In that you should remove 1% for liquidator expense. Are you following, guys? We used to have sums. Every installment 1% we will remove. Like that they will complicate here and there in expenses. Otherwise, the core concept of this one will remain the same. This is not going to change. Which one? This table. This is only the new table. Correct? This will not change. Now same sum, if you solve in normal method, will you get the same answer? Can we quickly try that? I will just prepare only realization account. Go to the question. Look at this. First I am transferring sundry assets. How much? 2 asset, 1,89,200. Liability I am transferring by creditors, by A's loan, 10,000. Okay, B's loan, sorry. By B's loan, 10,000. Now, expense is how much? Actual expense how much? No, actual expense, 4,000. So, entry will be realization to bank. So, I will write here to bank, 4,000. How much creditors are paid? Only 29,000. How much loan is paid? Full 10,000 we paid off. Correct? So, and how much assets are realized? Compute the total of all three installments. How much you are getting? All three installments if you total 1 lakh. So, I will write here by bank 1,65,200. Let me explain the account what I have done. Basically, liabilities I have transferred on the credit side, assets I have transferred on the debit side. I am doing settlement of expense and liabilities. Settlement of expense, settlement of liabilities. Asset realized is 1,65,200. Now can you find the total loss? Total loss 20. Can you split this in the ratio 2:2:1? 10,800, 10,800, 5,000. Okay. Is this answer tallying with this? So you can cross check your answer in exam. It will just take you hardly 2 minutes to prepare this roughly. This is assuming all the sums of realization, you are assuming that the whole amount is realized on the same day. But if it comes as piecemeal, how to give? You will give it like this. Are you following, guys? Easy. With this, we are done with relative capital method and we are done with our full dissolution. Thank you, guys. Okay. Hi, guys. Let's quickly discuss in dissolution chapter in CA Foundation Accounts new syllabus. They've added something called dissolution of LLP. Partnership means you are all comfortable. Admission, retirement, death. Dissolution of LLP means you might think, "Ayo, this is completely new." No, we are going to finish this in just 5 minutes. Dissolution of LLP sum is same as dissolution of partnership. What is the difference? Instead of partnership, it is going to be an LLP. If you remember your law syllabus, there used to be a provision in dissolution of LLP which says when should an LLP be dissolved. It was part of our law syllabus. They removed in law and they added in accounts. That's all. There used to be a provision called voluntary winding up or winding up by the tribunal. So how LLP can be wound up? LLP can be wound up either by itself, voluntarily it can wind up, or LLP can be wound up by the tribunal. Court will order. If you remember in old syllabus law, this was the question. Law la remove pantam, accounts la add pannitam. So you still have to remember those 5 to 6 points which was there. What are those points? When can LLP be wound up by tribunal? LLP wishes to wind up by itself. So we are only discussing when LLP will be wound up by tribunal. You will apply to tribunal saying we want to close the LLP. Tribunal will order for winding up. Next is they have less than 2 partners. In law we would have studied LLP should have minimum 2 partners. If it falls less than 2 for more than 6 months, we will wind up. Unable to pay its debts. That means liabilities are more than assets. LLP has not acted in the interest of sovereignty or integrity of India. LLP is doing some terrorist activities. LLP is bringing the name of India down. Then tribunal will order for winding up of LLP. LLP has failed to submit statement of accounts. There are 2 important filings for LLP. Statement of accounts and solvency or annual return for more than 5 consecutive financial years. Or if LLP is doing anything which is apart from these above 5 points and tribunal feels it is just an equitable, you have to wind up. Now these 5-6 points can be a theory question in accounts. We have theory in accounts. We can ask this as theory. Coming to the sum, there is just one illustration in study mat. They are saying P and Q are partners sharing profits in the LLP. Balance sheet is as follows. I am not going to solve the sum. I am just going to run through the sum. It is same as dissolution of partnership. Instead of LLP, let me write partnership, same sum. So when those who we all studied dissolution of partnership, you have to open 3 accounts: realization account, capital account and bank account, cash or bank account. We used to do the following steps. Those who are watching this video first time, go watch the other dissolution basics, where first step we transfer all the assets and liabilities to realization account, transfer the respective capital to capital account, then whatever adjustment is there we will take it through realization account, then realization profit loss is transferred to capital account, finally partners are settled. Correct? It is a basic dissolution sum. Look at the adjustment. They have given some assets, they have also given partners capital, and they have given current account this side and current account this side for 2 partners. So what? One has debit, one has credit. In this sum, they would have done current account and capital account separately. You can merge both, nothing to worry. Okay. Then reserves and bank overdraft is given. Reserves will be transferred to which account, guys? Partners capital, current account. So you keep capital account separately, do all the adjustments in current account. Look at the adjustments. If you have studied dissolution, see if these are familiar. First, look at the adjustment. We are transferring liabilities this side. Assets are transferred to the debit side of realization of partners capital account. Opening balance is written. Bank account, I wrote the opening balance. Nothing great from other sums. Small adjustments. First, P took over 50% of the stock at 10% less than its book value. Okay. What is the stock value in the question? 35,000. He took over how much stock? 50%. So 50% is 17,500. He took 17,500 worth of stock at 10% less than book value. So minus 10%. How much you will get? 15,750 is the value of stock that he has taken over for himself. So what will be the entry for this? Partner has taken this up. So I will write piece capital account debit. How much? 15,750, because that is the price he is accepting to reduce his share. To what, guys? To normally I will credit stock account, but stock is in realization. So I will credit realization for what value? 15,750. If I come down realization account, you will be able to see. Where is it? Yeah, by piece capital stock 15,750. In piece capital I will write to realization 15,750. Are you following, guys? Familiar adjustment. Then, and the remaining stock is 17,500. Remaining half is sold at a gain of 15%. So what is the gain of 15%? It is going to be 17,500 plus 15%. How much? 125. Entry will be bank account debit to realization. Correct? I am selling it. So my entry will be bank account debit to realization account 125. I will write here bank account debit. Look at this. Where is the bank account? Yeah, here I will write credit side. I will write stock 125 and bank account I will write. It's part of this 1,48,870. Then the remaining assets they have given breakup. Plant and machinery 30,000 and 50,000 respectively. Clear? Unrecorded investment was sold for 25,000. So 30,000, 50,000, 25,000. Look at this. 30,000, 25,000, 50,000. Are you following, guys? Bank account realization, bank account realization, bank account to realization. Then debtors realized only 90%. So debtors also bank account to realization 90% of the value. Simple adjustment. 1,245 are recovered from bad debts which was written off last year. Unexpectedly some bad debts came and told take the money. So what entry I will write for that? Bank, say no bad debts recovered. I got the money now. Bank, how much I got? 1,245 to what? Realization. Because it's an income for me. So in realization account I will write down bad debts recovered 1,245. In bank account debit side I will write 1,245. They included everything as part of one item. They total over here, see 1,48,870. Outstanding bill for repairs is 2,000. 2,000 is paid. Entry is realization to bank. That's it. You are required to prepare the account. Anything new in this? It is nothing but dissolution of partnership and basic sum. Now after you transfer everything to realization, you close and you find the profit. We found a profit of 2,620. This profit will be transferred to partners current account 1,310. Partners current account closing balance is transferred to partners capital account. You have to settle the partners 83,060 and 68,810. That will be the same balance left over in the bank account. With that sum will get over. It will tally beautifully. Are you following? Yes, any doubts? Clear? Understanding? Is this same as normal dissolution? If you are watching this first video, you will not understand anything. We have finished so many sums and dissolution. Are you getting it, guys? That's it. So dissolution of LLP is nothing new. You don't have to panic. That's why we are doing this sum. Okay. I'll proceed to the next concept. With this is done. Thank you. Just 1 second, guys. Okay, online, yeah, let's start, guys. Just checking. Online, am I audible for everybody? Can you confirm? Online, can you all confirm, guys, if I'm audible? Good afternoon, guys. Fine, let's start, guys. Last day of accounts revision. The agenda is fairly simple. Today, we will be spending significant of our time in NPO. I'll start off with NPO, try to cover all the concepts and do all sums where you are ready to do the rest of the sums. Then we also have, apart from that, where we will keep doing in the middle, question 8 of consignment, which we did in the previous class. I will conclude that sum. Then I will try to do one sum in JLP and SLP. I have one sum. Then in BRS, one sum from our material I will do it. And lastly, depreciation also. June 23, someone asked me to solve that question. That also I will solve it. So we will do it NPO. We will jump and close one thing. Then again keep jumping here and there and try to close all of this today. That's going to be the agenda, guys. Okay. But 80% of the time is going to go for NPO. Let's start off. What do you mean by NPO? Non-profit organization. What is that? An organization which is started for charitable work. In other words, in Companies Act, part of your syllabus, Section 8 companies is one example of a non-profit organization. It could be for any charitable work. For example, ICAI is a non-profit organization. It is, yes. ICAI is a non-profit organization. Most of the schools and colleges are non-profit organization. Many political parties are non-profit organizations. In really, yes, they are non-profit organizations. Okay. Now, why will someone start as a non-profit organization? As per Income Tax Act, tax is 0. Income Tax Act, tax is 0. Are you following, guys? Clear? See, I am not saying this. I am just telling you what is the reality. Fine. Okay. So many schools and colleges where they are collecting donation from you, 90% of the schools do not pay tax because they are non-profit organization for the benefit of the students. Are you following, guys? Clear? Now, so normally for a company, we prepare profit and loss account. Again, I am going to keep this discussion exam oriented. Otherwise, NPO can go for 9-10 hours. We are going to focus best to do in 3 hours. And balance sheet. And NPO will prepare only receipts and payments account, which is nothing but your cash account. And instead of profit and loss account, they have something called income and expenditure. They also have balance sheet. Okay. Why they don't call it profit and loss? What is the word? Non-profit. So we don't earn profit. We are only getting income and expense. So for an NPO, there are 3 statements that you have to prepare. Receipts and payments accounts is nothing but cash account. Most of the cases, question will be receipts and payments account. It will be the cash account. Just like cash account, debits is money in, credits is money out. Income and expenditure account, will be what, guys? Like your profit and loss account, accrual basis. Balance sheet is the normal thing. This is what we have to prepare. So you should learn which goes into which statement. That's the most important thing over here. And there are some terms, guys. For example, let's take Cosmopolitan Club. In Chennai, you have this Cosmopolitan Club, you would have seen in Mount Road. Or there are many other clubs across, and Cosmopolitan Club is there across India. It's there in Bangalore, it's there in many other places. Okay. Then there are other clubs like this Madras Gincana Club, Presidency Club. All these clubs are non-profit organization. What happens in a club? Yes, Sanjeev, what happens? Okay. Now, what happens in club? Nothing great, it's just a place for recreation. Okay. Where they have, or take YMCA club. So if you take Cosmopolitan Club, they'll have a swimming pool. You can go and have some, relax. They'll have a restaurant where you can go and eat. They will have marriage halls, and they will have rooms. So if you have any wedding, you can use that hall. If you travel to Cosmopolitan Club, if you travel to Bangalore, instead of staying in hotels, I can stay in Cosmopolitan Club if I am a member of Cosmopolitan Club. Okay. Then they have other things. They have all this restaurants, all of that. Now, what benefit I get here? Normally in the restaurant, everybody can't go. You all can't go and eat. Only members of Cosmopolitan Club can go and eat in the restaurant. And the food will be cheap. One plate of biryani Normally it's 250. Here it will be 90 rupees. Are you following? Food will be in a very subsidy rate. Swimming pool usage will be free. This hall, normally marriage hall, if you have to book, let's say a hall 3 times this classroom or 5 times this classroom, if you have to book a small hall for 100 people. For one day, how much should you pay? Rent. How much? 30, 40, 50, 6,000 you have to pay. Here if you have to book the hall for one day, 5,000 rupees, that's it. If you want to book a room, normal room, if you go to a star hotel, you have to pay 5, 10,000. Here you have to pay roughly 1,000 rupees per day, that's it. Good rooms. Okay. Not like OU rooms. Fine. Follow. Come back. So members get the benefit to enjoy the facilities of the club, and when other members come to the club, they get to meet people. Sir, why do we do this? Remember, this club is there from 1850. Today, if you want to do something apart from studying, you have so many things. You can watch OTT, go to some mall, go watch some movies, go to the beach. There are so many things you can do for. There are events, weekends, some painting class, this class, that class. You have so many things. In 1900, the only entertainment people had was to go to clubs. The beach was there. Not everybody goes to the beach. There were no cinema halls, there were no malls. So the elite people used to go to club and they used to mingle among with each other in the clubs. They used to have some fun time. Are you following, guys? That was the purpose of club. That's when the club started those days. Today, if you want to become member of Cosmopolitan Club, you have to pay, you have to pay a membership fee, a lifetime membership fee. That will be, today, as of today, I am talking, I think it's around 25 lakhs you have to pay to become member of Cosmopolitan Club. That means you can go to Cosmopolitan Club Chennai or any other club in India, Bangalore, Mumbai, wherever they have branches. Apart from that, monthly you have to pay 2,000 rupees membership fees. Monthly you have to pay membership fee. That fees will be used for when you go to restaurant, you can eat the food, use this money. You can redeem that like coupon. Redeem. Are you able to follow, guys? Come. Okay. Then for swimming pool, or if you want to book the hall, you can use this membership fees for redeeming that. Clear? Understanding, guys? Same way ICA, you are all student members. You have paid the membership fees. When you joined, you paid one membership fee. Is it lifetime validity? No, it has few years. Correct? Inter-student, again you have to pay. Once you become a qualified CA, now I am a member of Chartered Accountants ICA. Every year I have to pay fees. Every year I am paying 4,000 rupees to ICA to use the ICA membership. Mandatory for the rest of my life. As long as I tell I am a CA and use the membership number, I have to pay 4,000 rupees to ICA every year. No exam and all for me. Membership fee I have to pay every year. Are you following, guys? So, these Section 8 companies, this is one type of Section 8 company, one type of non-profit, one type is a club. We just now saw one. The other type, so here is there any charity? No charity. But they don't pay tax. Here there is no charity, guys, but it's still a non-profit organization. Intention is not to earn profit. That's why biryani is 90 rupees. Intention is to provide facilities for our members. The other type are charitable organizations where you give donations like schools. You are giving donation to school. Fees, they call it as donation. Why? To build a new building, we need money. Leave schools, come back to charity. How many times have you seen Instagram ads? Some ad will come, Keto 1 or Milab, someone is going through a difficult time. Please donate how much you can. Have you got those ads, guys? Now, if I give that money, what is the proof that they are using money for that? Tomorrow I will put a story. Guys, 10 students who need to study for CA. I am collecting fees so that CA students from underprivileged society can join CA course. If you want, you contribute. I am putting my QR. Seeing this, you all trusted me and gave the money. I collected 3 lakhs. Next week I took a flight, went to Europe for 1 month, went for a trip and came back. What is the proof? I am actually spending the money for charitable work. How many times have you seen YouTube channels, YouTubers collecting charitable money, Instagram influencers collecting money? Are they actually using it? Sometimes it became an issue also. This guy took the money, he didn't use for this, he used for something else. Correct? So, because this problem should not come, that's why we have Section 8 company. Only a Section 8 company can collect money. I can't put a QR code and tell, come on guys, donate. I can do it in small scale. Remember school days, Helpage India, we'll give one paper, go and collect. Neighbors, 10 rupees, 50 rupees, will get one badge. Section 8 company, non-profit organization. Remember guys, who collects more money will get badge in the assembly. He is the winner. Okay, fine. So charitable organizations collect money. So since they are collecting money, that is the income for them. That comes on my income and expenditure account as a income. Are you following guys? Expense is what they spend for. Now the point is, the money that you pay, will it come in income and expenditure or will it come in balance sheet? Let's go to Cosmopolitan Club. If you want to become a member, you have to pay a one-time membership fees of 25 lakhs. That will come to P&L or balance sheet. Balance sheet, because it's not a recurring item, it's a one-time thing. So generally one-time things comes to my balance sheet. Here there is no capital. The donation you are giving is the capital. So it will come here under the word capital fund. But same Cosmopolitan Club, monthly you have to pay 2,000 rupees to use the facilities. That's a recurring income. That will be my revenue. But we don't call it as revenue. We call it as what? Under income, the money that you get, I'm collecting from my members. Club is collecting from members, so it's called subscriptions. So I'm just introducing terms because other things like salary and all is normal. Only new terms we need to know. So let's look at the new terms. Understand the terms. Straight away we'll go to sums. Okay. Not much concept here. Only few terms I want to teach. You should know which has to go where. There has to be the terms. Where is it? .8. Okay. That's here I told you that different types of NPOs, hospitals, sports club, drama club, educational, library. Each organization, based on the organization, the revenue will change. 9.8 is it? Yeah, here it is. Accounting treatment for a few things. Now, donations. Now, donations, very simple. Should it go to P&L or should it go to balance sheet is the question. Okay. If the donation is given for a specific purpose, school is collecting, when I was in school they collected 25,000 rupees donation. We asked why. We are building a new building for that. Okay, donation. When donation is collected for a specific purpose, that will go into my balance sheet and to capital fund. Any other income, not a specific purpose, generally money came, it will go to my P&L. Are you following? Simply I gave donation, goes to my P&L. Okay. Next, entrance and admission fees. What do you mean by entrance and admission fees? For example, now club. To be admitted to club, you have to pay 25 lakhs entrance fee. To become member of CA, ICA, you have to pay registration fees, student registration fees, entrance fee. That will be what? No, capital. By a capital, it goes to my balance sheet. Are you following? But however, let's say you go to MGM or VGP. There you have to pay entrance fee to enter that amusement park. That's if it's an NPO for, let's say, heritage sites, Crocodile Park with a non-profit organization. Chennai has this Crocodile Bank. I'm sure you would have gone on school excursion. Gindi Park, Vandalur Zoo. So these are parks. Entrance you have to pay this 50 rupees, 100 rupees ticket off. That is the recurring income. That will go to my P&L. Are you following guys? Clear? Okay. Subscription. Monthly income that you get goes to my P&L. But sometimes entrance fee will be treated otherwise also. Depends on the question, but these are general provisions. Subscription we know. Subscription lot to be discussed. I will come back to it later. Then few other small things. Lifetime membership fees. When you become a CA, then CA has something called benevolent fund. They have some magazine funds, etc. You can become a lifetime members by doing some one-time contribution. Those things will go to my capital. Very simple. Is it a one-time thing or is it a recurring thing? One-time thing or specific purpose? balance sheet, capital fund. What will be the entry that time? Bank account debit to capital account. In balance sheet, I will write here capital fund. If it's income, instead of capital, write bank account debit to income and expenditure account. That's it. So only thing different in this chapter is new terms. If you are good with final accounts, preparing P&L balance sheet, that manufacturing account, P&L balance, this also is same. Only the terms are new. That's it. So membership fees will be going to my capital fund. Okay. Sometimes if any amount is calculated based on average life of the member or it's paid recurring, then it goes to my income and expenditure. Sometimes if it's recurring in nature, question will talk about that. Other things, donation, specific donation goes to my capital, general donation goes to my income and expenditure. I told entrance fee should be capitalized, the 25 lakhs for Cosmopolitan Club, but if question gives a different treatment, follow that. Like MGM, VGP, that entrance fee go to P&L account, recurring entrance fee. Okay. Legacy, what is legacy? What is this? Amount received by organization as per the will of the person after the death of the person. See, for example, if you take this actor, Jackie Chan. Okay, Jackie Chan everyone knows. He decided long back, 10 years back itself, he publicly announced all the money he has earned. He has earned a lot of money, one of the top Hollywood actors, everyone knows about him. You would have seen some movie. He told all his money will not go to his kids. He openly told, his kids filed a case against him. He said, you do what you want. You are an irresponsible, stupid fellow. Why should I give my money to you? You earn it. He clearly told all his money will go to charity. He is not given 1 rupee also to his kids. Okay. I don't know if he's given, but he's not, 90% has gone to charity. Like that, some people, whatever they earn, if they don't like their kids or some fight comes, all the money will go to some other person. So like that, sometimes I can contribute the entire money to a club or a school or a college. That is called a legacy money. That is basically what? Capital. People don't die every day. People don't die and give the money to you every day. So it's a capital fund. Clear? Life membership fee again capitalized. Same thing repeated. Clear, guys? So these are the, some more terms. Let's quickly see. Endowment fund donation. What is this? It's a donation for a specific purpose. I'm giving money to, let's say, some sports club to build a badminton court. Again, that will be capitalized because it's for a specific purpose. Then these clubs will have this old fixed assets, selling of that, treat it just like how you sell fixed asset. Normal final accounts, NPO, same. And treatment of sale of old newspaper and periodicals. What is this? All these clubs will have newspapers, magazines and all. Sell that. It is scrap sale, comes in income and expenditure. Are you following, guys? See, this chapter is a huge chapter. Earlier it used to be in CA Inter, earlier. So we used to spend 15 hours. We don't have to do so much. Exam, how to get the marks. That's what I'm focusing on. And last one, honorarium. What is that? Many times have you seen this chief guest and all will come. For example, in ICAI Chennai Culturals, in the year, if I remember, 2014 or 15, around that time, in Chennai ICA, there's a student culturals, chief guest was actor Vijay. I'm not joking. Really, actor Vijay came as chief guest in 2014, that time. It was a small culturals happening inside ICA in Nungambakam. There Vijay was the chief guest. He came for 20 minutes. Students did some special dance for him. Then he came, he spoke. Thank God I'm not doing CA. You are all great students. Then he made some speech and he left. That culturals, I was also participating in some ads up. So I was sitting in over there. So I was seeing student back then. Okay. For Vijay coming for half an hour and going, he can't charge 10 lakhs. Are you following? He will charge a small amount, honorarium. Because I came here to honor me 5,000 rupees, 10,000 rupees. That money is not a big deal, but a small amount to honor the person who came. So many times when chief guest comes, they will say minister is coming as chief guest. I can't pay them lakhs. Minister came to college culturals. Some hero came to college culturals. We will give them one garland, one bouquet, and one 5,000 rupees, some small gift for that. That is honorarium. Are you following? To honor the guests who have come, that is my expense. They are not employees of the company. Are you following, guys? Understanding? Hello? Clear? Sorry? It's not a receipt, it's a payment. No, it's not a capital expenditure. It is a revenue expenditure. So it will be debited to my income and expenditure account. Are you following, guys? Balance sheet it will come. If it's liable, still not paid, liability, outstanding varuvanga. Outstanding will come in balance sheet. Are you following, guys? Clear? Why we spent the last 15-20 minutes? Quickly, normally I spend 1 hour just for introduction. I'll ask you questions, you will tell. But for us, the exam is important. We just have, you are watching this 30 days before exam. Every minute matters. Okay. So, these terms are new in the chapter. Rest is same. The last thing which is new, where students get stuck, or the reason why this chapter is considered difficult by a few is because of one thing. What is that? Very good. You all remember. Subscription. For this, I will teach you concept. I will give you a format how to get answer in any sum, and we will do some sums. Because if subscription is dealt, rest of the chapter is nothing. Everybody agreeing, guys? Hello? No? Okay, this is the main thing. Okay. We will do sums, we will do full-fledged sums also. Logic, look at this. Before I go to subscription, forget NPO, normal question. Okay, if you understand the concept for next 10 minutes, subscription will be in your fingertips. Let's say we are in the year April 23 to March 24. Okay, forget NPO, normal company. Rent expense. Rent is 1 lakh per month. How much per month, guys? 1 lakh. This is my profit and loss account, not income. P&L account. This year, rent is 12 lakhs. I also paid 12 lakhs. What will be debited? 12 lakhs. Okay. This year, rent is 12 lakhs. But I have told my landlord, see, now I have the money. Better take it when I have the money. For him, 2 years rent I paid together. How much I paid him? 24 lakhs. I gave him one check in April 23. If you find a tenant like that, you are lucky. But he gave the full money together. Okay. The tenant in P&L, he will debit 12 lakhs as renter, 24 as renter. Why 12? Because you will debit only what is incurred for that year. So my entry will be to bank 24 lakhs, rent account 12 lakhs which goes to my P&L, and very good, prepaid expense rent 12 lakhs, this goes to my balance sheet. This is for this year, correct? Next year I will anyway not pay rent. That time the entry will be rent account debit 12 lakhs P&L to prepaid rent. So even though I have paid 24, in P&L account I will show 12 and 12, correct? Correct. Now another example. I have to pay how much rent this year, guys? 12 lakhs. I paid 0. I didn't have money. COVID. I didn't have money. So I didn't pay 1 rupee also. I paid 0 rent. Okay. After paying 0 rent, in my P&L, how much will I debit? How much I will debit, guys? I will debit 12 lakhs. Even though I have not paid rent, I am debiting how much? 12 lakhs. Correct? Are you following, guys? What is the entry for that? Rent account debit to rent outstanding 12 lakhs. Correct? That means everybody knows my profit and loss account expense or income should show and reflect only the income and expense that is accrued or belongs to that year. You should not show prepaid rent here, or outstanding should not come here. Prepaid and outstanding will come in the balance sheet. Prepaid will come in asset side of balance sheet. Rent will come in. Outstanding will come in liability side of balance sheet. Are you following, guys? Clear? Okay. Now, let's take the same rent outstanding. Okay. Let's say year 1, year 2, year 3, year 4. Okay. Each year, every month I have to pay 12 lakhs. So, as per accrual, each year debit to P&L should be only 12, 12, 12, 12. This should be the final answer. Correct? Okay. Now, first year itself, I paid 18 lakhs. Correct? So, how to show this? This year I will show 12. Next year I will show expense as 6. I have to pay only 6 lakhs this year. Enough. But next year also I paid 16 lakhs instead of 6. Okay. Now, what will happen in next year? Next year debit will be only 12. How much is prepaid? 10 lakhs is prepaid. Correct? Because I have totally 22 lakhs. Only 12 is enough. 10 is prepaid. Next year pay panla. I didn't even pay. Up to 10 lakhs I will account. Anyway 12 is there. 2 lakhs will become. Correct? This is for expense. Are you able to do this roughly? Because it's a simple computation. Subscription also same thing. Subscription is nothing but opposite of this. It's an income. Subscription is an income instead of expense. So, subscription income should be what is belonging to that year. If you received over, take it to what? Credit it goes. If you paid less, it becomes an asset. Look at this. It's opposite. It's opposite of rent outstanding. Okay, opposite of rent outstanding, meaning now if I take rent outstanding account, it's a liability account. Prepaid rent is an asset account. But if you take subscription outstanding is an asset account. That's where the confusion comes. Because whenever we remember the term outstanding, we think it's an liability. But this is outstanding of an income. Income varala. So it becomes an asset. That means balance will be on which side? Debit side. Rent outstanding balance will be on credit side. Are you following this, guys? So subscription outstanding is opposite of rent outstanding. Rental enna panuvingana you are very much clear. Salary outstanding, rent outstanding we know because it comes repetitive in many chapters. Subscription outstanding, do the opposite of rent outstanding. Clear? This I will teach you with the sum itself. Okay, we will do with salary itself. Salary is an expense. Okay, illustration 3. And okay, leave one. One is a basics. One is a simple sum, guys. One they ask me to prepare receipts and payments account. They ask me to prepare cash account. So if you read this, the receipts and payments for the year ended as entrance free 3,000. Received or paid off? Received. So I will write here entrance fee 300. Are you following? Membership fee received is 3,000. I will write here received 3,000. Donation for club pavilion 10,000. Received or paid off? I am the club. I will receive donation. I am putting 10,000. Like this, all the things you have to classify as receipt or payments. And they gave in the question opening cash and opening bank. I wrote opening cash, opening bank, all receipts and payments, closing cash and closing bank. That's it. Simple sum. Don't expect in exam. It's a cash account. Okay. Now going to illustration number 2. Okay. First let me do illustration 3 because salary and rent is what we were just discussing. Prepare ledgers, it gets solved. Look at this. Salaries paid during the year is 23,000. Following information is available. Salary unpaid last year prepaid last year, unpaid this year, prepaid this year. How much is debited to my income and expenditure account? Don't do the sum. Look at this. Okay. Follow. I'll give an example. We'll create the ledger. Salary payable is 12 lakhs. Okay, our example, salary payable is 12 lakhs. I paid only 7 lakhs. Correct? So salary payable is 12. I paid only 7 lakhs. Okay. Tell me the entry. Entry. Salary account debit 2 5 lakhs. Correct? Now I will represent this in ledgers, guys. Let's represent this in ledgers. I am writing salary outstanding account will have an opening balance of how much, guys? 5 lakhs, because I will write here by salary, and salary account will have a debit of 2 bank, 2 salary outstanding, 7 lakhs and 5 lakhs, total is 12 lakhs. Correct? Are you following, guys? Hello? Is this part clear for everybody? So outstanding this year ending, when you see balance sheet will have a liability of 5 lakhs, salary paid is 12 lakhs. Clear? Now look at this. Next year when I open the account, I will have salary outstanding account by balance brought down 5 lakhs of. Correct, guys? By balance brought down will be 5 lakhs. And next year, let's say, next year also payable is 12 lakhs. But let's say I have paid only 2 lakhs. Now my entry will be salary account debit 12, to bank, 2 outstanding 10 lakhs. Correct? So what will happen to salary account? Plus 10 lakhs. Correct? So this is 10 of year 2, already old outstanding 5 plus 10. So my closing balance will be 15 lakhs. Anyway, debit to PL will anyway be 12 lakhs. Correct? Are you following, guys? Now this is a cumulative balance. So understand how an outstanding liability account looks. Okay, I am trying to create the template with logic. Opening liability will be on this side for any year. Closing liability will be on this year. Every ledger should have 4 basic things. Opening, closing. This side, what addition is coming? Current year outstanding is what I added. Correct? Current year outstanding comes here. What will reduce here? Paid of previous year, or anything which is paid will come here. Correct? For example, let's say in year 3, this is year 1 and year 2. Correct? In year 3 again salary is 12 lakhs. Now I have paid 15 lakhs. What will be my entry now? Salary account debit that year's expense. I am saying last year's is paid now. Correct? Salary outstanding account 3 lakhs to bank 15 lakhs. Correct? Are you following, guys? See, I am paying this third year, I am paying 15 lakhs. In that question is given, 12 lakhs of that year is paid and 3 lakhs of previous year is paid. So salary account debit 12 lakhs, outstanding account debit 3 lakhs, to bank will be 15. Salary account will anyway have its debit of 12. Here I am writing salary outstanding account debit how much? 3 lakhs. So now your closing will become 5 plus 10, 15 minus 3, 12. Old 12 lakhs is still not paid. So this is how it will look. Are you understanding, guys? Are you following? Clear? So now if I put those numbers over here, whatever we wrote, opening liability was 5 lakhs at current year outstanding, 10 lakhs paid of previous year how much? 3 years, 3 lakhs. So balance is 12 lakhs. Are you following? Now I am going to year 4. In year 4, I am saying I paid 7 lakhs, but the full 7 lakhs is last year payment paid now. I paid for last year. So what will be the entry? Salary outstanding account debit 7 lakhs to bank 7 lakhs. This year did I pay? No. So this year's entry will be salary account debit to salary outstanding how much? 12 lakhs. So if I come here, I will write current year again I didn't pay how much? 12. Previous year I paid 7. Are you following, guys? Clear? So outstanding account operates like that. Opening outstanding, anything else not paid, add anything else paid minus you get closing outstanding. Are you following, guys? Clear? Then what about the salary of that year? That will be in which account? Salary account. Are you following, guys? Now I am going to do something where I am going to merge both these accounts. Salary account in all our examples had a debit of 12 lakhs. Salary outstanding had only a liability. In our example, first year was how much, guys? Okay, whatever amount. First year, let's say, out of 12 lakhs, I paid only, how much we discussed? 7 lakhs was paid. So outstanding is 5 lakhs. Now, so can I say the debit here is always what is paid? So can I say the credit here is what is the current year outstanding? Current year outstanding, not paid. This is my closing. So can I say what is paid is a debit here, which is generally available in my receipts and payments account on the payment side, correct? And what is current year outstanding will be available in the debit side of income and expenditure account, which is not paid. Generally for look for values. Are you understanding? This is for salary. Keeping this in background, this is for outstanding, guys. Prepaid will become opposite. So if it is salary prepaid, advance payment will generally come in asset side. So this side I will write to balance brought down. This side will be by balance. Let me give you an example. Salary payable is 12 lakhs. I paid 14 lakhs. So prepaid opening will be 2 lakhs. That will be carried forward. What will be addition here? More payment. So next year instead of 12, next year I paid, let's say 7 lakhs this year itself. So I will add another 7 here. Whenever I use this account, it will be a reduction over here. Correct? Are you following, guys? Whenever I use the account, it will be a reduction. If I didn't pay next year, then I will use from salary prepaid. You have to be strong with prepaid and outstanding. Chapter is over. Are you following, guys? Let me do the sum for you. Okay. Here, you have to prepare 2 accounts. Outstanding account and prepaid account. Are you following, guys? Okay. let's understand the terms in prepaid first. The opening will come here, closing will come here, more paid now for the future will come over here. What will come here? What is not paid in this year, but I am using the previous year values will come here. Are you following, guys? So I can open salary outstanding account, salary prepaid account. Are you following this, guys? Prepaid means paid extra this year for the future. Let's plot the values. First, let me write down these four values: opening, closing, opening, closing. Salary unpaid on 31st March. What is this? Opening balance. So it will come this side. How much? 1400. Correct. Next, prepaid on 2019. 400. It will come where? Opening balance 400. Then unpaid on this year ending 1000. 800. And prepaid on this year closing. Are you following this, guys? And he is saying salaries paid. Suppose salaries paid 20,000, following information, opening, closing. Calculate the amount to be debited to my income and expenditure account. Now salary paid is how much? 20. Now let me merge both these accounts. I am going to merge both the accounts, creating a combined account of prepaid and outstanding. So I will write 1400 here, 400 here, 18 here, 6 here. I am mixing my liability and asset. To know the set off, are you following, guys? See, first I did separate ledgers for you to understand. I am creating a combined ledger, nothing harm in that, correct? Correct, combined ledger. Now, combined ledger, generally what is paid, whether it is in this ledger or in this ledger, paid will come which side? Debit side, correct? Outstanding, I just now told you on top, paid is coming here. In prepaid also paid is coming. Advance payment is coming here, correct? So whichever account it is, whether outstanding or prepaid, paid will come on which side? So I will write debit side, how much? 23. This is my balancing figure. This is, what is the amount here? Can you compute? 23? 23. 200, correct? Now follow very carefully. Let's call this account as X account because I have just created a dummy X account. I have merged both, correct? So you all understood how 23,200 came. Now if 23,200 is coming on the credit side of X account, the entry will be to X account 23,200. Then something is debited. What is that? Income and expenditure account is debited. That should be my answer. Go and check. I don't know what's the answer. Where is it? 23,200. Are you following, guys? You got the logic? Hello? Okay. Now there is a formula in the book for outstanding. So basically, if you look at the exam, there are only 6 things, guys. 6 things are given. In these 6, somehow 5 will be available. You have to find the 6th thing. Now, how did you find 23,200 in this question? Numbers 400 plus 23,000 plus 1800 plus minus 1,400 minus 600. Can you replace these numbers with English? What is 400? What is 400? Can you see what is 400, guys? So I'll prepare like a table now. Okay. Nobody is going to mug up this, but I'm telling you we have this in the book. Where it gets difficult. How did you find 23,200? I want to know the formula. 400 is what? English. Opening prepaid, correct? So I'll write opening prepaid XXX plus 23,000. What is that? Salary paid in current year in terms of cash XXX plus what is 18? Closing of what? Closing outstanding plus closing outstanding XXX minus, we did two things, 4 and 5. What are the two things we minus, guys? Closing out, we minus opening outstanding, so we minus opening outstanding and minus closing prepaid. We got the answer salary debited to income, and this is the formula in the book, guys. You will find one equation somewhere. I don't know where it is. Somewhere like this. There will be statement in many. I have seen this statement like this, guys. One formula. I don't like this. This is the equation. So what I am more bothered about is this, guys. Not that. But many times this one equation will be used. I will show you. It's part of. It's not a separate equation. They will use a part of this in sums. Now look at this. They will use a part of it in the sums. In illustration 2 also. 2. It's not a separate formula. Illustration 2. Yeah. So if you look at this. Like this it will come. You will get confused why I am adding, why I am lessing. This is income part. This is nothing but part of this equation. Are you following? So basically I am merging my liability and asset account into one. So if I merge my liability and asset, debit side will be payment, credit side will be the debit to my income and expenditure. Are you following, guys? This is for my current year. Is this clear? Don't mug up this. Just know this. What if this value is 0? Then in the formula that will become. Are you following, guys? Everybody understanding? Now this is for a liability salary outstanding. We have to do the same thing for income, which is the opposite of this, which I will do it from scratch. Are you understanding this, guys? Okay. Now, so illustration 2, 1 is done, or 1 or 2, whatever number. Now we will do the subscription. Now coming to subscription. Salary is something you can connect with. Now coming to subscription, guys. Very important. Follow. Subscription outstanding account and subscription prepaid account. This will be opposite of what you know. So salary outstanding opening balance will come on the credit side. Here it will come on opening balance. Here I will get my, this will be in my balance sheet on the, because it's a receivable. Subscription prepaid is a payable. You paid me in advance for the next year. For you it is prepaid. For the club it is liability because you paid now itself. So prepaid opening balance will come this side. Closing balance will come on debit side. Are you following, guys? Clear? Whenever something is, okay, this is the entry. Are you following? Now if I receive subscription, what is the entry, guys? Bank account debit to subscription income. Or if I received in advance, bank account debit, let's say subscription receivable is only 100 rupees. But you paid 150. What's the entry? Bank account debit 150 to subscription income 100 to subscription 50. Correct. Subscription is 150. You paid only 70 rupees. What's the entry now? Bank account debit 70 to subscription income 70 to subscription. We'll just write it again. 2 debits will get subscription. Outstanding account debit how much? 80. You didn't pay. Bank account debit 70 to subscription income 70 or 150. No, this year you're supposed to pay only 100. Okay, you're supposed to pay 150 to subscription income, correct? 150, correct? You're supposed to pay 150, you paid only 70. This will be my entry, correct? To subscription income 150, correct? So look at this carefully. If you are paying in advance, it will come in the credit side of my prepaid account. So it will come, if you paid more, money will come here. If you pay less, the outstanding debit will come over this side, correct? Now if I prepare a merged account for both, opening closing will come. This side represents what? What is paid, received in advance, not paid, I should use the word received in advance. This side will be yet to be received, receivable. Are you following? So if I combine my subscriptions together into one ledger, follow guys, one ledger, subscription, this side will be what guys? Outstanding opening balance, subscription, prepaid opening balance. This side will be closing balance of subscription, prepaid in advance. This side will be subscription, outstanding, closing balance. This side will be what is paid, sorry, for them paid, for me this will be what? Received. What is received? This side will be receivable. Are you following guys? My 6 things are clear. Now let's fill values from the question. Question number 2. During the year 2020, subscription received in cash is 42,000. It includes 1,600 for 2019, 600 for next year. Also 3,000 still has to be received, correct? Now, if I have to put this in a book, look at this. I received how much? Where will I write here? Correct? Are you following? Is received is 42,000. This includes 1,600 of last year. That means it's opening of last year. Last year outstanding is not yet paid. See, this 42,000 includes 1,600 of last year. That means opening outstanding is received now. Correct? What is payable is received now. Correct? And apart from this, 600 is for next year, which is paid in this year. So this will be closing prepaid, correct? And then 3,000 still has to be received. What is that? Outstanding of current year. Subscription prepaid they have not given, 0. Now they want you to find what? Amount to be credited to my income and expenditure. Check how much are you getting. 42,800. Are you getting this guys? Is it the balancing figure? Hello? Everybody getting this? Now I have to convert this to a formula. Convert this to what, guys? So how did you find 42,800? This, what to say? This 0 plus 40,000 plus 3,000 minus this. That is what they did here in equation. Are you following up? I do not use the equation method. You can memorize that. This is the equation, correct? For this, how to write the formula for subscription? Let's convert this account into, understood, account of opposite of salary. If you understand the account format, any sum we can do. What is my formula, guys? So let's do, can we split the formula into two? Meaning prepaid, we will keep it separately. Outstanding, let's keep it separately, and then let's merge, because some sums they will be separate. For prepaid, can I say opening prepaid minus received, minus receivable will be closing prepaid, correct? So opening prepaid minus receivable is equal to closing prepaid. In other words, if I have to explain this with numbers, I already received 3,000 rupees. This year I did not receive 1,000. So I will adjust this 3,000. So balance prepaid is 2,000. Are you following up? Look at that. Opening prepaid is 3,000. This year I did not receive 1,000. So adjust the 1,000. So my balance receivable is 2,000. For outstanding, formula will be what, guys? Opening outstanding. Look at this. Opening outstanding minus received is equal to closing outstanding. Are you following, guys? Now combine. Let's combine both the equations. Combine both the equations into one big equation. Ledger. I want to know what is 0, guys. Opening prepaid. So let me prepare like statement, like how you are aware. Opening prepaid XXX, in our case 0, plus subscription received minus, plus closing, I missed that, yeah, plus closing outstanding. In our example, 42,000 and 3,000 plus 42,000 plus 3,000, 4, 5, 6 minus opening outstanding minus closing prepaid will give me the final answer of receivable for current year. You will get this, correct? This only goes to my which account, guys? Income and expenditure. Are you following? This formula only, if some data is not available, that will be 0. Now this formula only is used in the book in this sum and every other sum. I can't explain that formula. The formula's logic is this, where we started off with single accounts and we merged them into one account. So what you should remember is this, but memorizing this becomes difficult for anyone, even for me. I don't memorize. I made it now because I know which one. I know these two accounts. I just merged the accounts. Started off with salary outstanding, we ended here. This is my account. Are you following, guys? Everybody aware of this account now with logic? Hello? Now we are done with question number 2 also. Now let's do question 3. So you need, 3 we finished, sorry. So 3 also is done. Are you following, guys? So many times they ask sums only with subscription. He will tell subscription payable so much, last year outstanding, previous year outstanding, so many outstanding. I don't care. Opening balance will be opening balance of all the years outstanding. If I am in the year 2020, then opening balance will include 19 balance, 18 balance, 17 balance, 16 balance, cumulative, opening balance is a cumulative balance, correct? Similarly, prepaid should be a cumulative balance. Are you following, guys? Do we have any other sum where they are testing only subscription? That's all. Where? Sixth one. Yeah, let's do 6, 7 first because subscription is where that's important for us. 6 and 7. Let me do 7 and then go to 6. Okay. Are you following, guys? Okay. Now you have to compute. Now you need to apply that logic. I am going to prepare that subscription account, guys. I like the ledger method. How many of you till now have been following ledger method? How many of you followed statement method? Memorize mugged up statement. Okay, you remember school. When I was in school also, my teacher made me memorize that statement. I remember that. Doesn't matter. Okay. Ledger is logic. So I like using that logic. Statement is derived from ledger. For exam, which to use? Whichever you are getting the answer and whichever you are comfortable, use that. I don't want you to change. I'm going to solve in both. I'm going to solve some in both ledger and statement. You solve whichever you are comfortable with. Okay. Look at this. Following is information. Calculate amount of subscription outstanding for the year ended 31st March. That means subscription outstanding will come where? In subscription outstanding, closing will come on. Closing balance outstanding comes here. This is the answer I need, correct? Now if I go back to equation, closing subscription is this. So if you know the equation, you will put left hand side, right hand side, you will keep changing formulas. Sometimes it can go wrong. Okay, so I need to find this closing balance. Are you following, guys? Let's plot. Out of 6, 5 will be given in question. You should find only the last one. Look at this. A club has 350 members, each paying annual subscription of 1050. That means I should receive how much? Receivable is how much? 350 into 1050. 367. This is receivable or received? Receivable. Where it will come? 367,500. Why it's coming on debit side here? Then only income expense will come on the credit side. Income expense will come on credit side, then this side will come on debit side. Next, the receipts and payments show a sum of rupees 4,10,000 received. This is received. Where it will come? 4,10,000. Now write the other things. Following additional information. Okay. Salary outstanding. Opening 45,000. Where I'll write, guys? 45,000. Then come down. Subscription received in advance. Subscription received in advance. Opening prepaid 30,000. Where it will come? 30,000. Closing prepaid 62,000. That's it. What is the closing missing figure, guys? 45 plus 367 plus 62 minus 30 minus 410. 34,500. Go and check the answer. 34,500. Are you following, guys? Are you all getting the answer? Hello? Are you getting the control, guys? Okay. Those who already know it, good. It's a revision for you with logic. Understanding, everybody. How many of you learning this ledger method first time? Finding it comfortable? Easy? Okay. I'll test if it's easy or not, live or recording. Question number 6. Who will do it? You guys should prepare that ledger. How much time you need? I think 25 seconds is enough, guys. 25 seconds should be enough. No, that's it. 25 seconds is enough, guys. Roughly prepare. What they want you to find out? What should be the amount credited to income and expenditure? That means they want to find what is receivable. Do it, guys, fast. 25 seconds is a lot of time. Fast. If you want, I'll make it 30 seconds. How many of you got the answer? Sanjeev got it, yes. 2 of them got it. You just post which is credit, which is debit. You don't have to prepare the ledger. Just put it mentally also. Got it? That's it. How long you took? 20 seconds. Yes, super. Abdullah finished it. Mitan finished it. Very good. Online, those who have finished can put in the chat. Rohit, now only I am seeing your doubt. Practical question number 3. Behind the book. Okay, I will try to do that. With logic, you will do it. Follow, guys. Okay. Everybody got it, guys? Now, when I read the question, I read like this. Totally, how many numbers are there? 6. I told 5 will be given. You have to find the 6th. 1, 2, 3, 4, 5. So, 6th I have to find. I know we're using that ledger. But ledger with logic is what I explained. Why outstanding is debit side. That logical, see, I don't want you to memorize the ledger like this. With logic is important. That's why we spent half an hour starting for logic. If you have to put this question, if I have to write all the values, received is how much? 4,50,000 will come this side. Then these subscriptions include 20k received for the year ended previous year. This is which one? 20,000. Opening prepaid how much? 20,000. One second. I'll prepare here itself. Subscriptions received where? 4,50,000. It will come here. Out of this, 20,000 received for the year. Include receipt for the year 31st March 19, previous year. What is that? So, last year's I am receiving now. That means it's last year not paid. So, it's opening outstanding how much? 20,000. Next, on 31st March, subscriptions due but not received is 15. Straightforward given. Closing outstanding. Then advance. Subscription received for the year ended 31st March but pertaining to next year 26,000. Therefore, it's closing prepaid. And subscription received in advance for the year ended 31st March. Last year advance includes how much? Opening includes 18,000. You will find this. How much is it, guys? 4,37,000. Here it's a debit. This account is called subscription account. It's mix of two. This will go to my credit of income and expenditure on the credit side. Are you guys following? Hello, everybody understanding of? Easy, guys. Clear? Already we came up till 7th sum. Middle, I know there are 2 sums left. Any other sum in the book for subscription? Someone told practical question 2. Let's see if it's easy or difficult. What is that? Practical 3. Okay. What is it about? Oh, full account. Okay, then we will do it later, guys. Yeah, I will do all some subscription. First, let me do a few basic sums. Now, you understand how to do subscription, guys. Now, let's go to main illustrations. Let's do illustration. I will try to finish all the sums, guys. I have a cutoff also because we have to deal with other chapters also. Okay. Next, let's go to question 4. I'm not doing it. You are not doing it. We're just going to go through, understand how it has to be done. Now, follow. In most of the sums, the question will be receipts and payments, cash account. You have to prepare income expenditure and now tallying this should never be an issue. Whenever you read a question, income and expenditure, balance sheet. What is the art of preparing balance sheet without getting the issue of not tallying? Whatever is there in receipts and payments account will only go to one place. Will only go to one place. For example, if I take salaries and wages, 1,65,000, it will only go to one place. either it will come here, here, here or here. The adjustments below will have a dual impact. One debit and one credit. One debit, one credit. It can be anywhere. Okay. So if you can correctly plot that, why will balance sheet not tally? When you are putting in result, you should ensure, is this an item from here? Then it should come only in, impact is only one place. If it's an item below, impact is in two places. Are you following? Clear? So if you look at this question, and whenever you read a question like this, what you have to do is, first read the whole question once, go through all the receipts, go through all the payments, even big sum, same technique, come down and see the adjustments. Adjustments here is there for what all? Subscription, salaries and wages. Come here, I will put a small dot, subscription, salaries and wages. Then depreciation, capitalization of entrance fee. Depreciation will come for sports equipment, entrance fee, correct? Anything else is there adjustment? No. And there will be few things which are new here. So when I plot like this, then I will know when I am preparing my income expense and balance sheet, except these four things which I have marked with pen over here in black star, everything else impact is one place. Rest will be double impact. So I need to worry only about these four. Why am I doing this in the start of the sum? So that I don't miss anything. And sometimes, or even most times, the adjustments will have some things which are new. Then I will put a star here also. So I will check if all those stars are dealt. Sir, I should not write in the question paper. You should not write in the question paper. You can mark small things very subtly. You should not write a big star. When an examiner is walking, they can see that. It has to be so subtle, a small dot or a small arrow, so that you are communicating to yourself. The intention of you not writing is because they don't want students to copy. You will write answer here and exchange question paper, all that they don't want. And now, earlier we had the set, now you have set. To school we have set, correct? Set paper, yes or no guys? So a same class will not write the same paper. 1, 2, 3. So your friend would have written some other paper. What was it? Okay. We don't have that in CA, guys. Yeah. Okay. I remember set somewhere was there. Here only once. Here also we have 3 sets. CA exam we have set A, set B, set C. But everybody will write set A only. Okay. But sometimes they will tell paper leaked. It has happened when my inter days, last exam for me was IT paper, IT. After I wrote my exam, they said paper is leaked. Exam is postponed by 1 week. So that time they will release set B. That means what happens? They won't prepare question paper again. They will prepare 3 question papers. They will release one for everybody. For whatever reason, if that one paper gets leaked or something, the backup paper will be given to everybody. How it gets leaked means very simple case. Leak is not, it's not like someone went and revealed it. How generally CA exam result got leaked? Question papers will be kept in the bank. See, in the bank, in every city, it will be kept in the bank locker. So that college principal or somebody will go to that bank. That day exam, they will take the paper and come and give. In one center, what happened? For you to understand, today is accounts exam. They distributed law paper. So they bought the wrong paper from bank locker. So in one center. So it's leaked in, so if that happens in one center somewhere in country, then full country it has to be postponed. So that happened in inter once. But now they changed it. What they did, because that's happening, they are giving to the bank locker only that paper which is next exam. After exam, they are putting a new paper. So it won't happen. Okay. Bank locker, yes, it's in bank locker. If you have people working in bank, see, don't try to get the question paper. Try to learn this so you can taste it. He's thinking, sir, which bank I want to go there. Okay. Fine. Even I don't know where it is, guys. I know it's in bank locker. Maybe now it's kept somewhere else, but it's highly secure. Don't worry. It will be safe. Okay, now come to this question. Look at the adjustments. Let's deal one by one. Outstanding salaries was 40,000, but paid only is 1,65,000. So what should be debited to P&L? Look at this. Open the salary outstanding account if you have doubt. Salary outstanding. Okay. What is paid is how much? 1,65,000. Paid will come on debit side for liability. Closing outstanding not yet paid is 50. Yeah, 40,000 is my closing outstanding. So current year payable, no opening outstanding, they have not given anything. So current year payable is adding these both, how much? 2,05,000. In other words, see what is paid is, sir, in simple way can you explain? What is paid is 1,65,000 and they are saying outstanding is 55. That means I didn't pay fully. What should have been paid is 1,65,000 plus 40, 2,05,000 will be the debit of salary to my P&L account. Are you understanding, guys? If you open ledger, you will get the answer. See, outstanding ledger, I told you, has 4 things. Opening outstanding, closing outstanding, current year expense, paid. Start of the class I discussed this. In this question, opening was 0, current year paid is 1,65,000, closing outstanding is, so current year expense will be 2,05,000. Are you following up? Okay, next adjustment, where is that? Yeah, okay. Depreciation you know better than me, guys. From whatever plant is there purchased, I purchased the equipment for 3,42,000. From 3,42,000 I will provide straightforward depreciation. Very easy. Capitalize 50% of entrance fee also I know. Out of 85,000, half will go to balance sheet capital, half will be in income expenditure. Look at this. Entrance fee, half will come here. We are not preparing balance sheet, so no need to write. Are you following? Last one, subscription. This is where you have to help me out. Subscription received for the year is this much. And they are saying outstanding for the year is 55. Let me prepare my ledger of subscription. Okay. Whatever is there you write. If it's not there you put it as 0. Okay. Whatever is there. First, outstanding subscription. Closing subscription is how much? 55. Where it will come? Credit side. Closing subscription outstanding 55,000. Correct? What is received during the year is 3,55,000. In this received will come which side? Debit or credit or? Received, not receivable. Received. If you get doubt, I'll tell you how, which side to come. If you receive something, what's the entry? Bank account debit to something. So it will come on the credit side, so it comes here. That's it. Think of the entry. If I receive something, debit will always be bank. So credit only will come here. So received, how much? 3,55,000 for this year. I received this. But however, even last year's I am receiving now. 18/19 is received in this year. That means it's outstanding of last year. Where will opening outstanding come? How much? 65,000 is the opening outstanding. And what is received? Now will I write here 3,55,000 or 3,55,000 plus that? What I should write? Here I should write full amount that's received. So 4,20,000. So this you put as 0. This you put as 0. No prepaid in this sum. So prepaid 0, 0. This will be my income for the year. How much, guys? 4,20,000 plus 55 minus 65. How much? 4,10,000. Go check if that's the answer. I don't know. 4,10,000. Here they gave us formula. This formula is our ledger. Are you following, guys? Understanding, everybody? Clear? Got it? Hello? One is following, sure, that's it. Everybody clear, Delhi Babu? Okay, sure. This is illustration 4. Illustration 5 is one simple sum. If it comes, you're lucky in exam. What they are saying, from the following information, not subscription, guys, different sum. From following information of club, show amount of match expenses and match fund. Match fund will come in the balance sheet, expense will come in P&L. Look at this. Total expenses 1,10,000. Match fund is like a capital fund. So look at this. I have with me 30,000 capital, correct? Capital fund, credit side. It's a capital liability side, correct? Or leave ledger, guys. I have with me how much? 30,000. And during the year, I got donation 55 and proceeds from tickets I got 20. So totally how much money I got? 1,05,000. I spent how much? So I spent extra 5. So debit to expense. But if I spent only 90,000, I got 1,05,000. I spent 90. You will have extra 15,000, which will be part of the fund. So here I spent extra 5. So extra 5,000 is my expense. This will be debited to my income expenditure 5,000. Are you following, guys? Otherwise, if you have more money, fund will come this side. Correspondingly, this side we will have bank. See, all these are bank. So it's fund matched by bank account. Only if it goes beyond the fund available, then you will debit the P&L. I'm spending more than what I have. See, it's like telling, let's say, your parents gave you 10,000 rupees for next 3 months expense after your exams. Okay. So your parents gave you how much? 10,000. So in balance sheet, you will write bank account I have 10,000 and I have fund given by my parents. Parents fund given to me is 10,000. Once this money becomes 0, fund also will become 0. Apart from this money, you have other pocket money. Your own pocket money, you earn something. That cash you have some 2,000. Now in the next 3 months, you spent only 7,000 rupees, guys. How much of the fund of parents is left? I less 7,000. I have still 3,000 from parents fund available. Now, let's say next 3 months, you spent 11,000 rupees. So cash minus 11,000, you have left only 1,000, but fund is fully used. So what is the entry you will pass for 11,000? Fund account debit 10,000 to bank 11,000. Balance 1,000 debit will be to your P&L account. So beyond 10,000, if you spend, fund is over, you will debit what? P&L account. That's what is happening here. The extra 5,000 is debited to P&L. Now are you understanding with the fund, guys? It's just matching concept. It's not that if fund is over, money is not there. Money is there. Some other money is there. So now I can't, whenever I spend something, any expense, I will credit bank. Debit what? I will debit income and expenditure. But I will not debit income and expenditure if you have a corresponding fund. So first I will debit fund account to bank. Only when fund becomes 0, you will debit income expenditure. So in this question it is match expense income and expenditure account debit 5,000. Match fund account debit 1 lakh. 5,000 to bank 1,10,000. Are you guys following? Hello, everybody understanding, guys? Okay. This is question number 5. 6 is done. 7 is done. Question number 8. Okay. Fine. We'll just do a small diversion. Keep NPO for a minute. I'm going to June 23 question paper. I think this is the June one. Which question was that? Yeah, 2A. Depreciation 10-mark question was a doubt from the latest June 23. So I thought I will do one sum in depreciation, one in BRS, one in JLP. At least you get some comfort. We will do this, come back to NPO, then go for a break. Okay. In the middle, I'll just get these. Those who don't want depreciation, just fast forward the video. Okay. 10-mark question for depreciation. Simple question, guys. We can do it easily. I'll use the answer only and teach you. Those who know, it's like a revision. Those who don't know, I'll teach the concept of provision for depreciation here. Following balances appear. Missionary account is 12 lakhs. Original cost, I don't know if it's there in book and all, guys, but it's there in the book. Similar. Okay. Then provision, see all sums same method only. Provision for depreciation means this only, guys. Provision is 4 lakhs 65. I want to know what is the book value of this. What's the book value of this? 12 lakhs minus 4 lakhs 65. What is the book value of asset? 7 lakh 35,000 is the actual book value after reducing depreciation. We are in the year 2021, so it is April 21 to 1st April, yes. April 21 to March 22 is my financial year. Clear? Okay. On October 1st, the machinery was purchased on 1st April for 2 lakhs. That means, let me write the data into a timeline first. Question is given for 10 marks but not worth 10 marks in inter. Okay. So opening balance I have cost is 12 lakhs. Opening depreciation given as 4 lakhs 65. This is April 21. During the year, in October 21, 1st October 21, they purchased another machine for 2 lakhs. Purchase, okay, old one, sorry, which is purchased long back for 12 lakhs. Something which is purchased for 2 lakhs in 2018 is now sold for 1 lakh 10,000, and then on the same day another machinery was purchased for 4 lakh 80. So same day two things is happening, plus 4 lakh 80,000. The firm has been charging depreciation at 10% on WDV method every year. Prepare machinery and provision for depreciation and machinery disposal is nothing but sale account. Okay. First, let me prepare the easy one. Machinery account, everybody knows this, you can get your marks here. Machinery account, when they are using provision account, machinery account will have only original cost. So, opening I have 12 lakhs, I purchased 4 lakh 80, I sold machinery for 1 lakh 10,000, but the cost of that machine is 2 lakhs, so I will reduce 2 lakhs, so your closing balance will be 16 lakh 80, 14 lakh 80. If you are trying to use calculator for this, I don't know what to do, but 14 lakh 80, go look at the answer, it should be that 14 lakh 80, nothing great here. Why are you wasting time, sir? We are just doing the sum. This you will get your 2 marks. Are you following? In this method, only original cost will be taken. Are you following, guys? Everybody understanding? Now coming to the next part of the question. Provision for depreciation account. What's the opening balance? 4 lakh 65,000 is the by balance brought down. All of you understanding? By balance brought down is 4,65,000. Here what I have to do, follow guys, what I have to do here, when an asset is sold, and the asset irukra depreciation remove pannum. I will again say, when asset is sold, from the depreciation, remove that depreciation which is charged for that asset which is sold. Okay. Now, this asset which was purchased for 2 lakhs is sold for 1 lakh 10. Purchased on, now look at this. Purchase date is 1st April 18. Sold on October. What is the time period between this? 18, 19, 19, 20, 20, 21, 21, 22. So we have 3 years plus 6 months. Correct? For the asset which is how much? 2 lakhs. Adana remove pannu. I have to remove it from full depreciation. How to compute that? Very simple. Depreciation is what percentage? So I have to do year 1, year 2, year 3, year 4, half. First year will be 20,000. So I'll get 1 lakh 80. Second year will be 18,000. You will end up with 1 lakh 62,000. Next year will be 16,200. You will get 1 lakh 45,800. This year half. 1 lakh 45 into 10 by 100 into 6 by 12, 1 by 2, how much? 7290. Correct? What is the book value now? 1 lakh 38,510. Is this easy, guys? Yes, I'm sure 11th standard kid also can do this. Without a doubt, it's just book value minus depreciation. Clear, guys? Okay. If anybody is struggling here, let me know. I'll help you out, guys. No problem. You can ask the doubt. Really? Anybody? Hello? No one has the doubt. Okay. Fine. Now, what is the total depreciation? Add the depreciation of each year. 20,000, 18,000, 16,000, 7290. Add correctly and tell how much. Did we make it 61? 20 plus 18 plus 16, 200. Correct? 61, 490. So that much depreciation should be removed from my provision account. It's removed 61, 490. So look at this. From machinery account I removed 2 lakhs. From disposal I removed 61, 490. Removing both, it will go where? Disposal account. If you remove from these two ledgers, here 61, 490 is removed. Here 2 lakhs is removed. Both the removed will go somewhere. So that account is called machinery disposal account. There I removed 2 lakhs on which side? Credit side. So here I will get 2 lakhs on debit side. Depreciation 61, 490 on debit side. So here 61, 490 on this side. Clear, guys? Are you following? Now come back to provision for depreciation. You, apart from the existing machinery of 2 lakhs, in this asset, this 12 lakhs also, now I have to provide current year depreciation for existing plus new machinery is how much? 4,50,000 purchased into 80,000 into 10 by 100 into 6 by 12. How much? 24,000 is going to be the depreciation for current year. Did you check, guys? It's including that. New is 4 lakh 80 into 10% into 6 by 12. 1st October I purchased, October to December. Apart from this, Other existing asset, which one? Now, other asset, look at this. Current year, if I look at the timeline, beginning of the year I had 12 lakhs. Correct? Middle of the year I lost. No, I'm just writing the values. Next is 4.5. For 4.5, I computed depreciation for balance 6 months, which is 4 lakh 50,000 into 6 by 12 into 10 by whatever you get. How much? 24? 4 lakh 80, 24,000 now. That's it. Now, I want to find out what is the opening value of this, opening book value. SLM method means easy. I can straightforward apply what? 10%. So, I need to find the book value. 12 lakhs is year 0, year 1, year 2, year 3. First year depreciation 1 lakh 20 minus 10 lakh 80. Again 1 lakh 9 lakh 72. Again next year. How much? 8 lakh. Correct? Okay. So this is the book value on which day? Beginning of the year. 8 lakh 74. 8 lakh 74 800. This I am going to split into 2. From this only we are selling something. Correct? What is that thing we are selling? This. See, from, look at this, I will explain. From 12 lakhs of cost, we are removing 2 lakhs. But the current book value of the 12 lakhs at the beginning of the year is 8 lakh 74 800. So, for 8 lakh 74 800, what is the book value of this 2 lakhs? We computed above, look at this, 1 lakh 38 510. Correct? No. Which?
The last 6 numbers were included in that 1 lakh 38.
Correct. We should not take the 1 lakh 38. Correct, guys. This is as of, you are right. This as of 1st October. I want to find beginning of the year. How much is that? 1 lakh 45 800. Beginning of the year is 1 lakh 45 800. So I'll again tell you. This is 1st April 21. Cost is 12 lakhs. This I am splitting. I want to find the book value of this. The book value after reducing depreciation only we found 8 lakh 74 800. Correct? 8 lakh 74 800. In this I am splitting into 2. The asset which is sold middle of the year and the balance. The asset which is sold in the middle of the year, we computed above itself 1 lakh 45 800. Correct? So I will write here 1 lakh 45 800. So the balance is how much? 7 lakh 29,000. Are you following till here, guys? Everybody, I'll again summarize. This 7 lakh 29,000 is there in my business for 12 months. So depreciation into 10%. This is there in my books only for 6 months, for which we already computed depreciation. How much are you getting now? Both. No, this will be already computed. 7,000. 7290. This will be 72 plus this 72,900 plus new asset depreciation. We computed here. How much? 24,000 plus 24. 1 lakh 190. Can you add these two? 72,900 plus 7290. 80,190. Let's check the answer. 7290 is that same this 7290. the one which is sold. Here, 1 second, did I give depreciation rate? %10, correct? So current year depreciation should be much higher. What is it? 82. Yeah, we have it here. One second. No, this is yeah, this one. Okay. Old machine. See, we got 24 is correct. 7290 also is correct. Old machine is taken at 589 200. Okay. Okay, what? 12 lakhs. We computed 72,900, correct? So for us, 7290 is correct, 24,000 is correct. This 72,900, how did we do it? No, 12 lakhs minus depreciation, we are getting book value, and from this, okay, we are basically computing double depreciation. We will do it like this. Total asset is, let's split at the level of cost itself. Cost level, if I split 10 lakhs and 2 lakhs. Now for 10 lakhs, do depreciation for 3 years. You will get how much? 1 lakh, then 90,000. 81,000, you get 7 lakh 29,000. But they are writing, what are they writing here? 10 opening provision.
Is it doing like 2 months and then the rest 6 months?
No, I'm just checking. 2 months and
Then again,
I think they are computing this until okay. Now they are doing it only for, no, it's not for 6 months, because if you look at this, the depreciation is for, this is taken for first 6 months, this is for half a year, this is considered for 1 year only. 58,920, old asset minus 210 is coming, less depreciation. One second, let's, okay, 4,65,000, 54,200 is it? So 54,200 comes from here. You can add all these three. Are you getting 54,200 if you add this? 20,000, 18,000, 16,200. 54,200. But what is sold is already taken separately, correct? We reduce 2 lakhs here. Again, we are reducing second time over here. No, we have to check. 10 lakhs is the cost, already reduced 2 lakhs. So for this, reducing 4,65,000 makes sense, okay? Because that's the opening balance. See, opening we discussed this, if you remember. Got it, okay.
They are doing first reducing the machinery, then they
12 lakhs, 4 lakh, 65. So how it's done is, beginning of their opening cost is 12 lakhs, opening depreciation is 4 lakh 65. What is my book value now? 7 lakh 35,000. This they are splitting into two parts, 10 lakhs and 2 lakhs. Depreciation for assets sold 54, 200. So the balance will be 4 lakh 10,800. Correct? Are you following, guys? Let me explain. Look at this. Now I'll tell you why our method is, what to say, it's correct, but why it's not correct. Okay, I'll explain. Let me explain. See what we did over here. Our depreciation was this, correct, which is 1,90,000, 81,100, and we reverse worked and computed what could have been the depreciation of previous 3 years, correct? Assuming 1st Jan, 1st April 18, we reverse worked and computed. For how many years? 3 years. What's the mistake we did? What is 3 years is only for that part of the asset. The remaining of the asset when it's purchased is not given. Are you following, guys? That's the mistake which I did or we did here. Follow, guys. Are you understanding, guys? We reverse worked and counted depreciation. In the computation, computation is correct, but we computed for 3 years, assuming this as full 12 lakhs is purchased on 1st April. No, this might have been purchased on some other day, correct? Are you following? So now what we are doing, look at this. Now, 12 lakhs I am splitting into 2. This when it's purchased, I don't know, but this when it's purchased, I know. So the depreciation also 4 lakh 65, I am splitting into 2. 54,200 is for 3 years, which I computed. So the balance is for the rest. So now I am finding book value is nothing but 10 lakhs minus 4 lakh 10,800. How much are you getting? 5 lakh 89,200. In this I applied 10%. How much are you getting? 58,920 plus the depreciation of current asset 24,000 plus 72,90. That is separate. These both if you add, how much you get? 82,920. That's what is taken as depreciation of current year. 82,920. Are you following, guys? Clear? And then we get depreciation 7290 is for the asset which is sold. Current year 6 months for asset sold. Current year balance. Current year disposal. Balance depreciation carried forward is 4,93,720. Are you following, guys? How many of you understanding? I know we had little confusion, but understood. Let me again revise the whole thing. Okay. Follow, guys. See, basically I'll just tell you crux of what we have to do. We have to compute depreciation for 12 months if an asset is there in the books for 12 months and depreciation for 6 months if asset is there for 6 months. So we computed depreciation twice. For the assets sold, we computed for 6 months for the current year, that is 7290. For the remaining asset, we purchased one new asset. For that, we are computing for the balance 6 months, that is 24,000. This is 7290. Some asset, that 10 lakhs is there in the business for whole period, but this 10 lakhs is cost. To find current year WDV, I need to reduce depreciation provision to find current year's book value. So that's where what I did. Of the whole 10 lakhs, I kept 12 lakhs, I kept 10 lakhs separately, and from 4 lakhs 65, I removed the depreciation for the asset which is sold. So balance is 4,10,800, which is reduced from the cost. This is the book value. Which one? 5,89,200 is the book value of the asset which is there in the books for the current year. 58,920. Are you following, guys? And last, one more thing. We started some with this, correct? We found out that the book value of assets sold is 1,38,510. Remember, starting, guys, started at 2 lakhs, reduced depreciation for 3.5 years. We got 1,38,510. Something worth 1,38,510 is sold for 1,10,000. What's my loss? 28,510. So in disposal, you will write losses 28,510 of the total 2 lakhs. This is the entry. The entry will be like this: bank account debit. These three will be debits, guys. Bank account debit 1,10,000. Provision for depreciation 61,490. Loss 28,510. To machinery 2 lakhs. Are you following? That's the entry we are passing. The only confusion which I created, not your fault, is where we did mistake was that 10 lakhs we gave depreciation for 3 years, assuming purchase on 1st April. Don't do that. Leave it. If you didn't understand that part, leave it. It's good only you didn't understand that. Rest of the sums are you understanding, guys? Clear? Any doubts? Hello? Fine. Harish, following. Others, Delhi Babu, no, give up. Sure, 100%. Okay. See, I am just doing one random sum of past exam, guys. We are not doing the whole chapter. But again, let me just tell the concept of each of this ledgers. Provision for depreciation will always have the total depreciation of the assets in the company which is available. This year will be current year depreciation. This side will be remove depreciation of assets sold. That's the nature of the account. In machinery account, it's very simple. Debit side will be original cost of opening plus new additions at original cost. Sold original cost, closing balance. Disposal account will tell of the cost which is sold, what is the breakup of that. Of this, what is the depreciation, what is the book value, what is the loss or profit. Are you following, guys? Clear? If time permits, we will do one more sum, but we'll see. End of the class, we'll see, guys. Did you guys try illustration 8 in consignment? Yesterday we were discussing. How many of you went home and revised consignment? Good job. Illustration 8, how many of you did and understood? Few others tried. Okay. Can we do this sum and go for break, or go for break and come and do this sum? Okay. No, always majority, guys. Break you guys want, fine. We'll resume at 4:45 p.m. That's roughly 20 minutes. Okay.
no.
She will give to her baby a name. And love what? Spicy, but he loves. Normal thing is a when your message people take it for granted.
Settle down, guys. Okay, we'll go for another 1 hour 30 minutes, at least till 6:30. Let me finish off this consignment sum. Yesterday's sum. I'm hoping all of you are going through this. Let's read the question. Ajay of Mumbai consigned to Vijay of Delhi goods to be sold at invoice price. So Ajay is the, Vijay is the consignee. Okay. These goods have to be sold at invoice price, which represents 125% of cost. So if cost is 100, invoice price is 125, we will see that. Okay, 125. Vijay is entitled to a commission of 10% of sales at invoice price and 25% of excess realized over the invoice price. So that is very simple. That's like an overriding commission, double commission. Normal invoice price, I will get 10 and 25% of any excess if it's sold over invoice price. Expense of freight and insurance incurred by Ajay were 10,000. The account sales received by Ajay shows that Ajay has affected sales of 1 lakh in respect of 75% of the consignment. His selling expense to be reimbursed were 8,000. That's normal expense. 10% of the consignment of goods of value 12,500 were destroyed in fire at Delhi Godown. Abnormal loss. 10% of the goods of 12,500 was destroyed, okay, in Delhi Godown. Vijay remitted the balance in favor of Ajay. The money balance was remitted. Prepare the same consignment account. Here we have to find missing figures and all of that. And this sum also includes, what does it include, guys? Profit. Goods are sent at profit. Okay. Let's go to the previous sum, illustration 4, where we saw a sum which had loading. Okay. Now, do you remember this Nike Adidas sum, guys? Intentionally, I don't know if you're watching the previous video to here, you'll understand. Intentionally, one part in that sum I did not teach you that time because I wanted to do it in sum number 8. Now, in this sum, if you remember, Nike and Adidas, closing stock was 21,320 and profit was 5,000. Why am I doing this? This is invoice price. This is profit. If I adjust both, I get the cost. This is equal to writing 16,320 on this side, correct? Now, look at this. If goods received, if I am giving you goods of 2 lakhs and I am asking you to sell it for 2 lakhs, what is the profit? 0. You can't find out the profit, correct? So, if I send you goods for 2 lakhs, ask you to sell for 3 lakhs, then what's the profit? 1 lakh is the profit, correct? So, if this is cost and if this is invoice price, profit will be 1 lakh, correct? Now, if I am sending goods to you at invoice price, you are also selling at invoice price. Will I get profit? Look at this. I am sending goods to you at invoice price. Assume 2 lakhs is invoice price. You are also selling for 2 lakhs. Invoice price. Will I get profit here? How it will come? Profit will come. But in this account, can I see profit? No. Only I will know the profit because for me, let's say the cost is 150. I gave it for 2. I have a profit of 50. What profit will come here? If I sold for 2.3 lakhs, then you will get profit of 30. So, let me put numbers in simple terms now. Cost is 100. Invoice price 150. Selling price 200. No, let's not keep 200. Let's keep 170. I sent the goods to you at a cost of 100. You sold it for 170. So, your profit is, if this is cost and if this is selling price. If I send the goods to you at invoice price and if you sell at selling price 170, profit is, but if I send goods to you at invoice price of 150, if you sell at 150, this account will not reflect a profit. Outside I would have made a profit of, correct? So, are you understanding all 3 scenarios? So, the challenging or the difficult scenario is sending at invoice price, selling it. So, if I send at 150, if he is selling also at 150, there will not be any profit. So, just for accounting convenience, like how closing stock, we are writing one, let's say if closing stock is 50, assume profit is 10. We are writing closing stock here and reversing 10 here. Why are we doing that? To show correct closing stock. What we have to do, one more adjustment in consignment. whenever goods are sent at invoice price, that profit which is there 50, I will reverse and write here 50. Are you following? So now how I will write here 150 invoice price, immediately I will reverse the profit 50. Now later I am selling for 150, profit will be 50. Later I sold for 170, profit will be 70. Later I sell for 190, profit will be 90. One place to search for profit. Are you following? Are you understanding logic, guys? This one thing I didn't tell you intentionally yesterday because it's coming in this sum also. Now come back to Adidas sum. Yesterday's Adidas sum, they have sent 100 shoes, each costing 15 for 2000. So 100 into 2000 is how much? 2 lakhs. So debit side I am writing. What is the profit in this? Immediately I will reverse here as 50. Nobody asked me yesterday. I know it was there. What is it? 50. Are you following? So when goods are sent at invoice price, I will write here 2 lakhs and immediately I will reverse how much? 50. Only one student messaged me. I said wait till tomorrow. I don't know if I replied itself, but they messaged. Okay. Inventory on consignment, closing stock 21,320, profit this. That's it. Are you understanding? It's a much deeper concept, but I'm trying to put it in a much simpler capsule for you. Are you following, guys? So that this profit represents the whole profit, whatever profit I earned. Clear? Are you understanding, guys? Everybody understood? Hello? Now keeping this as background, come to illustration 8. Illustration 8 is simple. Let's save time instead of me asking you time to think because you already tried in the house. Look at the answer. We are going to start with, so here invoice price represents 125% of cost. So if cost is 100, 100 into 125% is how much in calculator, guys? 100 into 125% is how much? 125. So cost is 100, invoice price is 125. Okay. The only problem in this question is how much goods are sent is not given. So we have to reverse work and find that. That's it. Sum will get over. How much goods are sent. So how I will start? We have to see which I can use to reverse work. So 10% of consigned goods represent 12,500 is damaged. Then what is 100%? 1 lakh. That's it. Sum over. With this sum is over. That's it, guys. It's all about cracking that first part where 10% of goods consigned represents 12,500. What is 100%? 1 lakh 25,000. This is an invoice price or cost price? Because goods are sent at invoice price. So this is invoice price. So if 1,25,000 is invoice price 125, how much is 25 profit? Cross multiply 25,000. That's why I am writing here 1,25,000 and reversing how much? Loading. So loading comes twice or even comes 3 times, guys. Look at this. I'll tell you when all loading comes, you will know. Assume profit is 25, cost is 100. If good is sent as 125, loading is how much? It will come here. If goods are returned back, 50 are returned back, then loading will be, or okay, make it easier. What is half of this? If 62.5 is returned, then loading will be 12.5. Are you following? So loading will come in 3 places in our sum. When goods are sent at invoice price, right here, loading will come here. When again goods are returned at invoice price, returns will come this side. So loading will come here. Again closing stock, if there is any closing stock at invoice price, loading will come here. We don't have a sum with all 3 in foundation, but if it comes, are you following, guys? Clear? So this sum, this part is done. That's what they did in working note here. First working note, if you see, 12,500 is damaged. In that 10% is 1,25,000. In that loading is 25,000. Are you following, guys? Okay. Now, goods this 12,500. Now, how do you compute abnormal loss? normally. Here abnormal loss should always be at cost price, correct? Here the 12,500 they gave us invoice price. How to find cost price? Very easy. 100 is cost, 25 profit, 125 is invoice price. If 125 is 12,000, what is 100? It will be 12,500 into 25 by, sorry, into, no, into 100 by 125, you get 11,000. 10,000 you're getting? 10,000, okay, yeah. So if you see here, you get how much? 10,000. I'll again repeat, guys. Cost is 100, profit 25, invoice price 125. What I lost is 12,500. So cost will be 10,000. Are you following? This is cost of material. Apart from this material, look at the expense, guys. How much is there? Freight and insurance is 10,000. Okay. That also, how much? 10,000 is the total 100%. We lost 10%. So how much? 1,000. So what they are doing, 10,000 is my loss plus 10% of this 11,000. Are you following, guys? So 10,000 we found out, which is cost of materials. Cost is 10,000, which represents 100% of total expense. What I lost is 10%, which is 1,000. Are you following, guys? That's it. So that also is done. We just have last one working note. How do you, so if you look at this now, this is filled, cash is simple, expense is paid, commission we have to compute, and sales also we have to compute. Sales they have given, sales 1 lakh is given, so I will write 1 lakh, expense 8,000 is given, yeah, reimbursed how much? 8,000, so I am writing 8,000. I just have to now compute my closing stock and commission. How do I compute my commission and closing stock? Let's go one by one. Look at this. 1 lakh represents 75% of consignment. Okay. So 1 lakh represents 75% of consignment, which is sold. So what is 100%? 1 lakh into 100 by 75. How much you are getting? 1 lakh. Okay. We will leave that. Okay, 1 second. I'll finish off closing stock. Look at this. Okay. 1 lakh 333. Now read the question, guys. The account sales received by Ajay shows that sales amounts to 1 lakh in respect of 75% of the consignment, which is invoice price, correct? So I have cost is 100, invoice price 125, selling price only I don't know what is sold, but this value is 1 lakh. Here this 1 lakh 125 represents 1 lakh 25,000. But is the whole thing sold? No. Into 75. How much? 93. So let us do in a simple way, guys. They are saying 1 lakh represents 75% of the goods received. Correct? For me, what is the goods received when I computed 1 lakh 25,000? In that, what is 75%? How much? 93,750. 93,750 is sold for 1 lakh. That means this excess is over and above invoice price. So I will split my 1 lakh of sales into 2. 93,750 invoice price and 6,250. In that, commission is 25%. How much? 15. 6, 3. On invoice price, straight away commission is how much, guys? They have given 10% off invoice price into 10%. 9375 plus 1563. How much? 10? 930. 8, check if that's correct. 10,938. I'll repeat one more time, guys, for commission computation. Look at this. Total goods received is 1,25,000. அதில் வேணா சொல்லியிருக்காங்க வந்த கூட்ல நான் 70% தான் வித்தேன்னு சொல்லியிருக்கோம். ஸோ இந்த 75% இஸ் 93,750. அந்த 93,750 தான் வித்து இருக்கணும். பட் நான் எவ்வளோக்கு வித்தேன்? 1 lakh, which is more than 93,750. So I'll split excess of invoice price தனியாக வச்சுட்டு 93,750. In this 10%, excessல 25%, add both commission. Are you following, guys? So we are done with commission also. Before I go to closing stock, any doubts so far in any part? Anyone? I don't mind repeating even multiple times. Sir, I didn't understand. See, look at the missing figures in this sum. Nariya missing figures. We had to find one missing figure here. We had to find commission excess selling price. We had to find abnormal loss score missing figure. 3 computation. 3 மே different base. Commission பண்றதுக்கும் abnormal loss பண்றதுக்கும் சம்பந்தமே கிடையாது. Are you following, guys? Now, sir, நீங்க ஏன் சார் abnormal loss first பண்ணீங்க? Why can't you do commission? I can do commission first and then do abnormal loss. No impact. I can do abnormal loss first, then do goods sent on consignment. No impact. In these 3 stars, I can do in any order of my choice. Some sums there will be a connect. இது பண்ணா A பண்ணாதான் B பண்ண முடியும், B பண்ணாதான் C பண்ண முடியும். This sum it's not like that. 3 missing figures, 3 times you should, what to say, think how to open that and find those 3. Are you able to follow, guys? Clear? Any of these 3 you guys want me to explain so far? Now we have to go to the 4th missing figure, closing stock. So question what is saying, nothing is given, but you have to find what is the something over there. Goods sent is 1 lakh, correct? No, sold is 1 lakh, goods sent is 1,25,000. In this, how much is sold? 75%. So out of 1,25,000, 75% is sold. So what is left? 25%. How much is that? No, we're going to do that. So how much should be left? See, totally I received 100, correct? First, this is after damage, correct? We'll do, yeah, 1,25,000 only, guys. This is before damage. This represents 100, correct? From this 100, first I lose what? I sold 75%. So what should have been left into 25%? How much? 31. 250 should have been left. But I have an abnormal loss which you computed above how much? 12, no, everything in invoice price. So 12,500. Balance how much? 18, which is at invoice price. Are you following, guys? Okay. So you will get expense add pannu. You have to get expenses. Where is this? I will come to this method little later, guys. Expenses how much? Totally 10,000. 10,000 is for a total goods of 1 lakh. No, expense is 10,000 for 100%, correct? Of this represents how much percent? 15%. How it represents 15%? Look at this. This is 100. In minus 75, you get this is 25 minus 10. So you will have 15%. 10,000 into 15% is 1,500. Add this, you get 20,250, which should be my closing stock. I'll again explain, guys. Look at this. Total I received 100%, correct? Okay. 100% represents 1,25,000. In this it's given, if you want to do it in a much simpler way, how much is lost, abnormal loss? 10%. Correct? How much is sold? 75%. So how much should be left? Okay. So 1,25,000 into 15% is how much? 18,750 plus expense. Expense is 10,000. Other 15% is 1,500. You get 20,250. Are you guys following? Are you understanding, guys? Or if you want to do in this method, it's the same. It's just about the approach. Here if you see, total is 1,25,000. I'm add pantam expensive. So total now he is saying is 1,35,000. In that he is saying inventory is 15%. The same, guys. Are you following? I did in a much, detailed step method. That's it. Are you following, guys? Clear? So once you find closing stock is 20,250, which is at invoice price, how much is profit? 20,250. No, that's all. Stock reserve. I'm finding the reserve only. 20,250 into 25 by 125. Because this 20,250 is including of profit. So you get 3,750. Are you following, guys? You're not getting that. 20,000, 20,250.
So we can do directly on the 25,000, 15%.
We can directly do it on
Loading, loading of 25,000.
Loading of 25,000, yes.
50% left over. It's 100%.
Yeah, correct. That also we can do. Or let me do it in a logical way. We get but they have not given number of goods, no? Oh, you are saying assume 10 goods. 1,25,000 divided by what's 12,500? 12,500 is the invoice price, is it? Okay, 125%. No, then if I can assume one good is 125, I'll get much bigger number. Correct? See, in that case, you said 1,25,000 divided by 12,500. I can even divide 1,25,000 by 125 also. I'll get 100,000. This one. This is total abnormal loss, not 1 unit. It's not 1 unit price. Look at this. 10% of consignment goods value is 12,500. But still you can assume 100 goods are sent. Every other percentage will map with that. Okay. Come back here. Everybody understood till 2250. Now to find unrealized profit, look at this. Two methods. First method is total unrealized profit is 25,000, which represents 100% of goods. How many goods are left now? So in that 15% is how much? 3,750. That is one way of doing it. Okay. Second way. Totally goods sent is 1,25,000. In that how many goods are left now? Closing stock. 15%. How much? 18,750. And then you're adding cost. Expense how much? 1,500. We got 20,250. Now profit is there in 18. Is the profit there in 18,750 or 2250? 18,750, because it is only adding expense. So my profit is sitting in 18,750 into 25 by 125. You will get the same answer as 3,750. Are you following, guys? The logic is this is shortcut, but the logical way is 18,750 is my goods before adding expense. So profit is only on in this into 25 by 125. We get 3,750. Are you following, guys? Sweta understood? Clear? That's it. So in this sum, if you see, go home and have a look. Only 4 things we have to find. Goods sent on consignment, commission, abnormal loss and inventories and reserve. Inventory we have to find. All these 4 things, they are not interrelated. All separate working note, correct? Can you find inventories first? Yes. I can find inventories also first. I can start my sum with inventories. Goods sent is 1,25,000. In that 25% is left minus 10%, which is that abnormal loss is 10%. So I will straight away do 1,25,000 into 15%. Correct? So you don't need abnormal loss amount. I can directly do this. So these 4 stars are 4 things you have to find in 4 separate working notes and come and plot it here. Are you following, guys? Like I said, it's a unique sum. Only one sum is there in the book. They have not tested like this also in exam, but just be aware. See, all the 4 adjustments need not come. See, you don't have 1, 2, 3, 4. All the 4 need not come. Any one can be an adjustment. So be aware of all the 4 cases. Clear, guys? Okay. Any doubts before I close with this? Consignment is done. Any doubts? Hello? Okay. Did you check the answer for that? Okay. Fine. Can we proceed, guys? So we are now done with consignment. Let me close that PDF. Depreciation, we did one sum. I don't know if that is enough, but if time permits, we'll do one more. I'll come back to BRS lastly, guys. NPO is the main target today. Let me do 1 or 2 more sums in NPO, guys. Okay. Following is the receipts and payments of X Club for the year illustration 8. Totally how many sums are there? Till 12. Okay, to the extent possible, let's do it. First 7 have you understood? First 7. I want you guys to try one sum also. Okay. This is a good sum. Proper good sum for 15 marks in exam. Illustration 8. Illustration 8 is 1, 9. Yeah, 9 is much easier than 8, guys. So we'll do 8 itself. Fine. Let's do 8 first and then we'll decide next sum. Clear? End of the class, remind me, I'll at least do for everyone's satisfaction one sum in BRS. Okay. The following is the receipts and payments account. Follow. This is nothing but your cash account. What's my cash account? Cash in hand. Opening balance 100. Then deposit account 2230. Current account 600. Then interest received is 30. Then all the debits are given. Donation and subscription, receipts from teas, contribution to fair equipment, net proceeds, all of that. Expense also they are given, guys. Some groundsman, moving machine is purchased, rent of ground, cost of teas. It's a club basically, so related expense for club. Fares, printing, honorarium paid to secretary and treasurer of 2019. Closing balance. So you have 3 accounts, 3 closing balances, and we have 3 opening balances. Till here is my opening, correct? Apart from that, they have given opening and closing balance for almost 6 things, 6 items. Subscription due, opening, that means subscription, outstanding. Amount due for printing, this is outstanding expense. Check presented, being payment for repairs. Estimated value of machinery block opening and closing. Interest not yet earned in passbook 20 closing, and bonus to groundsman some 300, and they gave some honorarium also has been increased by 200. They wanted to prepare income, expenditure and balance sheet. Proper sum for 15 marks. If you are going to solve the whole sum, we will spend 1 hour in class for this itself. Okay. See, if it's going to be a regular class where I'm going to solve this sum in detail, step by step, one sum will take 1 hour without a doubt. Okay. But we have to save time. So for a moment, just go through the entire question at your end, process it, and then we will try to solve it. We can't write, but at least working notes, you will do it. Okay. Just go through the question fully once. Read at your end. I want you to understand whatever you can understand so far. Okay. The first thing we have to do is identify what are those things which has adjustments. So come from reverse. Subscription amount due for printing. Come up. Where is subscription here? 1. Where is printing? See if it's there. Printing and office expense. First thing is to highlight those things which definitely has an adjustment. Okay. Checks unpresented being payment for. So BRS is coming in NPO. Okay. That is later. Okay. So checks unpresented has something to do with bank passbook, current account. Correct? BRS comes only in my current account. So something to do with that BRS. Then estimated value of machinery and equipment come here. Moving machine, and we have repairs to equipment. Then again come down. Interest not yet entered in passbook. Again this will impact my deposit and current account. Bonus to groundsman outstanding. See if you have any groundsman. Yes, first groundsman fee, and last one is honorarium paid. Some adjustment is there below the table. So I have honorarium paid to secretary. That means whenever you are going to fill these values in your income expenditure and P&L balance sheet, you have to see that there is an adjustment and deal with it. Correct? So that is the first stage. So I am going to prepare income and expenditure account, and I am going to write balance sheet. Okay. Now I will start filling one by one. Cash account means I will prepare a cash account itself. This only is the cash account, nothing else to do. So leave the 3 opening balances. Bank interest 30. I have received how much? 30 rupees. Interest only we have something, correct? Look at this. Interest not entered in passbook, how much? 20. Okay. So something to do with interest. This is the first stage. Where all adjustment is there, try to map it, that you have done. Now first what I like to do, whatever there is no adjustments, I will go and fill it off. Because we will save time, we will get that half mark or 1 mark. For example, receipt from tea, cost of tea. I purchased tea for 250, sold for 300. I will come to my income expenditure account. Look at this. Receipt from tea 50. Are you following that, guys? Like that, all the small things I will do. For example, contribution to fares. What is this? Receipt or payment? The receipt heading is there, you are saying payment. It's under the heading of receipt. I have received. They are calling it contribution to fares. That means for the fares I consider I got money. How much? 100. So come here. There is also FAR expense. Yeah, FAR expenses. Set off guys. Whenever there is income and expense, I will set off. So FAR income is 100, expenses 400. So what's my net expense? So I will write here net expense 300. When you have 5 minutes left in exam, one NPO is left. Do these small things. You will get those 2-3 marks. Okay. This is done. Next, sale of equipment 80. We have the machinery and equipment. I didn't mark that. So sometimes you see that, okay, and then write it. We'll do that. They are all related. We will do it together. Net proceeds of variety entertainment, how much? 780. Any expense of variety? Nothing. So come here and write how much, guys? Variety 780. Are you following, guys? That's it. Receipts are done. Donation for forthcoming tournament. It's a donation for a specific item. So my entry will be bank account debit 1002 to capital fund, how much? 1000. Correct? So I will write here donation. Where is that, guys? How much is that? 1000. Yeah. Tournament fund, separate fund 1000, and here in bank I will include. Anyway, it's part of my bank. You don't have to write. Clear, guys? See, I told you, if it is there in the receipts and payments account, it will come only in one place. This 1000 will come in my balance sheet liability side. I explained the concept of fund also for you. Clear? So I have finished everything on the debit side. Credit side, let me finish whatever I can do first. Rent of ground is how much? Come here, straightforward expense. Rent of ground, how much? 250. Next. Cost of trees over, we adjusted. Fares also over. Printing office we will see later. Repairs to equipment 500. Not a capital expense. So straightforward I will write here. Where is that? This. Okay. Repairs for equipment. This one. So we have to write here. Put star. We will deal with that later. Honorarium to secretary we have star. I will deal with that later. Then closing balance is given. That's it. So I have written only the few things which I can write. Bulk of these things have adjustments. Now I will deal with them one by one. Okay. The first step is to map which adjustment is for which of these things. That itself will take some time. Now, interest. Debit I received how much? 30. And here if you see, interest not yet entered in passbook as of 31st March is 20. That means what? Interest not yet entered in passbook. That means it's entered in cash book, not entered in passbook. This is what book above here? It's receipts and payments account. Okay. And if you look at this here, balance as per passbook only is given. That means these are all transactions through the passbook. Look at this. Balance as per passbook, deposit, current account, and then the interest is going on. Correct? So, interest not yet entered in passbook is 20. How much is entered here, guys? 30. So, how much I should add now? 20. Always which is correct? Passbook is correct. We have to move from cash book to passbook. So, from 30 you have to add how much? You do this correct. Passbook here, cash book, which is correct, we move. Okay. So, 30 plus 20 you get how much? 50. So, my actual interest income will be 50. Clear? So, now if you look at income side, receipts is done, far from variety is done, interest also is done. Clear, guys? Okay. Next, donation and subscription is very easy, guys. You tell me, I received 2,600 and subscription opening and closing is given. So, due opening is 150, closing is 100. I received 2,000. So, what's the balance? 550 is my income, because here debit means income and expenditure, it will be on the income side. So here I'll write 2550. Is it clear, guys? Are you understanding? See, subscription is easy. We put that ledger. So credit, everything is done, guys. You have finished everything on the credit side. Are you following? Hello? See, ideally not the way to solve, but I want to be fast. At least you know what has to be done. Then you will go practice. When you go do the same sum after 3 days, I can guarantee you will again make some mistakes. So you have to practice. Okay. Done. Now coming to debit side, let's go one by one. So this side, everything is done. Sale of equipment is 80. That's the only thing pending here. Let's finish that. Then let's finish that. Equipment opening is, let me prepare the depreciation account for equipment. Equipment opening is 800. Equipment closing is 1750. And I sold equipment for how much? 80. So sale will come this side. Depreciation is given rate. Moving machine 1500 is purchase, so I will add 1500. So just check if there is any other adjustment. Opening given in the question. Moving machine, let's see what they took moving machine as.
They took 1750 to balance.
That is my closing balance, correct? That only will be in balance sheet, of course. Opening is 800, closing is 1750. This will be in my balance sheet. I sold for 80 and purchased what's the difference you're getting here, guys? 470. Check if there's a depreciation. No. Depreciation is 470. That's it. Okay. Look at this, guys. Opening balance of equipment, closing balance of equipment. Closing goes to my balance sheet. Opening is here. This is addition is purchase, 80 is sold. So 470 will be my depreciation. What method is used here? Are we using provision for depreciation method? No. We are using that net method after reducing the depreciation. Following? Clear? Namrata, understanding? Sure? What he, this one you are saying? What he did? He prepared the account. He wants to find 470. So 800 plus 15 minus 80 minus 1750. This whole chapter, if you prepare the ledgers, it's over. This you won't understand. Nobody will understand. What is this? He has done the ledger, guys. So 800 plus 15 minus 80 minus 1750. You get how much, guys? 470. All of you with me? Hello? Fine. So I have finished everything on the debit side, guys. Now coming to credit side. Let's go one by one from top. Ground spend fee, we have an adjustment. What is the ground spend fee adjustment? Bonus is 300. So you have to pay apart from 750, you have to pay additionally 300 outstanding. That's all. So bonus to ground spend 750. Bonus kila potrukka 300. Seth podlama, you can put it together. You can add it here itself. 750 plus 300, no problem at all. But an addition katunga. That's it. Moving machine, we just dealt with it. Rent of ground is over. Cost of tea is over. Fares over. Now printing and office expense. You tell me, guys, what will happen for printing and operation? Printing, look at this. This is the adjustment. What you will do? Tell me only for printing. Printing here it's 280. Here you have opening, closing. What you will do? Subtract 100 plus 80. I don't know all that. I just know the ledger. Opening is 100. Closing is 80. What is the current year paid? 280. So this side, its credit side means this side it will be. In other words, what's my entry? Printing expense account debit to bank. Correct? Guys, expense entry enna irukum? Expense to bank. This is the bank account. So credit side 280. Are you following? So you get difference of how much? 260 is the current year expense. You have here 260. Are you following, guys? Everybody understanding this? Hello? This is just like your salary outstanding expense. Look at this. The ledger, what we just made. Opening balance, opening balance, closing balance, current year expense, paid. Put that format into head. Expense now, opening, closing, current year expense, current year payment. Are you following, guys? Yeah, that's it. Okay. Next. Repairs, repairs to equipment, we have an adjustment. Look at that. Again, BRS. So without our plan, BRS is coming for revision. Checks unpresented, being payment for repairs. What is the meaning of this? Checks unpresented, being payment for repairs. I paid it, but being checks unpresented, being payment for repairs. I have to pay, but check kudukala. I made the check, but I didn't give it. Correct? Check up on it, but I didn't give. So I should have paid 300. So my liability is 300, but I ended up paying how much? 500. 500 is paid. Closing not paid is 260. So what's the current year repairs expense? 460. Check if it's correct. 460. I'll again explain, guys. Look at this. The wordings avana sollirukkan. You know how he should have given it? He should have given it as repairs outstanding account. Then you will understand. But repairs outstanding in kudukama, no, it's not even BRS basically. It's, look what he's saying. Checks unpresented. Now that means I wrote a check, but I did not deposit. Checks unpresented, being payment for repairs. So kudukka vendiya kaasa kudukla. So it's a liability. Correct? Opening liability 300, closing liability 260. Opening liability 300, closing liability 260. What is paid is 500. So what is the current year expense? 460. This is going to debit of my P&L. Are you following, guys? Understanding? So that's why we have the expense here 460. Then come here, honorarium to secretary and treasurer of 2019. Last year honorarium is 400. Look at the adjustment. For the year ended 31st March, honorarium paid secretary increased by total of 200. That means this year payable is 600. How much is outstanding? How much outstanding, guys? Full 600. Because what is paid here as 400 is last year's ipo pay pannirken. In the varsha na pay pannala. In the varsha increase panni evlo pay pannom? 600. Therefore, if you see here, honorarium to secretary will be 600. That will also be a liability in my balance sheet. Honorarium 600 because full amount is outstanding. Are you following, guys? I'll again repeat. Look at this. Everybody understanding, guys? Hello? See, all you have to do is, when I'm explaining something, look at the answer, see if you're understanding the treatment. That's it. Okay. If this 2019 is not there, then outstanding will be 200. The 2019 outstanding is 200. The outstanding is 600. Clear? Okay. Next. Then we have the closing balances. So come to my P&L. Let's tick everything that we have done. Income, everything over. See, this is a 15 mark sum. Okay. 15 mark sum into 1.8. How much? That means even if I solve it in the format, it will take 27 minutes. 25 to 30 minutes is the time we are taking. I am not even discussing for that much time. I am only briefing it. We are in a crash patch. Are you following us? We are going in full speed. Clear? So remember, in exam, 27 minutes na paravala. Consignment you are saving time. Some other thing you will save time. So roughly 30 minutes you have to finish a 15 mark sum. This NPO. So don't think it's getting over so fast. You have 30 minutes. Only if it crosses 30 minutes, you have to worry about it. Okay. So don't start your answer sheet with an NPO sum of 15 marks. You will start with NPO. First exam, you will go confidently. NPO, I am good. You will start with 15 marks. If you are good, you will finish in 30 minutes or sometimes 40 minutes. Suddenly, you will see 45 minutes over. Some pagina potripping. You will panic. 85 marks left. 2 hours is there. Gone. So don't start with these sums. Even unless, if you are very good, it's fine. The first 20-30 marks, grab it. Take the ones that you know very well. Okay. I am sure all of you know about presentation, no? I'll finish this sum, I'll come there. No, I mean, which question you can write first, the order? No. Order you don't know. Fine. No, I'll come to that later. I'll come to that later, guys. Let that be a last 15 minutes discussion, meaning question paper we have 6 questions, correct? 1A, 1B, 1C, then 2A, 2B, 2C, then 3, 4, 5. Which question I can write first? Any question. Can I write 1A and 2C? This only I want to check. You know this, right? Can I write 1C first? 1C. Then can I write 1B? Yeah, that only I will explain at the end of the class. Just remind me. I'll let that be a separate thing. Okay. We'll discuss that later. No, it's important. Actually, many foundation students don't know about that. Every answer in fresh page. That you know? Okay. Fine. Follow, guys. Yeah, come back here fast. So income is done. Groundsman fee. This we finished. Everything over. So expense income is 40. Come to balance sheet. Okay. This 40 will be transferred to your capital account. Opening capital is how much? Is that given? Okay. No worries, guys. See. First, let's write what we know. Cash in hand closing is at 250. Check the question, guys, here. 250. Deposit is 3090. Copy, paste. Current account is. We are adjusting that current account with your. Look at this. What is the opening current account? 600. Closing current account 150. But if you see, I am thinking I have a closing balance of 150 is what I am thinking is my closing balance. But can someone tell me? See, I know the answer, but can you guys tell me why no current account is here and why we are writing current account this side? Anyone? Answer, clue is BRS. That is the only BRS. Explain that. What is that? Checks unpresented means I am thinking I have a balance of 150, but checks unpresented being payment for. Once you present this 260, what will happen? Money will reduce. So this 150 will reduce by 260. You will have a negative. So instead of writing negative 110 this side, I am writing positive 110 on the liability side. Are you following up? The proper question for 15 marks, guys. Next, printing outstanding, groundsman bonus. Outstanding everything else is written. This is subscription due and interest due. In the value la engen varudhu sir. This closing will just like that get copied. Look at this. Look at the question. Whatever is the closing over here, guys, subscription due 100 is closing. Check the balance sheet. Is it there? Whatever is closing will come in my closing balance sheet. 80, is it there? Yes. 260 nam adjust pannirukom. Correct. Then again look at this. 1750. Copy paste. 20 and 20 we added anyway in income. 300 is liability. We are adding it over here. Clear, guys? Fine. How to find opening capital? Very simple. Write all the opening balances of account and the difference will be your 3080. This you are copying from the question. Here capital fund is 3080 because honorarium is 500. Can someone tell me 400 is the outstanding? How 100 came? What is 100? Printing expenses. Perfect, guys. This one, amount for printing is 100. How 400 came? Look at this. This year I am paying 400. That means last year it is outstanding. Are you guys following? Okay. We finished the sum in 20 minutes, guys, only discussing. Normally it will take 1 hour. I want you to know, I want to know, did you understand how every number came in the answer? Following, guys. That's what is more important for me. How each number came here is what matters more. Okay. Next. This sum is easy, guys. 9. This also is easy. This is like the statement is what, guys? Our ledger. Okay, leave this. I'm just seeing any big sum which is important. 12th sum. Okay, 10th and 12th. Okay, 12th is an educational institution, correct? Okay. Now, this type of question is opposite. All the sums they will give us receipts and payments. You have to prepare income expense. Idla enna pannirukam? Income expense கொடுத்து receipts and payments. Opposite. Okay. So all you have to do is you have to find how much is paid, how much is received. For example, let's look at subscription. Is there any other subscription adjustment here? No. Prepare that ledger, guys, for subscription. Okay. Outstanding at the end of 2019, where it will come? Debit side 600. Subscription received in advance 450. Here 270, 750. Correct. And then in the question we have income expenditure. Subscription is where it will come? It's not received, it's receivable. So what is received? Add these 3 minus these 2. Add these 3 minus these 2. How much? 7170 is the money received. Go to the answer. Without a doubt, it should be 71. Are you following? Numbers are getting it? Understood? Okay. Now let me take for one more thing. Let's say, for example, let's take for salaries. Okay. Salaries outstanding at the beginning is 400, end is 450. Correct? Our salary outstanding at the beginning, at the end of 2020 in respect of 400 and 450. What is paid in the question for salary? 4750. So 4750 is paid. So what is? Sorry. No, this is current year expense, guys. Sorry. It will come on the other side. 450. So 4750 is current year expense. So what is paid? 4700. Are you following, guys? So salary paid will be this side 4700. Are you following? Adhe ledger na. In all the sums, we found out the income or expense. Idla we are finding out what is received or paid. Getting it? Okay. Let me take one more thing. Which one you want me to take? Hard doubt in? Now it's done. Okay. The subscription, that ledger will solve any sum. That's it. Okay.
So this club over
You need to prepare equipment account. Okay. Here, nothing is there. You want the club, this freehold? Okay, follow guys, look at this. The club owned a freehold lease of ground value 10,000. Assets. Club had sports equipment on 1st Jan, value 2,600. At the end of the year, after depreciation, equipment amounted to 2,700. Club had raised a bank loan of 2,000. Now I have to find out what to say. How much is purchased? Look at this. Initially it is 10,000. Club, okay, this is lease, this is not a big deal. Club had a sports equipment of how much? So opening value is 2,600. At the end of the year, after depreciation, equipment became 2,700. How much is depreciation? Where it's given. Here depreciation is how much? 300. So if opening is 26, closing is 27. If depreciation is 300, then this is what? Additional purchase how much? 400. Check if the purchase is 400.
Yeah, it's there.
Where? 400. Are you following guys? Understanding? I'll again repeat the equipment. Look at this guys. Beginning of the year I have equipment of 26. End of the year it is 2,700. So beginning 26, end 27. During the year depreciation 300. So new purchase is 400. Are you following? Sure? No? No, I'm not getting the confidence. Yes? No? Okay. Done guys. That's how we do the sum. I'm not doing the whole sum. But I did the key one. Subscription, salary, equipment. Rest is fine. Now you wanted which one? 11 is simple. You just give it a try. See, 8 is a big sum. 12. See, if 12 and all comes, it will be a 20-mark question. General. 16 is highest. 16, 20 also can come, but okay. Educational institution is what? Colleges, schools, all of that. Donation from public, fees from annual tuition. Okay. See that. First, let's run through the theory ones.
And they use all the terms.
Yeah, not a big deal. We can. No, I'm saying we can do the sum. I'll run through this quickly, guys. Let this be the last sum for the day. Okay. It will take some time. Okay. How many of you never studied this sum? Okay, fine. I'm sure many online also. You studied, but okay. Oh, you didn't do. Okay. Okay. Follow, guys. Do you want this sum or no? No. I am not setting the paper. See, it has not been done in the past. It has not come in the past 4-5 years, 2-3 years. It's there in the book. Okay. Okay, how many of you went through this sum and understood? Konja understood. Okay, fine. Let's keep a cutoff of 6:30 and finish off this sum. And last 10 minutes, I need more 10 minutes to brief about exam paper, guys. I think many of you don't know that I'll do it. Okay, look at this. I'll be fast. Educational institution is a separate type of sum. Whether you're going to learn or not is your choice. But do not skip NPO. See, at least till illustration 11, You have to be confident, guys. See, take any past exam paper. NPO is a mandatory question, correct? Either 10 marks or 15 marks, sometimes even 20 marks it's come. 15 plus 5. 5 marks you will ask subscription question, or 10 it used to come. Okay. So you cannot skip this chapter, and consignment put together is 20 marks. So 1 to 11 go through. If you have doubts, you can always WhatsApp me. You guys have my number. WhatsApp, or anyway tomorrow I'll be here for law, you can ask. So today if you go home and target NPO, the first 11 sums you do, tomorrow you will have chance to ask doubts in class here. Otherwise you will WhatsApp, I'll reply after 1 week, it will become difficult. Okay. Now during the class, look at this. There's one guy who's calling for doubt. Some guy from Inter, 9 missed calls. 151, 158, 28, 311, 312, 338. This list is full of missed calls only. I'll go home only and check. Okay. Missed call upon our phone and in class. Okay. புரியல சொல்றான். Okay. Then online I can, okay, come on, delete பண்ணிட்டான் this fellow. Okay. I think தெரியாம this guy in YouTube live, he put some love symbol he put here, then he deleted it. Okay. Wait. I don't want to tell the name, but he wrote something. Okay. Fine. Okay. இல்லைங்க name இருக்கு, I can see the name. Okay. Fine. So go home, do it till 11 guys. Now let me just brief 12th question. Educational institution, quickly guys. Theory, let me go through. Registration என்ன சொல்றான்? What is this paragraph saying? You have to register as per this act. If you register, income taxes exempt. Next, organization pattern. இதெல்லாம் not that important. They are saying the trust should have some president, secretary, treasurer like apartment and start fighting. Okay. Next. Salient, it's a fight. Whichever school I studied, after the death of that principal, the full 10 teachers are fighting who will become the next principal. Okay. I am not naming in recording, after that I will tell. Okay. Then the basic tenet, why we have this. Okay. Leave that. Source of finance for running schools and colleges, you know better. Donation from public, fees. No, this is fees, sir. But donation, how many of you in schools paid donation? School, college, yes, that is the donation they get. Fees in form of annual tuition fees, admission fees. That too, nowadays the fees is very expensive. For pre-KG, I was looking at some pre-KG for my son. He's just 1.5 years, so there's still a lot of time. Pre-KG, they're charging 2 lakhs. Hey, 2 lakhs. I don't know what they're doing 2 lakhs. He will go there, play, cry and come back. That's 2 lakhs. There's one school in Adyar. For LKG, 7 lakh rupees per year. Actually, what are you guys doing? I said, one more school, 4 lakhs. New school in Adyar, they're saying international school, 7 lakhs per year. LKG to 12, 7 lakhs. Okay. But still there are other schools which is charging 40, 30,000 only, but 7 lakhs per year, I don't know what they're going to do. It is this, in Adyar, they cut down all the trees and put one new school. That's what I know, but it's a new international school. I forgot the name, guys. Okay. Oh, that one. Correct. Correct. Recording protocol, I don't want to tell the name. YouTube public. Okay. So they are charging 4 lakhs, 7 lakhs per year. I was like, better I'll just go put him back in the school I studied. That's it. 25,000 per year. Donation from public. Fees in form of annual tuition and grant received from government. Sometimes government will give money for you to start school in backward areas. You get government grant. Okay. Now, this government grant is a separate topic in CA Inter AS12, accounting for government grants. Ideally, it should not be part of syllabus, but let's quickly do 4 types of grants. Missionary maintenance grant means for day-to-day expenses. So it goes to my revenue. Equipment grant to buy assets. So it will go to my balance sheet. Building grant goes to building, and such other grant as may be given by government. Fine. Donation from public, either recurring or non-recurring. This cash or kind, this will go where, guys? Okay, depends on the donation. Capitalization fee, admission fee, school, college, you have to pay fees. This will also be taken to the capital collected by parent body who runs the institution. Library deposit, schools collect for deposit. This starts from students. You get from different people, but this not every year fees, capitalization fee yearly once and so on. So you pay only yearly once for that class. Okay. Then some terms, I don't think I have to explain this. You know what is school magazine, new curriculum, newspaper, school function, festivals, you know all of that. Relive all the memories for some time, drawing, audio education, all of this. Equipment for PT period, that PT period they'll buy, but no PT period. Okay. That's it. Recurring grant is, government gives grant on every year basis, it goes to revenue. Use of grant and aid, I can use grant for all these expenses. We'll come back here later. Let's go to the question straight away, guys. Okay. From the following particulars of Republic College, prepare income and expenditure and balance sheet. Now, you have to decide. Seminar and conference receipts will go where? Income. Guys, follow guys. Are you interested in the sum or no? See, I don't know if you will go home and see this sum. But if you spend 15 minutes now, if it comes in exam, at least paadi sum eppadi ponum theriyum. Okay. Consultation receipts will go to my income and expenditure. Security deposit will be in my balance sheet. Capital fund, research fund, balance sheet. Any fund na balance sheet. Building fund, provident fund, balance sheet. Tuition fee received, income and expenditure. Government grants, depends on what nature, we will see if any adjustment is there. Donation, depends again. Okay, then interest and dividend, income and expenditure. Hostel room rent, income and expenditure. Then you have mess receipts, is what guys? Income and expenditure. College stores, income and expenditure. Outstanding expense, balance sheet plus P&L debit, but here only it will come in balance sheet because it's one item. Stock of stores, opening stock. Purchases, trading account, purchase. Salary, expense for teaching. Then research expense. Scholarship, it's a free, giving free education for a few kids, it's expense, like free marketing money. Okay. Expense. Student welfare expense, repairs expense. Okay, done guys, come down. That's it, we're going to finish it. Research fund investments, balance sheet, it's an investment asset. See, when you're reading, first balance sheet of P&L classify pannunga guys, adle paadi sum over. Other investments, balance sheet la asset. Provident fund investment, balance sheet la asset. Seminar and conference expense, P&L. Consultancy expense. Land, balance sheet. Building, plant and machinery, furniture, motor vehicle, all these are other depreciation. So this is cost, this is provision, I have to net off pannu, correct? Then you have closing cash, balance sheet, library, balance sheet. That's it. Anything difficult? No. Come to adjustments. Other than adjustments, what's there? Look at this. Materials and supplies consumed. So look at this. From college stores. Tuition fee receivable from government for backward 80,000 receivable. What is this? Like subscription outstanding. For the current year, like outstanding receivable. Correct? This is outstanding receivable. Are you guys following? Hello? Store selling price are fixed to give net profit of 10% on selling price. Okay. Depreciation rate kuduthirukam. That's all. Can someone explain what is this? Materials and supplies consumed. Yeah, where is the sales given? Where is it? Yeah, corporate sales 7,50,000.
Teaching, research, scholarship.
Teaching, research, scholarship. These are the expense and income. For that they are saying we consume so much, I will minus it. Okay. Actually, it's an easy sum, guys. It's only lengthy and time consuming. Now let's come back here and prepare the balance sheet, P&L balance sheet one by one. Keep the question in your hand. Now look at this. Keep the question in the hand. Tuition other fees 8 lakh 80. How 8 lakh 80?
8 lakh before 80 is the government.
80 is government receivable plus
8 lakh is before.
8 lakhs is somewhere here. Where is it? Tuition fee received 8 lakhs. Are you following, guys? 8 lakh income plus 80,000 adjustment. Or 8 lakh 80. Correct? Government grants here we are taking fully to P&L. So fully 5 lakhs. So take government grants to P&L. It's a huge concept in Inter. For the time being, unless they tell something, take it to your income. Okay. If grant is given for a specific asset, then take it to balance sheet. Income from investment, how much? Is it there in question? Income from investment, hostel room rent. Where is that, guys? Go find it. Yeah, look at this. Interest, hostel and mess. 1 lakh 85, 1 lakh 75 and 2 lakhs. Copy paste, copy paste, copy paste. 1 lakh 85, 1 lakh 75, 2 lakhs. Are you following, guys? See, it's only about copying from the TB into correct income statement and balance sheet. Okay. Next. Actually, this sum is easier than sum number 8. Honestly, it's only lengthy. Okay. Next. Profit from stores. 75,000. How did they do that? Look at this. He's saying profit is 10%. What is the store selling price? Stores 7 lakh 50 into 10%. Are you following, guys? So you wrote 75,000. Then come here. Seminar and conferences, income minus expense, income minus expense. How to do that? They are taking it. Find that 4 lakh 80. 4 lakh 80 is this one, guys. Where is it? Seminars and conferences 4 lakh 80. Similarly, expense for that 4 lakh 50. Seminars and conference expense 4 lakh 50. Are you following, guys? Sir, how to correct net off? If you don't net off also, your answer will be correct. You will return income this side and expense this side. Nothing big will happen. If you are not able to locate it, it won't make much difference in your final answer. Similarly, consultation charges and donation received is taken as income because you give donation every year. Okay. Done, guys. Income is done. Look at expense. Salaries, teaching and research, copy paste. Materials and consumed. So if you look at this, teaching, materials and supplies consumed. What is this? In school, blackboard, the chalk expense, all that comes to how much? Materials consumed now. See, teaching I am getting fees of salary 8 lakh 50. Other Tandi I had to pay 50,000 rupees for materials like chalk piece and what else, that scale, whatever you buy, all of that. Okay. Or if it's online classes, camera and the materials like consumed, it's 50,000. So we added
50 and 150 for research.
Research is 150 here. Go on top. 120.
So we can add it also.
You can add it also. They are showing it separately. Better to show it separately. Okay. Next. Repairs and maintenance 1,12,000. Copy. Paste. Guys, are you understanding logic of what is happening here? Guys, logic purida. This is from trial balance. This is my additional expense. Are you following, guys? Okay. Then come down. Same for sports, games and expense. In trial balance they gave, look at the sports games, find that 50, guys, only then you will be satisfied. Yeah, sports and expense, 50 is expense. Marubadiyo consumables how much? 25. You will play cricket, that ball will get lost, there will be ball along, no, all that. Okay. 75,000. Similarly, student welfare, same. Cash plus Materials 1 lakh 13. Now other expenses, miscellaneous, scholarship, copy paste. Depreciation, you know how to compute. They have given, look at this, rate kuduthirukkan. You compute the I'll show for example one sample. Building is 5%. How much is building here? 4 lakh 80 into 24,000. It's not that, then we have to check what happened. Wait. Oh, this is provision. So sorry, guys. 16 lakhs into 5%. Correct only we did. I just applied on provision in the speed. Don't do that mistake in exam. For example, motor vehicle, how much? 20%. Go here, motor vehicle is how much? 1 lakh 80 into 20%, how much? 36,000. Just check 36,000. That's it. Write all the expenses, you get income over expense. Come to balance sheet. On top, when you are marking, all the assets will come here. For example, capital fund, how you wrote 16 lakh 6,000? Look at this, capital fund 16 lakh. So the biggest thing in this question is, question படிக்கும்போதே நீங்க எழுதணும் income and expenditure, balance sheet, balance sheet, balance sheet, balance sheet. Look, all these are funds of 16 lakh 6, 8, 25, 5 lakh 10,000. Come to balance sheet. They have written all of that, all the funds. Look at that, 8 lakh 25, all the funds are written here. Provident fund 5 lakh 10, security deposit, all of that. Are you following, guys? It's easy to identify. Sir, balance sheet of P&L every sir theriyum. Look at this. Like, yeah, these are all credits. These are all debits. So a technique here is, when you're reading this item, for example, sir, security deposit enga sir varum enga theriyala. It's a credit balance of either income or liability. Come here, this 38,000 student welfare expense, either expense or asset. Are you following, guys? Come down here. For example, random I'm taking 5 lakh 10,000 provident fund investment. It's either an expense or an asset. Purely investment. So come here, I will write provident fund investment. How much? 5 lakh 10,000. He wrote like PF. Are you following, guys? That's it. Balance sheet la endha adjustment me illa, guys. There is absolutely no adjustment. If you see what they are doing, they are only copy pasting everything. In the 3 lakh 99 add பண்ணிட்டோம். Rest everything is copy paste, no change, copy paste. And here also copy paste less depreciation including provision. அவ்வளவுதான். வேற எல்லாமே, look at all this. Copy paste over here. Okay. Closing stock, yeah, this depreciation, guys, this is the depreciation one. How depreciation we computed? Opening depreciation, add current year depreciation, total 5 lakh 60. Clear? Now coming to closing stock. How to do closing stock? What is closing stock? Opening stock plus purchase minus sales is closing stock is not the correct answer. It is opening stock plus purchase minus cost of goods sold. Now inventory chapter. Okay. So what is opening stock here? They are given in the question. Where is it? Yeah, 3 lakhs is the opening. Adu kuda sethiye kuduthirukam. 8 lakhs purchase. So I will do 3 lakhs opening stock plus 8 lakhs minus cost of goods sold. Sales um kuduthirukam engiyo. Where? 10%. I'm just trying to find that. Where is it in this? Yeah. College sales is 7 lakh 50. We have to find cost of sales of, so minus 10% or minus 75,000. So can I write 7 lakh 50,000 into 90%? How much will get? 6 lakh. 6 lakh 75,000. Net how much you are getting? 3 lakh plus 8 minus 6 lakh 75. 4 lakh 25,000. Come to the balance sheet. Where is this? Oh, we wrote 3 lakhs plus 8 lakhs minus 6 lakh 75,000. consumed
Materials consumed, sir.
is the total of, can you total
It's 3 lakh, it's 3 lakh.
all of this, can you total?
3 lakh.
3 lakhs. Now I told you anything which comes in adjustment should come in two places. So that's why this is coming in expense and it's a reduction from my stock. That means this also is part of my purchases which is now consumed. So it's part of my purchase which is consumed. So minus 3 lakhs, you get 1 lakh 25. Are you following, guys? That means the total purchase is 3 lakh plus 8 lakhs. Mottama how much? 11. In that 11, I sold this 6 lakh 75. Balance is not sold, it's consumed. Can you explain this? Remember, our our stock can be of three parts: raw material, work in progress, finished goods. For example, if you're manufacturing that Mazda example, if you remember, they consumed mangoes, they consumed sugars, they consumed water to sell, make the final sale, correct? So sometimes these consumables also will be reduced because it's used for selling. That means for me to sell for 7 lakh 50,000, I even consume this 3 lakhs. So reduce that also. Are you following, guys? Clear? And some, it's even though it's not consumed directly, it's consumed as a service, like the chalk piece and all. It's indirectly consumed for collecting fees. Are you following, guys? So you get 1 lakh 25 and that's it, guys. Sum is, I know it's a lengthy sum, but at least you got a picture of which, adjustment. There's no doubt in adjustment, which goes to income expenditure, which goes to balance sheet, what to do with each item. Basically in the answer, now when you look at the answer, you don't have a doubt about how each number came, correct? How to do is what that matters. Are you following, guys? Clear? Okay. This should be the, is there some, that's it? Okay. So with this, we will close even NPO. We are done, guys. Go home and revise. I know we just spent 3 hours for a topic which is 10 hours, but was it useful? Were you able to understand? Okay. That main takeaway will be that subscription, that ledger and salary account, and how to do the sums. Go home today, practice sum 9, sum 10, sum 11. Or 3 sum potu, make some mistake only, you will come back tomorrow with doubts. Okay. So with this, I will end the session. Then I will take up in the next, just 10 more minutes for presentation. Just hold on. With this done, guys, NPO is over. Thank you. Other topics, those who are watching a recording, you can check the link if you want. Link in the description. Yes, sir.